percent up. Tech stocks are back. Software stocks are back as well. Let's pull up futures if we can very quickly and look at what's happening there. Completely flat. So in the same sense of how the indices shut. No big divergence there. Treasury yields have eased after wholesale price data, that's PPI data, came in flat versus expectations of a slight rise. There was a 0.2% rise penciled in and came in exactly flat. So the 10-year was at 4.64%. Oil prices have actually eased as the US Energy Secretary Chris Wright has said that the flow of oil through the Strait of Hormuz is much higher than is publicly known. He's claimed 9 million barrels a day are flowing through the Strait of Hormuz, and makes the claim that the United States has the intelligence to know exactly how much oil is going through, unlike a lot of private agencies, because some of those ships are passing through covertly. Nevertheless, Brent cooled off a little bit, still in the 86 to 87 range, so just about 0.5% downtick there. Let me pull up Asia for you, and Kospi had opened positively once again, the Nikkei about 1% up, Hang Seng Shanghai looking a little down and out, but the Kospi 1.5%. So Kospi back in its mojo, maybe not with that ferocity, but definitely back. William Lee, Chief Economist, Global Economic Advisors, joining us this morning. William, great to speak with you. And I'm actually going to get a sense from you on what Chris Wright, the Energy Secretary, says. He makes the claim that all of the exports from the Gulf, including from the Strait of Hormuz, are about 15 million barrels per day. Earlier, it was about 20 million barrels. The sense that they're trying to give is that this whole fight is going to become irrelevant very soon from the perspective of the flow of oil.
Well, I think that the markets are telling you their answer, which is that the pricing on oil has never gone much above the high 90s and into the low 100s, and it's never gotten much lower than sort of the high 70s. So that range-bound pricing tells you that there really is not a shortage per se of the sort that we saw at the very beginning of the war. And I suspect that as the trend is a slight downward trajectory, we do see more crude coming through these straits than are publicly known, because most ships that are traveling through there are tearing off their transponders so as not to advertise the fact that they're traveling through this. So that's, everyone knows that already. And Secretary Wright is just telling us that the numbers may be much larger than we think. But the real situation, I think, that calls for attention is in the distillates, in jet fuel, in petroleum, diesel fuel, those sorts of things. It's the refining capacity and the ability to get crude to the refineries and from the refineries to where the end users are. That's really where the bottlenecks are. And I think certainly here in the United States, with the environmental rules shutting down a lot of refineries and a lot of the refining capacity in China, we really don't see, I think, a lot of movement on that score. And I think that's where the real bottlenecks are.
Morning. So therefore, I'm from where we're at. Good evening to you. The real question, though, is that there was a change in expectations with regard to inflation and what it would mean for monetary policy. And then you once again have the specter of inflation likely to creep up because of the various reasons, and crude heading back to $90. So therefore, you don't think so? I'm asking because it has had a bearing on commodities, specifically on gold.
Absolutely. And I think in the commodity world, you're absolutely right that the volatility is high and probably going to get higher. But in terms of inflation, as far as the Fed is concerned, I think everyone recognizes that most of the inflation is supply side inflation that is caused by these energy restrictions. The energy restrictions are easing. We see the last several data points. Inflation is coming down and coming down substantially. Core is at 2.5, right? 2.6. So and the more important indicator for the Fed is where expectations are going. The Fed would rightly tighten if they felt that inflation needed to be controlled because the energy prices are feeding through to inflation expectations. But the 5-year break-evens, the market pricing of these future medium-term inflation rates is at 2.25. And it's come down by about 0.5 percentage point over the last month and a half. So I think the markets are really pricing in a clear confidence that inflation is going back to the 2% target. And if you follow the trajectory of where these break-evens have been going, the markets are pricing a trajectory that kind of implies at the end of 27 and early 28. So I think the inflation hawks that are out there especially on the FOMC, are probably posturing for political reasons. And as far as the pundits are claiming, runaway inflation is concerned, I think they're just trying to make headlines, trying to get on your show.
William, good morning. Hiral on this side. My question to you is, the court in the US has now let Trump hold tariff exemptions for low-cost goods as well. What would this really mean?
Honestly, I don't know. Because when you talk about exemptions, I think they're getting away from market pricing, and I think that's where the danger is going to be. But on top of your question, maybe I could introduce one point that is not talked about enough. I think there's a growing systemic risk in the financial markets that you guys are not talking about, which I'd like to point out, and that's in the place of private credit. Private credit financing has grown from about 2% to about 10%. It's still a small number, but private credit is incredibly opaque. And the fact that so much of the AI trade is being financed by private credit starts to make me worry that we don't know where the vulnerabilities are. If you remember, LTCM started out in the same way. People said, oh, it's a small number. The mortgage crisis started out the same way. It's a small number. But the lack of transparency into these instruments, especially as Jensen Huang and many of the financial executives are proposing commoditizing or trading as a financial asset, compute power. Now, that's a whole new class of assets that's coming onto the marketplace. And I think that's something that you and your viewers should keep an eye on.
Said it. And let's see how that pans out. For now, at least, the earnings are keeping pace. Thanks so much for joining us, William, and pleasure speaking with you as always. All right, let's talk about what happened in trade yesterday. Flagging volatility is seeing equity indices trade in a pretty narrow range, and you've seen this over the course of the last 4 or 5 sessions, particularly for the benchmark Nifty 50 and indeed the Sensex. The VIX is currently at 11.42, and it's at the lowest level since the start of 2026. The benchmark Nifty 50 ended with cuts of about 40 points or 0.2%, and Sensex, very interestingly, on expiry day, on the weekly expiry day, gained as much as 1/3% during that cash window, ended in the green with gains of about 0.2% at 78,079. The Nifty 50 was weighed down by heavyweights, ICICI Bank, Reliance Industries, HDFC Bank. The benchmark traded in a very narrow 120-point range. The broader markets also ended marginally positive because of a comeback at the end of the session. The mid-cap index rising as much as 0.1%, the small-cap index ending with gains of 0.2%. Defense, realty, FMCG sectors led gains, and on the other end, you had metals and banks, primarily on account of the PSU banks coming off, that underperformed. The Nifty Bank, in fact, losing as much as 0.4%. A few key movers towards the end of the session moved on account of earnings. Among them were Page Industries, which lost ground, despite a bit of a pop when the numbers came through based on a little bit of commentary. But the concerns on volume growth going forward are what came to the fore, and the stock ended lower by as much as 5%. Solar Industries, on the other end, a lot of people say is an expensive stock, but based on the numbers that it posted, look at that kind of gain, 8.5%. And there are a couple of brokerage notes, or at least one today, that has a buy rating even at this point. And Astral, of course, through the day was quite the winner.
Yeah, I mean, a lot of stock-specific action is what we've seen. And I think once Kush comes in, we should talk to him about the kind of gyrations we saw in terms of Sensex on the call and the put, because that will be interesting. But overall, in today's session as well, a sluggish range-bound trade is what you're expecting to see. The bias is slightly negative as well, because the indices have continued to consolidate within that very tight range over the last couple of trading sessions. Now, what is interesting is the FIs. Their net position in the cash market yesterday, was positive in the cash market yesterday. However, they have continued to add short positions as well. Now, what is the impact? That's going to be interesting. What happens is this creates a heavy overhead resistance in terms of the markets. And every time the market tries to rally or bounce back in the green, these massive FI short positions act as a ceiling, capping the upside and pushing the index back down. And that's exactly what's happening on the back of the FIs, the way they've been behaving in the cash market and in the F&O market. Now, two counters I want to point out, HDFC Bank and ICICI Bank. here, HDFC Bank has become a deep discount value contra play versus the ICICI Bank, where it's becoming a compounding growth leader as well. Because if you talk about historic valuations, the gap between both of them has narrowed to its thinnest margin that you could have seen in a decade. HDFC Bank's market capitalization is now sitting at just 9% higher versus ICICI Bank. So you know what's happening. Over the last decade, ICICI Bank's market cap surged nearly six-fold, whereas HDFC Bank's valuation grew only two-fold. And if you have to look at the FI holdings, the holding in HDFC Bank has actually gone down to 41.82%. That's the FI holding in the June quarter versus a 48.8% in 2025. Whereas in ICICI Bank remained absolutely stable at around 33.8%. So we should be watching out for both these counters in trade. And very lastly, now taking cash into consideration, today is the technical deadline where major discount brokers will integrate the post-closing auction session indicative prices directly into their apps. So probably this will help mitigate the recent end-of-day market pricing distortions that we've been witnessing as well. So this is something that we will have to monitor.
That'll come as a huge relief.
Yes.
Because yesterday as well, you saw this volatility like you mentioned.
Yeah. And the thing is, all of the people who are using apps to trade, they're not really able to see exactly what's happening.
Yeah.
So that's where the distortion is. And because today is the last day, they will have to integrate it. Probably you might see some relief.
So
on that
I wonder,
front.
at the start of this entire exercise, it was being described as being in a dark room with your eyes blindfolded. Maybe now you will have a flashlight.
No, but I think then the question to be asked is, why was this not integrated before it all started off?
Question.
A lot of people are now using these apps to trade. So this deadline, that means you have put people on the back foot for all of those days. But hopefully things get sorted out soon. What are the factors that I'm looking at? So the Nifty is at a crucial support zone, isn't it? The index once again defended its 20-day exponential moving average. That's around the 24,360 mark. But momentum indicators continue to weaken, suggesting that the near-term trend remains cautious. 24,300 to 24,265 is the key support zone. A decisive break below this area could drag the Nifty towards 24,200 to 24,150, followed by the crucial psychological support at 24,000. On the upside, 24,450 to 24,500 is the immediate hurdle. A sustained move above 24,600 could improve the short-term setup. Until a clear breakout or breakdown occurs, analysts expect the index to remain range-bound with a marginally negative bias. For the Bank Nifty, index remains above its 20-day EMA, while the RSI, that's the relative strength index, and the MACD, that's the moving average convergence divergence. So these are all indicators which show a lack of strong directional momentum. Resistance levels 57,755, 57,815 and 57,910. Supports at 57,565, 57,505 and 57,410. I also want to quickly take you through what Amit Shah of BofA India is saying on his India strategy. When he's talking about Q1, I thought it's a good moment to look at it. You're pretty much, I think, in the last week of results season. He's saying the Nifty 97 market cap that he's been tracking has seen a 3% beat and a plus 13% year-on-year. Broad earnings strength with selective weakness. Metals delivered the strongest beat. There's been a plus 13% year-on-year earnings growth for the NSE 200. Margins remain under pressure as companies could not fully pass on the cost increase and faced supply chain disruptions. He expects a gradual recovery in coming quarters as these headwinds ease and sees relatively stable commodity prices, improving supply chains, and further price hikes being passed through. So if I were to see a takeaway from here, on the face of it, when we look at individual results, it looks like we've done very well, but in a consolidated fashion, we've done okay. Better than expected, but we still need to consolidate on this basis as far as earnings growth is concerned. Let me go across to Puneet, though, for the F&O setup.
Well, thank you for that. As you mentioned, all factors, all indicators, the RSI, the MACD, all that you look at clearly point out to some weakness, and the implied open also largely all of this week has been very, very minuscule, just in the double digits, largely, in and around that minus to plus 50 point range. And the Nifty, as we stand today, continues to be at 24,400 odd. Now, through this week, we've seen from starting off from 24,570 odd on Monday, largely been in this range for the last 5 days, and the indication also currently with the implied open amongst other factors shows you that we could end very well in this range. But when you also look at the Bank Nifty as well, here as well 57,700 odd is where we are currently at. That is a near-term support, not a very strong one. We continue to be in this range as well, and every now and then any particular impact has seen some correction, but the upward momentum yet to be watched out for what could be the trigger as well. For the cash markets, you've seen some buying come through, but the last couple of days has seen selling by foreign investors of a total of almost just 1,500 odd crores. It's not a very big number compared to the scale that they own, but still we haven't seen too much action here as well. Similarly, on the FNO side, on the longs, they continue to be in that 12 to 13% range itself. So most of the positions in the short side. You've also seen the put call ratio being very, very neutral in all of this week, just about 1 to 1.05 odd, very neutral positions. But you have seen another layer of change in this week on the FNO side. On the call side, you've seen 24,500, 24,800 now, seeing a very big candlestick. And if you see the levels on the bottom of your screen, we've yet again moved back from starting from 23,900. So you see that the 25,000 is off the screen now, because there's been a lot of open interest being built on the lower end and lower levels too. 24,000 on the puts, 24,800 on the calls continue to be the highest one of open interest, and hence expect to be in this range. Finally, for stock specific action, plenty of those that we've seen over the last 2.5 weeks. Ultratech yesterday was under pressure, but not too much change on the open interest side. We covered that story yesterday. BDL as well as Page were the other two counters that were buzzing. Page also had some numbers come through. Stock was down 4% yesterday. But in terms of the open interest losers and the final list of stocks, LIC continues to be on our radar, propped up yet again yesterday. Hero MotoCorp was also one where you've consistently seen some longs being unwinded after you reach this particular level, and similar for Dixon Tech as well. But overall, that's the stock specific action. We continue to look at broader markets and the fag end of the earnings reactions.
Okay, let's start with the stocks on my radar. I'm starting with Premier Explosives. It's a thumbs down for the numbers that they've seen. Revenue decline has been seen, led by displays in dispatches and execution. EBITDA has declined due to elevated raw material prices, and the commercial explosives revenue segment is the one which did okay, about 21% growth year on year. Defense and space service revenues declined 35.5% year on year. The order book now stands at about 1,400 odd crores, out of which 94% is defense. Execution momentum will improve in the coming quarters is what the management is saying. Let's take a look at the core numbers. Revenue is down 27.5% to 103 crores. EBITDA is down about 69%. So it's gone from 20.9 crores to 6.5 crores. EBITDA margins have more than halved, 14.7% to 6.3%, and net profit is down about 80% to 3.1 crores. Watch out for this stock. If you hold it, it sometimes turns into a very high frequency, high movement stock. It might have a rough start to the day. RCF is the other one. Now, this is a peculiar set of numbers, but after a lot of deliberation internally, we've given it a thumbs up. It's an inline quarter. There's a margin expansion. There's an EBITDA margin expansion because of lower material costs. Industrial chemical segment profit has surged about 300 crores versus 95 crores year on year. The fertilizer segment has remained loss-making at 150 crore loss. Strong industrial chemical performance has offset weakness in fertilizers. Now, if you look at the QOQ numbers, profits are impacted by a subsidy hit, which looks like it could get reversed. They've approved the issuance of secured and unsecured non-convertible debentures aggregating to about 1,100 crores as well. Let me just take you through the numbers. Revenue is up 6.4 crores, up 4% to 3,586 crores. EBITDA is up about 39%. Margins have improved from 4.7% to 6.1%, and net profit is up 35.1%. So overall, I would say a thumbs up on this. Brigade Enterprises also I think in line to a thumbs up. That's the kind of range you should look at it because of the way the company's accounting standards are and the way this sector is looked at. The revenues are down about 13% at 1,116 crores. EBITDA is up 11.7% to 360 crores. EBITDA margins at about 32% versus 25.3%, and net profits are up about 33% on this stock. But if you look at their pre-sales and some of those other indicators, the company seems to have done well.
Okay, interesting stocks. I want to start with Tata Motors. It's been a rough few quarters. This is no different. And the thing is that performance is unlikely to improve dramatically going forward. That's where the concern lies. In fact, JLR continues to underperform, and this is a large part of the business, and that's why it has a bearing on the whole. The volume for JLR was affected by multiple factors, including supply chain issues, but also on account of issues in the China market, and that China volume for JLR dropped as much as 25%. The management expects that issues will get worse before stabilizing, and that's where the kicker lies. JLR's overall volumes were down as much as 9% on year and 17% on quarter, but do remember that they have discontinued the sale of the internal combustion engine powered Jaguar vehicles, and that has had a bearing on the volumes overall. JLR's free cash flow position worsened significantly, and here too there's a problem because this is a business that was generating a significant amount of free cash flow. They've experienced a massive reversal from a positive cash generation in Q4. The cash outflow stood at nearly £1 billion versus £758 million a year ago. And the return on capital employed has also dropped to just about 0.5% in the first quarter compared with 1.2% in Q4 and 16+% a year ago. So several issues there. The revenue increasing was as much as 9% on a consolidated basis, primarily on account of the India business doing pretty well actually. The EBITDA is down as much as 17%, and the margins have contracted to 6.6% compared with 8.7% for JLR. The revenue was down as much as 10% to £6 billion, and the margins came in for EBITDA at 8.1%. The EBIT margin has actually contracted to 2.8%. The volumes, of course, as I mentioned, impacted by supply constraints. Onto a good set of numbers, and this is LG Electronics. And I wonder what fundamental analysts will have to say, particularly Parag Bhai. I think he does like the stock, so I'd be curious to find out. The sales growth is driven by higher demand in the home entertainment vertical, and that division saw revenues rise over 22% on year. This is where they sell TVs, etc. The operating leverage and better product mix has aided margins in this division, and the home entertainment division margins have expanded as much as 340 basis points on year and 560 basis points on quarter as well. The home appliances and air solutions revenue has risen 14%. This accounts for a larger share of the overall pie, and margins were flat on year and they de-grew on quarter. The company says that the outlook for Q2 as well as FY27 remains robust, even on the pricing front. So that's looked at as positive. So good set of numbers for LG. You can take a look at some of those numbers. The net profit up as much as 27% to 653 crore rupees. There is a note that I've picked, Morgan Stanley on LG Electronics. They say it's a good beat, double-digit growth across every category. Televisions, washing machines led alongside strong summer demand in air conditioners and refrigerators. They're well positioned for the festive season ahead, and that includes, of course, Onam, Durga Puja and Diwali. Excited that festive season is starting again. And finally, LG Equipments. We've spoken a lot about players in this space, auto ancillaries plus now. Strong revenue and PAT growth. The bottom line is aided by healthy margin expansion as well, and the PAT adjusted for an exceptional item actually rose as much as 29%. The company has maintained its outlook for Q2, said it is on track to achieve its budgeted performance. Some of those numbers look particularly good. Top line growth of over 22%, EBITDA growth of close to 28%, margins expanded to close to 14.5%, 14.6% to be precise, and the net profit adjusted for exceptional items up close to 30%.
I mean, both of these, LG and LG,
Yeah.
right? Both of them.
Do you see the challenge?
Yes. Both of them very interesting numbers. In fact, staying with the consumption space, I was happy to see the way Honasa has also come back, right? I mean, interesting set of numbers.
But Honasa has been coming back for the last few quarters and roaring back.
So exactly. So on year, if you're seeing
Yeah,
that
yeah.
kind of growth that's coming in, because initially people thought probably it might not deliver, but probably it's just firing.
Something's happened in the last year. It's been a turnaround
story. If you talk about the profits, highest ever quarterly profits is what the company has reported. So an exceptionally strong quarter. Now, the offline volume growth and stabilizing margins, these two are the key drivers when you talk about Honasa. Your consolidated net profit has also more than doubled. Revenues are up, 27%, EBITDA up 140%. Margins at 14.6% versus a 7.7, doubled there. And your net profit at 90 crores versus a 41 odd crores. So a thumbs up coming on that one. The second one is Welspun Living. Again, a thumbs up. Robust operational performance is what they've reported. This is the strongest revenue in 7 quarters when you talk about Welspun Living. And the growth has been driven by explosive textile exports, substantial turnaround in the flooring segment as well. And when you're talking about Welspun Living as well and other textile players, I think what we've seen this quarter is the baggage that they had when it came to tariffs with regards to where exports go. I think that is what they have left behind now. Revenues have seen a growth of 23%, EBITDA is up 42%, margins have improved as well, and nearly a double, in fact more than a double, 83% growth in terms of profitability. The other one I want to talk about is Technocraft Industries. Again, a thumbs up here. Now, this is an aggressive structural pivot that they've taken, which is away from the legacy drag segments towards high margin engineering operations. And that's the reason why you've seen this kind of a turnaround, which has come in for this one. There has been rationalization of loss-making units as well. The successful public scaling of their primary infrastructure and EPC arm is what has worked. Revenues are up 27%, EBITDA is up around 58-59%, margins 22.1% versus a 17.7%, and you talk about the profit, 70% growth coming in there. So a thumbs up on this one as well. So I think again today probably it'll be a day where you will see a lot of stock specific action that will continue.
Yeah, completely. You know, when you were talking about LG and the festive season, I'm just wondering, you have your shopping list all stacked up?
Oh, I'm horrible at these things. I need interventions because
You buy too much.
I buy the one weakness that I have is tech, and I keep buying tech even if I don't need it.
We're talking about consumer durable, not so much tech.
Yeah, I mean, okay, so televisions, laptops,
Headphones,
yes. I spent a lot of money on headphones. Good headphones though.
Yeah.
Okay, now you know. I just wanted to highlight one story which I thought was important to talk about a bit before we head into that break. So White House has flagged India as part of what they're calling it, a China-led tariff invasion network. So they put out a report on transshipment and have flagged India among 40 plus countries in a global shadow transshipment network, which they claim are evading US tariffs. India has been categorized in this as a tier 1 diversified scale leader alongside EU, Canada, Mexico, Japan and South Korea. The US report notes Indian transshipment risk is embedded within broad legitimate trade flows to American markets. So they have specifically talked about a Pune, Gujarat, Chennai belt for routing pumps and compressors. They have flagged India, Mexico and Vietnam as top 3 hubs from China in 2025 with estimated $67 billion transshipped. And they say China uses India for minor processing, exploiting tariff delta between high China duties and low Indian duties. So the US Customs will now deploy AI-driven crackdown to track these global supply chains. The US has also hiked tariffs on drones and parts of drones. So you might have some impact on that list of defense stocks and drone suppliers as well. So watch out for all of that. We'll take a very short break. We're coming back with your top trading ideas for the morning. Stay tuned.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through.
Welcome back. You're watching India Market Open. Let's pull up the implied for you before we get into our conversations this morning. A 44-point downtick, but nothing too alarming really to worry about as far as markets are concerned. It's been a quiet consolidation kind of a situation for the last several days. Kush Bora, Parag Thakkar joining in this morning. Very good morning to both of you. And, Kush, I actually want to start with the kind of volatility we saw in close yesterday. Let's kick off there.
First up, a very good morning. A very happy Independence Day to all of us, to all the viewers.
In advance.
Of course, in advance. We'll not be seeing you tomorrow. So, what a wonderful way to kickstart the festivities, right? With the Independence Day, the Festival of Independence, right? So, very excited, very pumped for tomorrow and for the rest of the festive season. देखो, जो cash वाला effect है, we've discussed it a couple of times. More importantly, what you should and what you should not do is something that we have discussed right on day 1, day 2. Let me just throw in some very interesting numbers, right? The 78,000 call option yesterday for Sensex weekly expiry tha, at 315 was at 2 rupees. It finally settled at 79.80 to round it off. Now, I'm very happy because, this helps the last, the retail fellow, the individual, because somebody bought it at 2 rupees and then got to sell it at 80. But somebody sold it at 2 and then got squared off at 80. And in a normal course of market movement, you could understand. But this happening in, what Alex has rightly called the black box, right? It just doesn't fit well. I think that's where all the discussions, at least online, are. So while this settles, and we've heard how the retail participation might just increase because a lot of discount brokers are now going to give you the reference rate and all of that. I'm not sure if that's going to help too much, very honestly. But up until that happens, what I've said before, I'll say that again. Don't try to play the hero zero trade. Sometime it works, sometime it does not. But one thing that you should not do for sure is to write options and let it go under expiry till this settles down. So close off your positions, not even at 3:15, 3:10, well before at 3 o'clock. So the volatility on the expiry, once 3:15, the rates shut, is what is causing, the heartburn, at least for a lot of sellers. So just be a little mindful. I know the buyers are feeling happy, but, it could go the other way around as well.
It's tricky. You have to be careful, and hopefully these things sort themselves out. Let's talk about the indices this morning.
Too much of anything is bad, right? We thought कि नहीं VIX थोड़ा नीचे आएगा तो अच्छा है, थोड़ा नीचे आएगा तो अच्छा है. Remember, we've had this discussion. बहुत ज़्यादा VIX नीचे आएगा तो ये होगा.
No more.
12 के नीचे चल रहा है. That if you would have taken an off for the whole of the week, ठीक है, तो भी कोई फर्क नहीं पड़ता. Yeah, exactly.
Yeah, I mean, don't make statements that you can't act on, na?
Yeah, of course. I mean, we can't take that week off. I understand. But no, I'm saying
if you work the whole week.
No. Bhavna Pochali types, वैसा. So, see, we've had a lower low formation for the last 7-8 sessions on the index, right? And very, very range bound, very narrow moves. I will take heart from a couple of points from, like a silver lining perspective, which is one, the 20-day moving average has been respected. The index has rebounded from there a couple of times. Also, we've seen a lower high, lower low formations. Yesterday, the lower low wasn't there. So Wednesday's low was held. This is more of a hope trade, and we've seen it play out, which is Friday effect, right? If anyone's been short throughout the week, they don't want to carry this position forward. They might come in and cover these positions. So you might have an uptick on the Nifty, but like I said, this is more of a hope trade. Right now, you've got 24,400, 24,500, these call options that have a significant call base. So you might see some cap on the upside. So be a little cautious right now. Once the rally starts, if and when, I mean, we'll be here to tell you about it. But right now, it just seems like consolidation.
On picks this morning?
Yeah, going with three of them, all three long. And by the way, I have a lot of weekly updates, so I'll run through them also very quickly. Ajanta Pharma, this makes the list again because this was a weekly pick some time back. So 37.30, 38.60, these are your targets. 35.20 is where you keep your stop loss. Ram Ratan Wires for targets of 491 and 505, and 462 is your stop loss. Artemis Med, by the way, this is a stock that we discussed yesterday. It hit the target one, then again, with market just came down. So you might want to initiate again or continue holding on for targets of 325, 336 and a stop loss at 307. The weekly updates, by the way, I'm sure the viewers already know because we got a lot of calls yesterday on Ask Profit. Bellrise, मंडे को दिया था 248 के पास, 258, 268 के दोनों टारगेट्स हिट हुए हैं. Now it's cooling off. So if you have, you can book profits, but if not, because it's close to target one, you can continue to hold. Lalpath Labs hit the first target of 1985, and two calls which aren't active right now but have done well even after. Look at Marksans Pharma and look at Gujarat Fluorochem. Both of these doing well. So if you have, you can continue to hold on to some of these with trailing stop losses at or just above your buying prices.
Okay, so, interesting names coming in there. Parag Bhai, I want to talk to you about Tata Motors PV. What did you make of the numbers? Because top line, okay, but look at the margins, look at the profitability, and there is that JLR baggage that continues.
Yes. So I have always stayed away from this company. I always like Tata Motors Limited, which is a CV thing. It's a clean business, high ROC business, and where they are doing well, there's good pricing power in that business. This is a business which I will avoid because there has been enough discussions within our team also whether we should buy this stock, but the JLR volatility is just too much for me to buy the stock.
So it's actually a tragic a little bit because about 5 years back when they were firing on all cylinders, they were talking about a significant free cash flow generation. They were operating at 16 plus EBITDA margins. The ROCs were through the roof. All of those things were working fantastically, and then they've gotten hit quarter after quarter after quarter with stuff.
See, China is a big problem for them, in my view. It's a structural issue, right? It's just that they are not able to crack that market in a good way. And it's a business which requires 26,000 crore of capex without any productivity increase. That itself, keeps me away from that stock.
And I think after that cyber attack that happened last year,
they haven't recovered.
I think that from there it's just been a downward journey.
So that really is the point. The quarter that the cyber attack came in, then there was a bit of a grace period, So it hasn't really recovered from that.
It hasn't, and multiple issues on multiple fronts. So supply chain issues in one market, the fact that Jaguar has stopped producing the ICE vehicles. They're in the process of launching electric vehicles, so you don't know what the acceptability of that is going to be. On the other hand, you have Chery Automotive in China where certain norms are changed, and so the demand for those products are lower. The 25% drop in volume is there. It's all a problem, one after the other.
Perfect storm. It's a perfect setup though for Honasa, I must say. Strong Q1 from the company as a surge in volumes aids the quarter. Parth is joining in with more details.
Very spectacular set of numbers from Honasa have been reported by the company, and they have achieved growth across all of their channels. Volume growth stood at 31%, while like-to-like revenue growth has came in at 32% as well. Mamaearth, which is their biggest division, saw double-digit growth as well, and the company has also entered into the fine fragrances market as well. Now, if you look at the numbers, then revenue saw a growth of 27% to reach over 750 crores. EBITDA EBITDA has more than doubled to 110 crores. EBITDA margin has grown by over 700 basis points to reach 14.6%, while net profit has almost 2.5 times, jumped almost 2.5 times to reach 90 crores as well. Now, coming to the future outlook, the company is expecting more than 20% revenue growth in FY27. For Mamaearth, they are expecting low double-digit growth, and for the Derma company, they are expecting more than 20% growth coming forward. Management is targeting EBITDA margins of 15% over the next 5 years, so around 100 to 150 basis points EBITDA margin increase every year. And also in the FY26 to FY29 period, they are expecting a 17% sales CAGR going forward. So really strong numbers and very ambitious guidance by Honasa Consumer from this Q1.
Okay, so just a quick word, Parag bhai, very good morning to you.
Good morning.
Very quick word on Honasa first before we get to what else you've been spotting in this result season.
No, Honasa is fantastic numbers again. Last quarter was also superb, 77 crore EBITDA. This quarter is 110 crore EBITDA, and market cap is just below 16,000 crores, 15,800 or something. So I would say that fantastic numbers. And this is one lesson which I would like to say here, that if you remember, if the viewers remember, we were on the same show, and at 295 promoters bought worth 50 crore of shares in Honasa.
Yes.
And today, what is the stock price? 480, and in all probability it will go up. After such a fantastic result. So in a businesses where things are predictable, generally promoter buying gives you a very good lead indicator of in the cyclical businesses, even promoters can go wrong.
No, but so predictability was not a given in Honasa. If you see what was happening to Honasa a year and a half ago, 2 years ago.
Yeah, but in their, for example, in their brands like Derma and Mama's Earth and all, they could see that traction, right? And so they bought well ahead of the inflection point.
But would you buy it right now?
At this price, I will not buy, because it is just that it has been stretched too much.
Did you miss the bus on Honasa?
Yeah. Missed.
But that's a very important point. It's a larger issue that you're raising, which is promoter buying does not always necessarily indicate that you should jump into a stock.
Yeah, I mean, in cyclical businesses, even promoters can go wrong. That's my limited point. In a business,
I think he's making the reverse point. That if it's a stable business, watch promoter buying as 100%. An indication of maybe that there's something going right with this company.
Yes.
On charts, Honasa, is there an upside, Kush?
In all probability at open that will be taken out. So 485 is a stiff resistance, and the next technical target is actually 520. I'll not be surprised if it opens very close to that, right? So after the event, you're better off booking profits and then maybe consider buying at declines again.
Okay, so that's with regards to Honasa. Let's pull up a Max Healthcare also, which reported numbers. Now you have a Macquarie which has come out with their note. They've maintained their underperform. They have a target price of 825. Now, what they've said is operationally inline quarter, but the profit has missed estimates, and this is only on the back of higher than expected finance cost. The EBITDA per bed has also declined on a sequential basis, owing to the drag from the new beds that have been added. The question is, will this stock actually see any correction in trade? Kush, I'll take this one first with you. Are you seeing any downward pressure?
For sure. The stock has seen selling pressure. It's given up, some of the moving averages, and it's down on the back of volumes. So that is a bit of a concern. I'll not be surprised to see the stock head towards 950 on an immediate basis, perhaps even 890 kind of levels. But maybe someday, we can have a discussion fundamentally about what's happening with hospital stocks. They were supposed to do well, but all of them are starting to sort of give way. I'm not sure. So I'm watching the space closely, but there is weakness creeping in, at least on price levels.
Fundamentally, fundamentally earnings have been pretty good in terms of hospital names,
right? The sentiment
right?
is shifted.
Correct.
Because of the room rent capping, or the conversation at least about room rent capping.
Okay. I did speak to a couple of investors, and they said that, buying out and growing is no longer an option because everyone's realized that, acha business hai, acha karega, so no one wants to sell even the smaller hospitals. So the organic growth is something that is on the table, and that will obviously require capex and time. So
that's a good point.
So that's why it's not doing so well.
So all of the large hospitals are building out massively with regard to
interesting.
What a quick view on some of the other results before we get to our special presentations. You talked about LG Equipments, LG India. some of them that are standing out for you?
Yeah, absolutely. Today is LG day in my view. LG or LG, the way you want to pronounce it. But both have reported excellent numbers. LG Electronics also, PAT rising by 25%. LG Equipment PAT rising by 29%. Excellent numbers, excellent numbers. And I have liked both of these companies. Both of these companies I own in the portfolio. So this is not a miss.
It's not a miss. Okay. But electronics specifically at this level, it's not like it's. Can we pull up the year-to-date chart?
It has not done anything actually.
Yeah, exactly. So can we pull up the year-to-date chart for LG Electronics? This is the intraday from yesterday. There you go. It's just about 3.7% higher. It's not too long back that it was listed. Kush is shaking his head. Obviously, there's no momentum.
They're post-listing. If you count from listing, they've done okay.
Yeah.
But
after IPO price, it opened only gap up and then it has stayed there.
Then it has stayed there.
Because after those, some quarters were disappointing. This is the first quarter after a listing, which is actually good.
And from April 26 onwards is where you've seen that pick up in terms of LG by what 19-20% is the kind of returns.
From the low point, na?
Yes, from the low point.
Low point.
Okay.
It's a good point.
Time to get you all the buzz from D Street. So Amit Sarkar joining in this morning on what he's heard on the street. What's the chatter you're picking up, Samit?
Multiple stocks that remain in focus. Firstly, it's on defense side. Bharat Electronics, Bharat Dynamics and Mazgaon Dock is something that is on the dealers' radar. There's hearing some buzz of some defense orders coming through very soon, and hence these stocks have been gaining in trade yesterday despite the fact that the market was weak in trade. For Kalyan Jewellers, there are buy flows on the PMS desk. Dealers expect some positive broking report that could come in from an MNC firm, and hence the stock was in red yesterday but spiked up and was gaining around 3% in trade. For BHL, there are some sell flows on the hedge fund desk. Dealers indicate a potential OFS that could come in this counter. When it comes to Biocon and Laurus Labs, there were some sell flows on the hedge funds. What dealers told me yesterday is that Biocon was expected to be part of the MSCI list, but that did not go through, and hence some positioning that was built into was getting sold off. And when it comes to Laurus Labs, despite the fact that it was supposed to receive the highest amount of inflows, it was pretty much known into the market, and again some hedge funds were going light on their positions. For Tilak Nagar Industries, Sarda Energy and Aarti Industries, strong buy flows were seen in trade yesterday. Dealers were indicating that a large prominent HNI has been accumulating into all these three counters in trade yesterday. And lastly, when it comes to Ashok Leyland, there were buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter. Delivery volumes are as well seen on the higher side.
Okay. Thank you for that, Somit. All right, as you know, our Independence Day special programming is on. That's the reason why we're all sort of celebrating in our little way in the studio. But we have an exciting story for you. Ahead of Independence Day, we're taking a look at companies that have stood the test of time. Many companies listed before India's independence, including Tata Steel, Tata Power, Wipro, remain listed on exchanges today, showcasing decades of business resilience and wealth creation. I won't say any more. Let me go across to Sharad for that report.
Well, it's a very interesting take, and not only that, you can ask your grandparents and even your parents. You might be having physical share certificates of these companies. Who knows, you might be a millionaire if you check your cupboard. But exactly. So let's look at the companies which are listed before India's independence and which are still there in the market. And remember, the names are Walchand People First. Interesting name. It was listed in the year 1919. We have Tata Power, which is also there, which most of you know. We have Alembic, Kesar Enterprises, and look at the annualized returns. Not so much, but the history says something else. Let's look at the other group of companies also, what's there. We have Bombay Dyeing ACC, which you all know. Tata Steel, earlier it was called Tisco. Swan Energy, interestingly, is there. It was listed in the year 1939. A lot of stories here. Also, let's look at the other group of companies. This includes Mukund Ravalgaon Sugar, very interesting name, and the share certificate is almost green in color. Peninsula Land and Walchand Nagar Industries, you must have heard about it, especially with the nuclear theme on. So these are the important stocks which you would be focusing on, but there are some details about it for the uninitiated, what these companies are, what they do. So we'd like to talk a little bit about these companies as well. For Walchand People First and Tata Power, we see generally largely these companies are having good names in this segment. Now, of course, I have discussed most of these companies. And also interestingly, Wipro makes it to the list. And look at the year in which Wipro was listed, 1947. That's and just ahead of Independence Day. And we also have Sri Digvijay Cement, a small cap name. Now these companies are listed on BSE and Asia's oldest stock exchange, and BSE having 4,200 listed companies. From this list, we have actually taken it out. But let's try to understand what these companies are. This deals in consulting and training services. Also, let's look at the second company. After Walchand People First, we have Tata Power. There's a business of generation of transmission and distribution, which we all know. Also, Alembic, of course, in pharma. And let's move ahead with the other stocks also, which would be in focus apart from Alembic. And this includes Kesar Enterprises, a very small micro cap. They are into sugar. And real estate, we have Bombay Dyeing. It's like a holding company technically right now. And also looking at the other stocks also, we'll have ACC. Of course, we know about the cement part about it. And going ahead, we have Tata Steel, steel manufacturer, or the OG steel manufacturer of India. Swan Energy, which we had mentioned about, a lot of businesses they have. And also, apart from this, we have Mukund. They manufacture special alloy steel billets, bars, rods. For the uninitiated, this is a stock which nobody knows about, but it's owned by Reliance. They manufacture confectionery products as of now, and it's listed. Also, Peninsula Land, they're into real estate development, very old developer. And if looking at the other companies, we have Walchand Nagar Industries, which we spoke about. There's an angle of nuclear element, and Andhra Cements as well. And the name which was, of course, the Sri Vijay and Supreme Industries. So these are the key stocks which should be in your radar for the analysis. But take things with a pinch of salt. These companies, some of them exist, some of them barely exist.
Now, I think it's more sentimental than anything else, and it's a wonderful look at the history of the listed
and
companies
actually, you
in
can
stock
see
market.
it's like a share certificate there, the first one. So if the people don't know about it, you can ask your grandparents about it. Maybe they'll be having it.
And if you have any of these shares, if you find any documents like this, make sure you're making money out of it.
Yeah, or frame it at the very least.
At the
If
very
that
least.
company does
It
not
does
exist,
not exist.
which is a possibility. Thank you for that, Sharad. But you know, I think we should also look at it in a different way. We're not saying for close to 80 years or 76 years or from that sense. But if we were to pick companies today, Parag Bhai, that are built to last. You know, and it's a tricky one today because you really don't know where your tech cycles, etc., are going. You don't know what AI is going to do. It's maybe people at Independence Time also felt like that. To be fair, what would be some companies, any number that you think are built to last? Is there even one that you can name?
No, so I would say that, see, for example, some of this, I always keep saying this, and it is unfortunate as chronic pharma companies will continue to be there. Some FMCG companies will continue to be there. Some cap good companies will continue to be there. So these are the sectors where I feel there's a limited disruption. But one another emotional point which I would like to add on Independence Day, because see what a government and good management of a company can do, and what wonders can happen. Because it is Independence Day, I'm saying, if you see FY 17, 18, 19, SBI's profit, in 1 year they suffered loss also. Okay, and now in this quarter they 25,000 crore PAT. So they are heading towards 95,000 crore kind of a PAT number. So what a magic if there is a promoter, in this case it is government, and of course the management of that company which has delivered such a fantastic performance in just from 2018 to 2026. So imagine, on why I'm saying this on Independence Day, because it is related to what government intentions can do.
Yeah. So whether it's government companies that you're seeing as built to last, maybe, or are they, private sector companies? Look at it from that angle. So everyone's looking at quick returns.
I'm saying that management intention and management hunger also, in fact, to grow in a right way. That drives most of the things. And if you buy those kind of companies during bad times, like this, there's so much of volatility, 2.5 years of no returns in market. If you buy those kind of companies during such times, then I think they are built to last also, and they can grow your wealth also.
So SBI is one you've named. Any others? Two more names?
So I would say that it doesn't come on top of my mind. But I would say that, for example, in mid-caps, Torrent Pharma continues to be one. But the point is that stock has run up too much.
I threw that on Parag. I threw that as a surprise on Parag Bhai, which was unfair. So what I will do is we'll take a story. We'll give you some time. we have enough time, and you and Kush can think about what your build to last stocks are. But let's talk about Amber. Amber Enterprises reported its Q1 results with its profit dragged down by a one-time loss. Puneet helping to decode what that set of numbers look like. Puneet.
Well, thank you for that. It's definitely a company that's getting to that build to last stage because, has been a stellar outperformer since listing way back in 2017-18. But when you look at the numbers now, there was a one-off, but largely a very good set of numbers from the company. Revenue up almost 12.5%. EBITDA margins have come in at almost 8% versus 7.4%, which is higher than the estimates that we were working with because there was that raw material price impact that was visible in this quarter. Still maintain that 8% margins. Net profit is down 78%, but there's a 123 crore one-time impact, and that's led by the acquisition essentially of Ascent Circuit. So they had mentioned about acquiring the company. They had put an exchange filing this quarter. That impact of 123 crores. Now we'll of course get to the management's conference call today, which is scheduled at 9:30 to get more details of this one-time impact. But overall, on a segmental basis, the consumer business is up 8%, which is slightly more in line with the industry. But electronics at 29% continues to be the bellwether of growth in the PCB side, especially. On the margins, though, you've seen some impact on the railway side of the business on the EBITDA front, but largely continuing to be decent for both consumer as well as on the electronics side as well. You see the margin gap at 10.9 versus 6.4 for the electronics business. So some more feedback on this will be something to watch. Also to watch will be how the Oppo transaction is shaping up. They announced it in this quarter. Mobile manufacturing is something that the company is getting into. So that will be the other factor. But overall, when you look at the 5-year return and since listing, it has been a decent performer, and a new vertical now getting added in will be very interesting for shareholders.
Okay. So Amber Enterprises, they're in focus. A few other decent set of numbers that have come in, and Welspun Living is definitely one of them. And this was interesting because it would have been a time that you're looking at, were there any export hits? You already had the US tariff problem in the first half of the calendar year. But they've come out
yes.
looking
so Welspun,
very good.
Indocount, I think both companies have reported good numbers. Even LG Equipment is a big exporter to US, and so all these are tariff-affected companies, and which have come out with very strong numbers.
So what is the takeaway there? That despite all the bluster and all the talk, actual impact on exports on tariffs have eased, or is this what we're seeing after that 10% deal was struck?
From 50 to, it came down to from 50% to say 15, 20% depending upon products. So this was the first quarter of that relief, right? That the tariff got reduced. And that is why all these companies, I'm assuming, we'll have to listen to their calls, but I'm assuming that these companies are reporting very strong numbers. And Welspun and Indocount good numbers show you that India has still not lost market share. And
in textile exports.
Yeah.
So the other point to consider is that when the tariffs came back, instead of comparing it to the pre-tariffs era, you need to compare it to where you are with your other competitors.
Correct.
And there India seems to have done okay.
Yes, well, absolutely. And good companies might have tightened their operational costs also because there was no visibility that this 50% tariff will go away immediately, right? So they must have tightened their cost structure, and so they must have become more leaner, adaptable to the new realities. So I think these companies will even more stronger in future.
Welspun Living is a buy?
Yeah, I feel so. Yeah, I'm not holding it right now, but yeah, Welspun, Indocount, both results I liked.
Okay, what about Welspun on the charts, Kush?
It's run up quite a bit. There is consolidation. So while the primary trend remains intact, because of lack of momentum, I would say you might want to just wait up. I'd be comfortable buying close to 145 or thereabouts.
Parag bhai, did you see IRCTC?
No, I have not seen the numbers. Sorry.
All right. Do you want to comment on? It's not done too much in the recent past, so therefore it's not something that you would trade, right?
You're being, kind when you say that. It's actually done a lot of damage, in the recent past. If you see, it's fallen from about 1,200, 1,100 odd levels. Yeah. So again, barely any signs of a technical reversal. Very early ones, but because it's not in flavor right now, I would give it a miss.
Again, so in the paint space, and I know, Parag bhai, that you track paints closely,
Yeah.
Indigo Paints came through and the margins have expanded 250 basis points, I think in line with what a lot of people in the
Yes,
space have
yes.
reported. What do you think about it?
So yeah, in my view, what I have understood from Asian Paints earning call plus Grasim's earning call is that in Q2 there might be a dip in margins for paint companies, because in Q1 they had a low price inventory, they took price hikes. So both actually, and plus the dealers stocked up the material because they were expecting another price hike.
Interesting.
So now that part is over. So I feel that Q2 will be softer for paint companies.
So to that end, for quite a few of these manufacturing companies, some of which will have had inventory gains in the first quarter and which will lose out in the second quarter, would it be better as an analyst or an investor in these stocks to look at full first half versus first
100%,
half? And so therefore any sentimental issue that causes a stock to drop dramatically becomes a buying opportunity.
Yeah, that way it is right. If it falls, there is a buying opportunity. But people get excited after that Q1 result,
Yes.
but actually, it will only lead to a slight disappointment because Q2 will be softer.
Okay, all right. So don't lose heart if you missed an opportunity to buy a stock that ended at upper circuit on the day of its results. You might just get an opportunity after the second quarter numbers. Sharad is here to tell you about a list of other stocks that could buzz in trade on account of, earnings and everything else. Sharad?
Alex, largely the first stock would be Tata Power. Interestingly, DERC, which is nothing but Delhi's capital regulator, has actually allowed increase in charges for the discoms to charge. Especially there is an additional fuel and power purchase adjustment surcharge which will be beneficial for them, especially if you look at Tata Power Delhi Distribution, which is an arm of Tata Power. So this becomes sentimentally positive for the stock. Also CIMEC, this is the trend which we have captured in the oil and gas space. The 361 Pipe Fund has bought 2 lakh shares. Some institutional activity is happening on these stocks, but remember, stocks such as CIMEC and even Deep Industries would be in focus as the industry is expecting charter rates hike from ONGC, and this becomes an important point to talk about. Idea Forge, on the other hand, if you look at it, our third stock, US has announced imposition of tariffs on drone imports, and company has already a JV with a US based firm called First Bridge. Of course, this partnership is on UAV, but sentimentally this is negative. And the last stock which should be on your radar is Piramal Pharma, where a block deal likely of almost 950 crore rupees, where Carlyle is expected to be the seller. It will happen in the earlier opening session. So these are the 4 stocks which you should be there in your focus list.
Okay, Amit Goel, thank you so much, Sharad, for that. Amit Goel, CMT and partner and co-founder Blue Oak Wealth, joining us this morning. Amit, as always, thanks so much for taking the time. I love the outfit, and
it's matching yours.
It is, in fact,
that's why you love it.
Which is not the reason I love it. Looking very dapper, Amit, and happy Independence Day in advance to you and everybody in your team. What is the sense at the start today? And we've started, the first ticks are in. What is the sense for the benchmark, and what stocks are you liking?
Hi, good morning, Alex, and nice to be here. Wishing everybody at the studio, the team at NDTV, and the viewers a very happy 80th Independence Day. And it takes one to recognize the other, looking dapper as always. Now coming to the markets, I wish the markets were as dapper as you are looking. It has been in a sideways trajectory for most part of this quarter. For the last quarter and since April, and the high that we made on the first day of cash, which is 24,774. This is the spot Nifty. That seems to has become a very strong resistance. And in fact, last time when I had come on the channel, my sense was that this week would be a little weaker, and there could be some bit of profit booking. However, the good sense that I'm getting here is that at least the moving average is kind of acting as a support, and 24,200, 24,400 should be a decent enough entry points for positional longs, with the immediate resistance being 24,800 levels.
Any stock picks this morning, Amit? Since all the compliments have already been passed on by Alex, I will only back them. Very good morning to you. What stock picks today?
Yeah, I'm liking the momentum that is building up in the defense stocks, and because of which I have chosen Paras. It has been on a tearaway rally for the last couple of months, and after some bit of consolidation at the top, is now trying to show a little bit of more momentum gathering steam here. So keeping a stop loss below the moving average at around 1236, one could enter into this stock if it opens around yesterday's close for targets of 1500 and above.
It's true that the boys have gotten a lot of compliments today, but it's just because you don't state the obvious. There's obviously just one person who can be called the prettiest person on this table.
Oh dear.
There you go.
Alex.
There you go.
Thank you so much. The screen's not looking too bad as well. Small downtick perhaps that you'll see, or midway of the pre-open session. Welspun Living, we've been talking about it. Cracker set of numbers, 7.5% up right now. Honasa, we've been talking about it. Max Financial also did well. Page Industries. Now, this is interesting to me because optically the numbers don't look that good. The stock is up about 3%, and in a second we'll get you a note which tells you why, that it's not as bad as it looks. Brainbees also, on the face of it, looked a little tough, but some segments of their business did okay. I want to talk about Page Industries just for a second, and I'm going to take the Morgan Stanley view, actually. They've maintained an overweight with a target price of 42636. They're saying Q1 miss. Optically soft quarter, but not as bad. Reported performance was affected by logistics and manpower disruptions. Impact on delivery of 3 days of billings and ARS led seasonally normalization. Management reiterated double-digit volume growth aspiration for FY27, above average volume growth in the next 3 quarters as demand remains strong. With a positive management commentary, expect some reversal of the recent underperformance. That's possibly why you're seeing an uptick on Page Industries, despite the numbers optically not looking that great. But let me go across to Sharad. He has a brokerage call on Honasa, which is also seeming to be pretty good this morning. Sharad.
Well, Tamanna, there's an interesting upgrade coming in when it comes to Honasa Consumer. Jefferies has maintained buy, but the target price has gone up from 565 to 650. So there's a significant 15 to 20% up move in the target price. Now the numbers are showing a good beat after beat. That's what the broking house has stated. A strong momentum is continuing in Honasa, especially on both revenue and margins. That's why the bullishness is coming in. Other products also continuing to grow at a breathtaking pace. That's the word which has been used by the Jefferies. Also offline scale up, quick commerce share gains and new wellness and fragrance bets which are coming in from the company is supporting management's growth as well as the margin story, and hence the bullishness coming in the counter.
Honasa is seeing a bullishness. I want to get a quick view on Jubilant as well. So here's what Morgan Stanley is saying before I get Parag Thakkar, Amit and Kush on Jubilant. They've maintained an equal weight with target price of 439 rupees. They're saying Q1 is broadly in line, improving the outlook. Q2 has started strong and management sees like for like improving to 5 to 7%. Management reiterated 200 basis point EBITDA margin guidance, but sounded cautious on inflation for Q2. They like disclosures on Popeyes. Overall management sounds optimistic on demand sentiment and gaining market share. Domino's gained 80 basis point year-on-year delivery market share as well. So Jubilant is flat to positive. Is it a stock that you've seen and have any interest in? And so Page Industries. I want to get a view on Page as well.
Yeah, so interestingly, QSR space is suddenly coming out of good results. So for example, Restaurant Brand Asia was excellent result. In fact, stock has rallied from 68 to 100 rupees. Jubilant Food also like-for-like sales this quarter was decent, and they are guiding for even better. Plus that Popeyes brand is scaling up well. So I would say that there's a good probability that this space is bottoming out.
Okay. So Jubilant, what about Page Industries?
So Page Industries, I would have to look at optically, as you mentioned, numbers were not looking great, but this might be due to some supply chain disruptions. Inherently, company remains good, brand remains very strong, and stock has not done anything well. So if there is any positive news, which Morgan Stanley report is saying, that management is very optimistic about double-digit growth, I think the stock can
You will hear from Page Industries on the show later today. So let's give you a heads up over there. Don't miss that conversation either. On Page and on Page Honasa, I want to get view on both from you, Amit.
Page Industries, I mean, it is in a downtrend. It has broken through that consolidation level around 40,000. And today's move seems to be a reaction to the result, and possibly we could see. So, if I had to trade this counter, I would keep yesterday's close and low as a stop loss and possibly take a trading punt here, but not really enthused with the kind of price action that I'm seeing on the charts and Page Industries. Now, the other question was on Honasa.
Yes, on Honasa. Do you want to add Jubilant as well? You can add Jubilant as well.
Absolutely. I mean, I concur with Parag sir. We have been seeing some bit of very strong momentum building up in the QSR space, be it Restaurant Brands of Asia, Sapphire Foods, Devyani, and Jubilant to add to the pack. So all of these counters are showing a lot of momentum. Coming to Jubilant, today's uptick. So in terms of momentum, if it crosses the level of yesterday's high, because that is where there was some bit of profit booking and reversal in the price. So once it crosses about 490, 491 levels, one could possibly take an entry, keeping a stop loss of around 480. Coming to Honasa, if you look at the chart on Honasa and the kind of uptick it is showing today, obviously on account of reaction to the results, very strong numbers. Any dip in this counter around the moving averages of about 464, 465 could be a possible entry point, and I would not really chase the uptick, the opening uptick in this counter, but positive on Honasa as well as the QSR space.
Tata Motors is looking like it's going to start off with a bit of a knock, 6%. This really is something that was predictable. The question was on the charts, because we've already had a conversation on the fundamentals, and Parag Bhai said that he doesn't like the stock in the automotive space. He prefers Tata Motors CV. Kush, what would you say on the charts?
Yeah, similar. I mean, it's gone sideways to negative. Any attempts at rebound have been sold into. Immediate supports, if someone's looking for, is at about 350. So maybe if it holds, then you can keep your stop losses at that level. Definitely not a buy.
You know what? The other thing is that you saw both Hindalco and Nalco gain earlier in the week, and they've come off very substantially from those levels. Even at the start today, Nalco losing as much as 5%, Hindalco less so, 1% or so. On the fundamentals and on the technicals, the question is, what would you do first, Kush?
Can I say I told you so?
I mean, of course you can. We can play out.
Has it ever stopped you?
just trying to be polite. No. I mean, this is exactly what we spoke about 3 sessions ago, when I think there was a news that had come out about 2-3 sessions ago, and we said that run up to hai, base strong hai, lekin near term momentum is so so fast that you might want to take profits off the table and then buy again at declines. So the structure is not weak or anything per se. It's just that you wanted to capitalize on the near-term profits that you made. Still remain constructive on Nalco. Supports near about 360, 365. Hindalco around the 1,000 mark. So around those levels, I'd be more comfortable buying. But like I said, this is a market where you want to keep booking profits regularly.
Now, on the fundamentals, obviously you've mentioned that you like Hindalco, right?
Yes.
But this is now on the back of this update that came through, that alumina output or supplies globally would get affected, and so it's positive Hindalco. Why is it coming off like this?
No, because LME prices aluminum prices have also fallen. Na?
Okay.
In last 2 days, they have fallen by around $100.
So there is a significant amount of cyclicality here.
Yeah. See, LME prices will affect them. Ultimately, in medium to long run, what you have to see in Hindalco is the scale up of their backward integration projects, which are coal mines in India. The downstream project expansion, which is going to significantly increase their EBITDA from downstream business, and by the way, that downstream business is not cyclical, and plus Novelis. So I would say that I would agree with Kush that Hindalco around 1,000 makes sense.
Hindalco around 1,000, okay. HPCL also losing ground today. Quick view on this one, Amit?
Let me just check that out. I've not been tracking HPCL because it is not something that comes up quite often on my screener. So I'll have to give it a miss because I've not been tracking it quite regularly.
Avoid. Okay. Olectra Greentech losing 4.5%. Parag Bhai, quick view? No?
I don't own the stock, so I will not be able to give.
Interesting setup. Don't buy yet. Maybe I'll put out as a call, but don't buy yet. Right now, there's profit booking.
Okay, one call, Amit, if you can give us after the pre-open session that stands out that you've not spoken about.
Yeah, I like L&T, especially with what has happened, what has come out in the news that they have won some AI orders also. So, and it has been in a sideways run, but it is taking support around the moving averages and keeping a stop loss of around 3,975 thereabouts. We could possibly target 4,200 or 4,300 levels. L&T would be my pick here.
And you can't say I have it.
L&T? I can't say it. No, I can buy it.
Okay, fine.
Okay, L&T, great news. They're going to be setting up an NVIDIA facility. Markets are opening this Friday, and don't look only at the Nifty for cues, because the Nifty is showing you a tepid start, but the story goes way beyond. I want to start by pulling up the heat map. Because the advance decline ratio is okay, and we have to wait and see what happens to Tata Motors, because Tata Motors is possibly going to have a very, very bumpy start and a bumpy ride. There you have it. Tata Motors passenger vehicle stock is down over 4%. Nothing has worked for it. It has been a perfect storm of sorts. Aluminum prices are in focus. Hindalco down about 1.5%. Max held so numbers. The street's not really too excited about it. On the winning side is Wipro, Tech Mahindra. You have some of the auto pack, but very, very muted really. Nothing exciting happening in that sense on the Nifty, about 0.3% down right now. Adani Ports is doing okay, so is Trent and HCL Tech, but it's a smattering of stocks really which are showing any kind of excitement. Let me just pull up the Nifty contributors for you very quickly, and I want to look at what's happening with the India VIX as well. In the Nifty contributors, look at that, it's anemic. As much a green as we hope to see on the screen, that is an anemic set, at least on the Nifty. Bajaj Finance is the only one contributing about 2 points up. RIL, ICICI Bank, SBI, some of the banks are also weighing down in terms of weightage, though Tata Motors passenger vehicle is the one which is going completely off-road today. I want to pull up the India VIX very quickly before we get Alex in, and you're seeing that the advance decline ratio is okay. There's not much excitement. The India VIX below 12. So there's no volatility, but there's too much calm maybe is not something that's working for the markets either. Maybe you have better luck in the broader markets, Alex, because this is not exciting at all, and even the key indices in the broader markets are completely flat.
No, it's flat as flat can be. In fact, we should pull up the sectoral indices and see what's moving, if at all. And I don't think that there's going to be too much of movement there as well. You have the auto index in all probability as at the bottom of the screen. There you go, just about 0.5% or so here. Metal index is also losing about 1%. Remember that low volatility indicates that there's not too much of a loss, not too much of a gain either. So no big moves on either end. Just 1/3% higher for the consumer durable index, and realty index is about 1/3% higher, and really not much to speak of here. It's a mostly red screen though, but the losses are capped. So therefore, let's look at individual stocks that are likely moving in the morning today. Quite a few of them on account of the results, and we're winding down to the end of the results season. Remember, 15th is when it ends. Max Financial is up about 2.5% or so. Good margin performance. LG Electronics, double-digit growth in several businesses. Stock is looking good, 3.5% higher. Honasa Consumer, another good set of numbers. Stock is up about 2.5%. Strong offline growth and stabilizing margins have been the standout features of the quarter gone by. IRCTC had a not so good end to the last year. Good set of numbers in the first quarter. Stock is yet to react. As we pointed out earlier, there's been quite a lot of wealth destruction in this particular counter. Wellspun Living, PAT up as much as 84%. The stock of the morning so far, at least, up 7.3% or thereabouts. Parag Bhai said that he would still buy, but we should ask him after this 7% increase whether that is still the case. Engineers India, Galaxy Surfactants, both are seeing, there you go, turnaround quarters. Galaxy Surfactants is now your stock of the morning. Upper circuit 20% higher for this particular counter, and we'll talk about more details there. Diamond Power, strong execution, a doubling of the revenue, but the stock is down as much as 3%, maybe some profit taking here. Indigo Paints, margins expanding by as much as 250 basis points. Stock is up close to 6%. This is really in line with what you've seen in the paint space so far, but bear in mind, watch out for the second quarter. Manorama Industries, PAT is up 68%. Very good performance for the stock. Stock is up as much as 10%. The question is, where does it go from here? Finally, on the downside, you've seen Tata Motors. I wonder if it's losing further ground. Okay, 4.6%. It's holding out. So it's not as worse. It's not as bad as the pre-open session had indicated. Premier Explosives, weak execution the quarter gone by. Stock is down 1%. Dream Folks, let's pull that one up. It's down about 2.4%. Things not doing too well for this particular company. A couple of others as well. HEG and Graphite. These are the graphite electrode makers. A price hike is likely, and so therefore the stocks are up in the green. And finally, GR Infra Projects and Oswal Pumps have won orders. Not too much to speak of. So if anything, it's Galaxy Surfactants from the broader pack that is doing incredibly well on the back of a stellar set of numbers.
Your Manorama also is picked up really well in trade today. But you know, Fino Payments, I'm not sure if Alex mentioned that one. That stock is also reacting to numbers. Pull up a Fino Payments. You have Supriya Life again reacting to numbers on the downside. EIL is another one which is seeing some bit of pressure today again on the back of earnings. And you have a KRN Heat. Good moves coming in there today as well. 5% or 6% is the kind of upside that you're seeing on a KRN Heat. Pull up a Nalco also on the screens, and you know, after that surge that we saw, where Norsk had gone ahead and cut guidance, or I think cut production, that stock was up, and today that stock is down now 5.5%. With a Nalco, let's pull up a Hindalco also and see what's happening with a Hindalco. That's down nearly 2% in trade. Manorama is what I want to talk about with you. Kush, what would you, would you still be a buyer? 11% upside already again today.
Okay, so about...
Was this a call?
It was a call about 3 months ago at 1475, 1500 odd rupees. Now, the only reason I could not give the call in the last couple of days is because, as you guys already know, I don't give calls just prior to the result, right? In all likelihood, once this result reaction settles, this might actually turn into a call again. Right now, if I had it, I will not book profits. I will actually continue riding on this momentum with a trailing stop loss. Anywhere from 1725 to 750 is where you keep your trailing stop losses, but don't let go of the stock entirely. Even if you book partial profits right now or at trailing stop losses, you might want to continue holding on to some, in your account. So, like I said, once this settles, I think I'll perhaps see how it settles and generate a call as well. Right now, ride the momentum.
Okay, ride the momentum in terms of Manorama Industries. Amit, coming to you with the way markets have opened, anything that you're spotting right now?
Yeah, the call that I had given in the morning, Paras and the defense pack, you've seen Paras doing well. It has picked up momentum. It is about up by about close to 2% with recent volumes. So I'll continue to ride this and keeping my stop loss, reiterating my stop loss of 1236.
That's with regards to Paras Defense. Let's put up a Tata Motors CV also in trade, because PV is already trading under pressure with cuts of 4.5%. CV is up nearly 2% as we speak. Parag bhai, in spite of where it is trading right now, are you seeing further moat where someone can look at entering at current levels as well?
I think now one should wait for decline, because stock is right from 420 to all the way up to 483 now. So now one should wait for some decline. Although I would say the trajectory...
What is the comfortable level according to you?
So between 450, 470.
Okay, 450.
I think it's a good stock to hold on. Q2 commentary is also, the outlook for Q2 is also very strong. And it's a debt-free company, very, very high ROC company. So I think an Iveco acquisition will add to the optionality value of the stock.
Sure. Wellspun Living we had spoken about before, and the stock is up. Let's see whether it's still holding on to gains of 7% plus. I wouldn't be surprised if it is. It's holding on. At 170 or thereabouts, is it still a buy?
So generally, I would not like to chase momentum. Once it cools off a bit, definitely, but I will buy it below last close. So 160, below 160 or so.
So therefore, Kush, on the charts, what is the likelihood of that momentum flagging off?
Alex, very interestingly, from an RSI or a momentum indicator perspective, this is not overheated, right? But it's risen quite a bit in the last couple of sessions, from the lows particularly, and then you've got immediate resistance at 175 and the events out of the way, right? So a couple of these factors could drive the profit booking on this one. So again, close to the same levels as Parag bhai said, 160. It'll be an interesting buy.
Couple of stocks from the broader markets doing well. One on earnings, and you saw Jubilant FoodWorks report numbers yesterday. A few brokerage notes coming through today as well. Same-store sales growth looked good at over 11%, if I remember correctly. And we'll pull up those numbers for you if we can. But the stock is up about 5.7%. Parag bhai, do you like pizza?
So I said that there's a trend which I'm seeing. QSR companies are reporting good numbers after a long time, I think. Of course, Restaurant Brand Asia was reporting good numbers. They had another problem in Indonesia. But they have already done well. Jubilant has also recorded good like-for-like growth. That Popeye brand is doing well. So I think in all probability, these stocks have bottomed out.
So can you make enough kush on the charts and trading the stock to appease your children over the weekend?
I'm still waiting for his answer on do you like pizza?
Yeah.
Oh, you do? Okay.
That's so sweet.
So I'm a little reluctant on Jubilant Foodwork. By the way, technically it's making the right noises. You know, it's broken above the falling channel. It's taken out the 200-day moving average today. There was a 500 call strike price, massive congestion, which is now being unwound because obviously the stock's seen the spike. And you have an immediate writing that you can see at 520. So I have my apprehensions around the near-term moves on Jubilant. Maybe on declines it might do well. But I agree with Amit. I think even he mentioned, Sapphire and Devyani. Near-term run has been sharp, but on declines, I think both of these, look ready for further up moves. So, maybe Devyani closer to about 130, 135, even Sapphire closer to 220 levels. You know, if you see any kind of profit booking, these would perhaps be slightly better bets than Jubilant right now.
Okay. Let's just quickly pull up a Solar Industries as well. It was one of the strong movers in yesterday's session. Today, the stock is down nearly 4% in trade, and Kotak is seeing a 45% downside on this counter. Okay. Now, my question is then really what happens, because after the earnings, Parag bhai, strong moves, order book is very strong. Is there going to be a concern in terms of execution, or the valuation is absolutely stretched?
As valuation is absolutely stretched. As there's nothing wrong in the company. Company is firing on all cylinders, and since long. But 65 times FY28 earnings is a problem. That kind of multiple you cannot give actually. That is the problem. Otherwise, company is doing phenomenally well.
But it's a brave analyst who can call a 45% downside on a stock that is, doubled in less than 12 months, if I remember correctly.
In fact, Amit, on the charts, if fundamentally, if the analyst is seeing a 45% downside, what are charts indicating?
I mean, as a chartist, one would possibly just look at the momentum, because ultimately, as there is a Gujarati saying that Bhav Bhagwan Che, right? So we ride the momentum till our trailing stop losses are hit. So I continue to be bullish on all the defense stocks, especially Paras, that is doing well. Solar Industries also is doing well, notwithstanding today's correction, possibly some bit of profit booking for early entrants. So, at lower levels, at support levels on the moving averages or on a price action breakout levels, one could possibly look at re-entering these stocks and, ride this momentum till it turns.
Gujarat Fluorochemicals, another one that is doing pretty decently. Good set of numbers which came in as well. The entire chemicals space, chemicals fertilizer space also beginning to show a bit of a tick up.
So again, here also this inventory thing, you'll have to take care of it. I'm not sure about Gujarat Fluoro, but I'm saying in various chemical names, also there's an inventory benefit which has come in this quarter, which might not be recurring benefit. So that you have to be very cognizant of. Even, for example, Galaxy Surfactants is a company which I like. And it is up 20% today. But
also had a decent set of numbers.
Superb numbers, excellent numbers. But we'll have to hear from management on the call. Sometimes what happens is when the supply chain is restricted and constrained, you get a better price for your products because your customers needs it. And you might get benefit of that also. So we'll have to see on the call what they say. If this kind of performance is recurring, then of course the 20% up move is warranted. But we'll have to see on the call what they say.
By the way, KRN Heat is at upper circuit today as well. What do you do if you hold it?
You ride the wave. This is massively overheated. Of course, you can't buy even if you wanted to, right? But
I'm saying if you have to sell.
Yeah, but, I'm saying. See, 3-4 sessions of consecutive upper circuits, 2 at least for sure, yesterday and today right now, right? So when there is such a momentum, okay, you might want to book 20-25% today. If it goes up again tomorrow, then a very similar kind of a story. That's how you ride momentum and not at one shot, right? What if it goes another 5-10%? in the next couple of days also. So definitely not a buy. You might want to start booking partially on this one. But yeah, I mean, right now don't exit. Trailing stop losses and partial profit booking at best.
Anyone has a quick view on IRCTC? We're going to go in to a conversation with the management. Kush clearly has a view. My God, Kush, it's okay.
You said you're going to talk to the management. It's an avoid for me. There are early signs of recovery, but it's just not a sector that is doing well. The stock also has seen selling pressure at higher levels, so I'd be a little cautious, at these levels.
Do you have a view, Parag bhai?
So stock has corrected nicely. So I would also listen to the interview and then take a call.
Okay. Parag Thakkar, Kush Bora, Amit, thank you so much for joining in today, and wish all of you a very happy Independence Day once again. Let's focus on IRCTC. Before we get to that conversation with the management, Puneet giving us a snapshot of what the earnings look like.
Well, thank you for that. We saw some good numbers coming in from the companies, especially within the segment. So you had the segments like tourism as well as catering continue to do well. There is an absence of growth clearly visible in the internet ticketing side of things, and possibly the EBITDA largely continue to be in this range for the last 2 to 3 years now, putting in focus of what the new management can go through as well. But that is one of the key factors, and let's also welcome in Rahul Himalayan, who is the chairman and managing director of IRCTC, now joining in. Mr. Rahul, thanks so much for joining in. I just wanted to understand firstly, if you saw any impact on travel in this particular quarter led by geopolitical crisis. We've seen that across industries where there has been some or the other issue. Was travel impacted either domestically or otherwise, either in specific regions? Did you see delayed travel by your customers?
Overall, we had a revenue of 1370 versus 1160 in the quarter of financial year 2025-26. So in this, as far as the impact is concerned, first I would like to talk about the revenue mix and all. We saw that in this 1370, 732 came from catering, 109 from rail need, and internet ticketing 361, and from tourism 168. So there was a delta of 210 crores between 1370 and 1160. To this delta of 210 crores, catering itself contributed to 181 crores. So catering has a margin of around 10 to 12%. Conventional margin I'm talking about. Internet ticketing has around 80 to 85%. The tourism has got 14 to 15%, and rail need 14 to 15%. So one thing is that 181 out of 210 crores, which enjoys only a margin of 10 to 12%, which is 54% of the total revenue. That was one of the reasons for our profits not scaling up, number one. Number two, the West Asia crisis impacted the rail need segment largely because the cost in the raw materials such as the resins, which account for the preform, caps and shrink rolls, impacted the cost to grow from 55 to 61 crores, that is 6 crores plus. Then there is a HR decision we took where the gratuity was increased from 20 to 25 lakhs, impacting around, and the post-retirement or settlement benefits. So this impacted around 20 crores, of which 10 crores was booked on catering itself because catering forms around 54%. And lastly, the POC, the proof of concept trains, which were not there in quarter one of financial year 25-26. There were 6 trains in around 4.7 crores of that impact in quarter one of financial 26-27. There'll be around 4 trains in quarter 2 and 2 trains in quarter 3. So these were the debilitating or the retrograde factors which caused our EBITDA to come down. West Asia crisis stabilized, HR will not repeat, and as I said that there is a tapering in the POC. So with all these and with the introduction of new Vande Bharat sleeper trains, we will try to maintain our EBITDA margin 30% plus.
And sir, I know that you just joined, last month, and this is your first, not even your first full quarter. But I wanted to ask you about a lingering issue, because we'd seen that with the old IRCTC website, there were a lot of customer logins. The ad pop-ups were a big problem, and all over social media, you saw that from customers in terms of complaints. What's the update on the new website? I think you had launched the beta version, but any update on the same?
As far as the new website, it has already been launched. As far as the beta version is concerned, on 15 July, now around 80 to 85% utilities and interface has been developed on that website. Anytime, maybe 15 days down the line or in this quarter, we will be able to come up with the full-fledged version of the website which speaks about no advertisements, no captchas, no pop-ups, and giving a seamless booking experience with faster ticket booking speeds to the user.
Well, thank you so much for joining in, sir. A shorter chat today, but we'll of course get to the next quarter, talk to you a little bit more about what the business is about. But back to you, Tamanna. It was a quarter where the EBITDA didn't grow, but at least the viewers and customers are getting a new website.
Yeah, I was quite excited hearing about that, Puneet, about no captcha while booking your tickets. That was really a big standout for me. Pankaj Tibrawal, founder and CIO of Ikigai Asset Manager, joining us this morning as we're kicking off Independence Day celebrations. Pankaj, thank you so much for joining us. And you know, just because of the occasion that we are kicking off, and we know it's a day earlier, but we want to talk to our viewers when markets are on. Just want to get your sense of where we are, because the last 2 years from a returns perspective have really tested the faith of Indian investors. Pankaj, I think you're on mute.
Oh, sorry. Good morning, Tamanna. Great to be on your Independence Day show. So if you look at, absolutely you're correct, last 2 years, markets have seen consolidation. And this is not for the first time, Tamanna, that for a couple of years, markets have been very subdued on return part. I remember when I joined the markets in 99, 2000, you saw a tech bubble. And then for 3 years, almost 2000 to 2003, you could go back to home just as market closed. There was nothing to do. And 3 years were the most boring period. And then came the mother of all bull markets from 2003 to 8. So I think markets moves in cycles. I think it's good that there is the realization check that always every year you can't compound at 15, 20%. And I think that's a good thing from a health of a market. Now, as far where we are standing today, I think we are at a very interesting point as far businesses are concerned in India. And let me give you some ground feedback. We have been interacting with companies across sectors, exporters, people who are leaders in the sector in the domestic market across home improvement, chemicals, financial services, and so on and so forth. I think for the first time, demand is not an issue to be talked about. The only challenge management teams, promoters are talking about is the supply chain. And I think that's a very, very interesting thing that companies are thinking very large in terms of overall growth. And obviously, these geopolitical issues keeps on coming from time to time. But when you look at the data points now, the earnings season has panned out quite nicely, contrary to what people expected when they were entering into that. Almost most of the companies have reported, and the top line growth for the first time in the last 12 quarters is more than 20%. And when you remove OMCs, the three of them, because they had a peculiar issue and there was the 18,000 crore drag on the profit side, the overall earnings growth is again in excess of 20%. And large cap, mid cap, small cap, all have delivered very strong numbers. And the one word, if you would like to sum up this earnings season, is the resilience of corporate India. And if you look at, for the first time, about 60% of the companies have reported more than 15% earnings. Normally, this number is between 45 to 55%. And the beat has been far more than the misses this time. And we have seen upgrades across the board. I think it's a very, very welcome step in a most challenging quarter. And I've always said that inflation, to a certain extent, is a friend of corporate India. When inflation comes, you are able to get pricing along with volumes, and that helps on the top line growth. And a lot of operating leverage kicks in when the top line growth moves above 15% for corporate India. And that's exactly what has happened this time around. And the outlook for second quarter also looks to be quite decent. Many companies have alluded that July, contrary to expectations, have been very strong. We met few steel companies, we met pipe companies, we met paint companies, tiles companies. Everybody is saying normally July is subdued, but this time July has started on a good note as far as volume growth is concerned across these sectors. So I think we are on a strong wicket as far earnings are concerned. Now come to flow. Sorry, Tamanna, you want to say something?
No, I'm not wanting to interrupt your flow of thought, Pankaj, but just wanted to sort of summarize. So the takeaway that I'm getting is that there's not too much to worry. Green shoots are visible, signs of a possible turnaround are visible. Would this happen even in the event that FII inflows don't come back?
Yeah, so now I was just coming to the flow side. 6th of June, I think, is a very important day where government and RBI announced FCNR deposit scheme. And look at the FPI movement and the currency movement post 6th of June. You saw that after the ceasefire and there was some kind of a understanding, crude again went to $100. But this time, currency didn't react to it because you had great flows of FCNR starting to kick in. Till last week, we had almost received $40 billion in this scheme plus ECB combined. And the expectation is about $80 billion. And when you compare it with 2013, when rupee moved from 55 to 69, and government had announced this scheme, the large portion of the money came towards the fag end of the scheme. This time around, the money has come in front-ended. And $80 billion is not a small sum anyways. Also add to that the bond market inflows which have been happening post the 6th June announcement. And year to date, fiscal year to date, 60,000 crores has come on the bond inflow side. And in July, for the first time, FPIs turned buyers in the Indian markets because the AI trade started to unwind globally and in the region, as well as you saw that currency started to behave in a more stable manner. I think these are good signs that FPI will get confidence of, that earnings has started to pick up. Ground reality is not as bad as people feared out to be. Currency is stable, and with government policy actions in place, a lot of comfort will be driven by FPIs, and most of them are underweight India right now. India was a complete no few months back. Now, when we speak to most of our counterparts globally, I think there is a realization that India warrants a look. The only challenge they are facing is, for example, look at the US earnings season. So we are thinking that 22% growth is good compared to the expectation. US earnings this quarter has grown by 26% on that kind of a base. And this is the highest number of beats we have seen post GFC. And even if you remove the AI side, earnings growth has been quite strong. So US is showing a very strong resilience as far growth is concerned. So there's no reason for people to sell US markets and move to other markets because earnings growth is supporting them and US market is making new highs every time. So when you look at relatively, we are okay, not great. But when you look at in isolation, I think that's something which is interesting FPIs. And we believe that second half of this year, FPI flow will be positive, led by various factors we spoke about. So it may be a contrary call, but our sense is the mood in FPI community is changing towards it, and they are looking to cover their underweights and at least move to neutral, if not over.
Very interesting, Pankaj. Good morning, Alex here. So a couple of questions here. I was looking at your note or your newsletter, and you were talking about the fact that you're turning more cautious on the US markets. And I guess to a certain extent that is related to what you were just describing on the earnings front, because people often describe the price to earnings multiples or the valuations and say, look, it's not challenging right now. But what they're not saying is that they're extrapolating the rate of growth that you're currently seeing far down the road as well. So who's to say whether that 30+% growth that some of these companies are displaying right now will continue in perpetuity? It won't. And so therefore, at some point, there will be a fall off a cliff. The question is, will that impact that will likely hit risk assets globally at some point or the other? Nobody can say when. Will that hit our shores as well? How much will the impact here be? And so therefore, how should your positioning, Pankaj, in Indian assets be? Should you get into assets or companies with margin of safety?
Brilliant question, Alex. I think very well articulated. Let me give our thoughts. Obviously, the earnings growth looks to be quite strong in the US market, but always market is forward-looking. And our sense is that when we look at the data points in the US markets, As far consumer, some of the data points on consumer side, like delinquency on credit cards, is going up through the roof. You're looking at the consumer sentiments; it's bad. Inflation is picking up, and especially on the debt side, we are sitting on a $40 trillion of debt as far US is concerned, and with interest rates starting to move up, and you have seen a very sharp steepening of the yield curve, which means 10 minus 2 treasury yields have steepened quite considerably. And today we are at 4.7% as far 10-year is concerned, and 5.2% as far 30-year bond in US is concerned. So what US bond market is saying that we expect higher inflation to kick in and remain sustainably higher. Don't forget, 64 months in a row, market has been above the tolerance 2% Fed level on inflation, 64 months in a row. So at some point, market has started to price in about 25 to 30 basis point of rate increase by the end of this year by Fed again. And when you combine everything together, if 10 years starts to move towards 5% and above, I think there will be some risk of which will be started to play out. The second part is, in the previous regimes, we saw the hyperscalers, because they were generating cash, they could support a lot of buybacks and stuff like that. That is behind us, Alex. Just to give you numbers, first quarter calendar year 26, hyperscalers, 4 of them, generated $60 billion of free cash. Second quarter, which is just ending now, about that number came from $60 to $7 billion. Expectation is that this number will be negative $13 billion as they invest in the capex on the AI side. So these guys are moving from cash generation to cash consumption, and hence buybacks will be a thing of the past, which may not support the markets if any eventuality may do happen. So our belief is that valuations are very rich in US. Market cap to GDP in excess of 200%. AI trade is the only source of growth, which is keeping it. Yes, consumers reasonably okay, but incremental data point on consumers are not giving us comfort. And we believe that US, which was the darling of the markets globally for the last 15 years, I think there is some, money has to be shifted out to the rest of the world. Most of the investors acknowledge that. Once earnings momentum starts to slow down, you will see that spiral effect starting to happen. So we are a bit cautious on US market. Last year was the first year where global markets did extremely well compared to US markets. Emerging markets, Korea, Taiwan, China, all did extremely well. Even in calendar year 26, most other emerging markets and global markets are doing better than US markets. So there's some movement of dollar assets from US to non-US markets, and that we believe is a longer-term theme to watch out for. Plus the dollar weakness, one has to be very, very clear that dollar is in a depreciating mode over longer periods of time. So this is broadly what we covered in our newsletter, and also the unwinding of the AI trade. AI is real, but what the financial market is pricing in, we are a little bit worried about that. And hence we need to make sure that we are a little cautious. From a portfolio perspective, having in markets for 25 years, Alex, I can only say that you can prepare for the rainy days. You don't know when the rain will come. And hence, from a portfolio construction perspective, we believe that you have to be in companies which are led by strong governance, strong management, strong promoters. We have a competitive edge. Don't compromise in these circumstances on balance sheet and cash flows. Don't get carried away only by EPS growth. I think that will be disaster, because when earnings slow down, we see that finally cash flow and balance sheets come to the fore. So if you can maintain those discipline and have a portfolio diversification and focus a lot on portfolio construction, I think you should be fine. And one data point which I would like to share with all of you, that 15 years back, our correlation coefficient with US markets was 0.7. So if there is a fall in the US market, 70% of that used to hit us. That number over years has come down to 0.3.
Okay.
So I think we are definitely there, but the correlation has come down drastically. So that much impact may not be there as the world may see on the risk of, but obviously we will be part if something big happens globally, either in Japan or in US.
Yeah,
so we have to watch out for those.
But you might not see a deep gash that does not get bought into, particularly because of the domestic flows that have been so robust, right, Pankaj? And we've seen that play out multiple times in the recent past as well. I'm talking about recent past being last 5 or 6 years. But having said that, I do want to ask about the implications of what your expectation on the dollar will be, which is that you expect that the dollar will depreciate over the longer term, and that usually traditionally has meant good news for commodities, and therefore people that are pulling things from the ground. And for more reasons than one, this is something that is going to be a focus for the next several years. From that perspective, do you think that there are opportunities here in India, and are you focusing on commodity players?
Absolutely. I think over the last 12 to 15 months, we have been very, very constructive on the entire metal and mining space. And there are a couple of reasons, Alex, to kind of think about. One, I think geopolitics is there to stay for a longer period, and that means countries will become more insecure and inward looking as far resources are concerned. And some of the other bottlenecks will keep, coming into the global markets. You saw first Russia, Ukraine, then you saw Iran war. What next? And hence, there will be a lot of problems on the resource side, which will keep most of the commodity prices elevated. The second thing, as countries become more and more inward, you would see that they will not share their resources as far metals and minings with other parts of the world. And the new technologies which are coming in, whether it be EV, whether it be the entire grid modernization, you're talking about solar, you're talking about data centers. Everything has a very high consumption of either copper, aluminum, or rare earths. And the countries producing are very, limited. So our sense is that as the consumption starts to move up, and there is a demand-supply gap, because last 20 years, this sector has seen huge underinvestment as far, new mine openings are concerned. And the current mine output is depleting at a very fast rate in many of the metals and minerals we spoke about. So we believe that we are there from a medium outlook perspective. The world for the last 15 years saw softer assets being repriced much higher. That means software, new age companies, and stuff like that. I think whenever inflation comes, hard assets do extremely well. And that's our medium term outlook, that whenever you get opportunities, like the last 2, 3, 4 months, where few of them, sectoral leaders corrected significantly, we use that as an opportunity to increase that exposure, because hard assets, I think, should be the order of the day over the next few years, whether it be manufacturing, metals and mining, even precious metals, Alex. You look at whenever crude has hit $100, historically in the past, gold and silver, after a gap of 5, 6 months, have done extremely well. You saw that crude hitting again $100. And I think there could.
We've just lost Pankaj, but we'll try getting him back as well. But a couple of interesting points that he made in this conversation. Pankaj, I think first up, let's complete what you were saying, and then I'll take the next question. Okay, we've lost him again, but I think, the question is, how far stock picking will continue is the question from here on, more than index investing.
Yeah.
That was one of the crux that he was talking about over here. And from here on, I think the other point that he was making is that you've started to focus on the earnings revival cycle that has come in. Pankaj, I think we have you back, and I hope you can hear us as well. My question then coming to you is, you've made an interesting point when it comes to small cap stocks. Does that mean it's best to now look at stock picking versus investing in the index, number one? And I will come to the next question because we're running slightly short of time. But how are you looking at it?
So obviously, I have been a big proponent for last many, many years for active stock picking. I think India is a fertile market. You have many businesses which are scaling to a very next level. With rupee depreciation against yuan and dollar, I think that has provided a new lever of growth for many experts. You don't trust me or what we are saying. Just go and do a ground check, speak to the textile guy. I was meeting a textile company yesterday, one of the largest in the country and in the world. And he says that the order book is completely sold out, which he has not seen for years. Then I went and met a pipe company, normally catering to domestic market, PVC pipe company. And they are saying that there is huge reverse inquiries coming from other countries for the PVC pipe exports from India. Then we met an auto ancillary company, and they are saying that many companies out of Europe will go out of business from a supply perspective to OEMs. And OEMs recognize that because of energy issues, succession issues, and so on. And they are looking to diversify. If we demonstrate capability and size and delivery commitments, there is no dearth of order. When did we start hearing such comments from Indian entrepreneurs? So I think export is underappreciated right now as far Indian corporates are concerned. And a large part of 101 to the 500 market cap ranking, a lot of these companies will become very large in size over the next 3-5 years. The only thing as investors we need to know is that there will be volatility, there will be challenges intermittently. But if you are patient enough and identify the right managements, right businesses, trust me, active managements will always surprise you compared to index investing. India is still offering you a lot of opportunities outside the top 100 companies as market cap. These companies are getting discovered by the markets, coverage by the sell side. And if you can do your groundwork, scuttlebutt, and along with your team, go and do deep dive, I think opportunity is always there. And we are very, very positive that over the next 3-5 years, you will find many jewels which will scale up in size across auto anchs, precision engineering, aerospace, defense, chemicals, home improvement, and so on and so forth. So I think we remain constructive on the overall mid and small cap space. There will be volatility. Please don't get me wrong. Last 2 years has seen consolidation. Last 2 years, we saw sell-off also in many names. They have not come back also. So idea is stock picking. Bottom-up basis, go and select good managements, good balance sheet, cash flows, good TAM in the business. You will be rewarded. And that's been our style for the last 2 decades plus. No. And we continue to believe India is a fertile market of doing that stock picking.
Absolute fertile market, interesting sectors, Pankaj, that you've mentioned. But let's be specific in the last one. India 2047, the Independence Day theme, that one idea that you want to give investors that will actually give them returns and they will remember in this next decade.
One idea is, as Mr. Warren Buffett said, that we were lucky to born in US. We are lucky to be born at this point of time in India. So trust in the country, trust in the overall system, and buy India. There will be ups and downs, but historical last 25 years has shown that 2-3 markets in the world, including India, US, and one of the other markets, have given you much better returns. There will be ups and downs, but have a trust. So if we want one recommendation, one tip, buy India.
Thank you, Pankaj, for that. Buy India. That's the recommendation coming in from there. And I think he's coming from the point of view of believe in the domestic growth story, forget your export-oriented sectors to some extent.
Okay, more so from the perspective of the global stage and what happens there.
Absolutely.
Versus,
you are, I mean, all of that stays status quo, right?
Yeah, absolutely. And I think the point that Pankaj made on the correlation with the US market is also significant because at some point, something's got to give.
Yeah. So the point that demand is not a problem.
Yeah.
Maybe supply is for companies is also important. Let's take a look at what's happening with markets very quickly. Remember, 2 new listings as well, and we're going to get you all the listing action live from the exchange floor in just a second. But right now, Nifty is just about 0.25% down, not doing anything at all. I want to look at what Tata Motors PV is doing, and if I can get the intraday chart of Tata Motors PV, because that was the real pain point of the morning, isn't it? Nearly 5% down right now, so that's not doing too well either. But some of the new entrants, Ridhima is with us. She's joining in from the NSE headquarters, and Leap India is in focus right now. Ridhima, tell us a bit about the company and what are the listing gains, if any, that are expected?
India all set to get listed on the stock exchanges, and there's exuberance in the environment out here. The GMP suggests around 8% premium listing, and the IPO size was about 480 crore IPO, about 2,000 crore offer for sale from KKR-backed Vertical Holdings, and the other 480 crore was set aside for debt repayment. It got subscribed about 8 times and saw 50% subscription from the QIBs and a moderate interest from the retailers, about 35%. Now the debt repayment will comprise of around 380 crore of the 480 crore total of the fresh issue, and the expansion plans, the company plans to expand in the GCC space where they see more growth coming in from this month around. They see that it will contribute to the revenue as well. Now the financials of the company also look strong. The PAT and the revenue both grew by over 50%. The major segment contributor to their revenue is the pallet pooling. Around it has a market share of 90%, and they continue to focus on this segment as it's still on a nascent stage in India. Other segments include MHE, and there it got listed. So MHE contributes around 14% to the revenue, and the other segment, containers, they see more growth coming from the automotive sector. They have around 38 sectors which they contribute their market value from, and the major risk of the company comes from the acid damage. They have a team of 300 plus.
For that, Ridhima, love to see the stock prices here on this screen if we can as well. That would be great. 8.5% up on Technocraft. Leap India 4.5% up. Both interesting companies, and both doing fairly well this morning. It's good to see once again that you have IPOs that are listing with gains.
Yeah.
At least that flow is back.
Yeah, that flow is back, and I think there is that money movement that's happening in the primary markets. I think this week or last week, 7 to 8 of them. And the question is it because the markets are consolidating, and that's the reason why you're seeing that influx happening in the primary markets?
So yes,
because your paper coming back, and any which ways your primary markets, the lock-in for in terms of funds is just 3 to 4 days, unlike before, right?
Yeah.
So people are just probably taking that chance as well. कि अरे market में मतलब ना इधर जा रहा है ना उधर जा रहा है.
So
something will happen here.
At least on the downside, there is no expectation that the market will crack from this point. But more than anything else, I think the green that you're seeing on listing day is a factor of your institutional investors, and particularly mutual funds, not really taking any valuation. By the way, Leap India losing out and might just slip into the red. It's just about trading flat at this moment, whereas Technocraft is trading with green on the screen, up about 0.8%. There you go. Leap India has slipped into the red, now trading with cuts of about 1%. Let's talk about Praj Industries. It wasn't the best performance in the engineering segment, but a strong show in the bioenergy segment and high purity. We've got the managing director, Ashish Gaikwad, who is joining us and who will talk about the business and what took place in the first quarter, as well as the outlook going forward. Before we do speak to him, though, let's head across to Sharad just to set things up. Sharad?
Well, to set things up, largely if you look at the overall numbers, they have been coming mixed. One side we have PAT and operating income on the upside, while for EBITDA margin there is a downtick of almost 71 basis points on a year-on-year basis. A weak performance coming from the engineering segment, but if you look at the other segments, the bioenergy and the high purity segment, that has actually done well. Order intake is roughly 1,000 crore and order backlog comes in at almost 4,600 crore rupees. But there are 3 important announcements we should be tracking. That is, of course, an important JV with for an EPC as well as the Union Cabinet. They have approved the Govardhan scheme. That's also going to benefit the company going ahead as well. And largely the numbers seem that the worst is over for the company, especially on the demand inquiries from the international business. And that's why we are seeing a good buying happening in this counter.
Very interesting. All right, Sharad, thanks so much for that. Ashish Gaikwad, Managing Director, Praj Industries, is joining us right now. Ashish, thanks so much for taking the time and pleasure speaking with you in advance. Here's wishing you and your entire team a very happy Independence Day. It's the 80th one and definitely a landmark year for all of us here in India. But let me ask about this as well. My colleague Sharad just talked about the numbers and he spoke about the fact that there is an expectation that the worst might be over. There was a little bit of a torrid time that the company did go through. Would you agree? Is the outlook looking significantly better from this point?
Good morning. First of all, thank you. Thank you for having me on your show and wishing you the same. Happy Independence Day. Well, I think we are certainly looking at green shoots and we are happy about the quarter one performance. Our year-over-year order book has gone up by almost 33% and our quarter-over-quarter order book has gone up about 25% odd. So yes, I think we see some good orders coming in. And of course, for our business, there is a certain cycle time to convert the orders into revenue. It is anywhere between 12 to 18 months. But in the second half of this year, we will start seeing the impact of these orders. So I wouldn't want to just, say that there is victory and everything is good. There are challenges which are in the ecosystem that we operate in. We need to see the uncertainties in front of us. But I think we have a playbook to deal with those uncertainties now because they are going to be a constant in the forward journey.
Very good morning to you, Mr. Gaikwad. Have some of those challenges impacted margins this time round? Give us a picture of what's happened with margins because the rest of the data or the financials are looking fairly strong.
Well, I think they could be better, especially two things have affected us, volume and mix. Of course, we need volumes, a certain volume to cover our fixed costs and also deal with the input costs. But also the mix. If you see in the last year, the mix of international orders was lower compared to what we would like to have. And we now are repivoting ourselves, looking at different geographies. And therefore, we are trying to change that mix, which will give us better margins going forward. But if you look at quarter one, the main two reasons for the lower margins would be volume and mix.
This correcting, Mr. Gaikwad, in the current quarter already, in which we're speaking, and towards the second half, volume and mix?
Well, we need volumes in our modularization business, which we call as Praj Gen X, and that is shaping up with a good backlog. We are entering new segments like data centers now, which is a growth area. So yes, the volumes will play a role there. We will have to see how the year unfolds in front of us. And also the mix, because as I mentioned, international market focus will yield results that will give us a better mix for margins.
Okay, so margins is going to be interesting. The other conversation I want to have with you is with regards to the government's 23,700 crore Govardhan scheme. Now, how big an opportunity is that going to be for you? Because you're talking about CBG investments here. So how much will this add to your pipeline in terms of business, Ashish?
No, great question. We are all excited about Govardhan scheme. I think there are four pillars on which we think that this scheme can be a inflection point for the compressed biogas biofuel. We believe that there is a good feedstock combination. So there are multiple types of waste that can be converted into energy, and Praj is well positioned to handle all those feedstocks technology-wise. Second, there is a offtake, guarantee that is being given so that, there is no problem when somebody produces the compressed biogas. Third, there is a funding availability that is, what you mentioned just now, the close to 24,000 crores outlay. And then lastly, what is going to be important is that a good price is assured so that these industries remain profitable and therefore thrive over the decade or so. And we believe that, all of these are correctly put into this scheme, and Praj is very well positioned to leverage this.
So then, Ashish, tell me one thing. How quickly can CBG actually become a meaningful contributor if you have to talk about revenues as well? And because of the schemes that are coming in, is project viability becoming, utmost important, where you have assurance when it comes into, assurance with regards to takeoff?
Not really. If you take any typical, CBG investment, when you are creating an asset, the payback period is anywhere between 3.5 to 4.5 years, right? And when you look at the Govardhan scheme, the assurance is even more, much longer than the payback period, and that is going to bring in investors. That is going to get the private sector more and more interested in investing into this sector. So we are very hopeful about this.
In the last year, I remember this conversation about a year back, right? Which is that in the ethanol space, one of the headwinds that you were facing was that your clients were pushing orders down the road. They were not executing capacity expansion, right? Is that something that has been resolved? Are you seeing interest from your customers? And what's happening on the ethanol side?
Yeah, so I will divide that into two, the domestic and the international markets, because we serve globally. So in domestic market, the demand supply balance is still a little bit skewed because there is more supply possible than the demand for a 20% blending into petrol. It will take some time to ease it out. We will need more blending mandates. We will need ethanol produced to have more pathways to get converted into other biofuels, like the sustainable aviation fuel, etc. So that is where there is a slowness. But when you look at international markets, many other countries who need energy security and energy assurance, they are going towards biofuels quite a lot, and we are well positioned in those countries, especially in the regions like Latin America. Brazil, I would like to mention specifically, where we had little presence, and very recently we bagged a significant order for converting corn to ethanol, and that will give us a marquee reference to grow in markets in South America. So domestic markets still challenge. International markets, we see opportunities developing.
Specifically for ethanol, Mr. Gaikwad, that response about domestic versus international markets?
That is correct. I was referring to only one of the many offerings that Praj has, which is the first generation ethanol.
Why is that though, when there is such a big push for ethanol domestically as well? Just curious.
Yeah, so that's because our installed capacity is about 2,000 crore liters in the country. And when you look at the EBP 20 requirement, it's about 1,100 crore liters of ethanol that is required for fuel ethanol. And then there are other usages of ethanol that also consume this production. So as and when we get into the flex fuel vehicles, which can take anywhere between 85% to even 100% ethanol, just like in Brazil and other countries who have very well adopted these vehicles. And in India, we have now seen launches of both the two-wheeler vehicles and the four-wheeler vehicles for flex fuel. I think that demand will increase. It takes time, so it is medium term, but that's when the demand supply will be good, and we are very much engaged in the dialogue, in collaboration, and in promoting the flex fuel vehicles.
Mr. Gaikwad, I must ask you about this deal that Praj GenX is doing with a leading EPC to manufacture and supply precision fabrication components. Tell us about this. Why are you getting into this?
Yeah. Well, one of the businesses that Praj Industries has, as I said, it's Praj GenX. It deals with specialty fabrication, precision fabrication. And as you know, that there is a significant investment globally happening in data centers. We have the capacity as well as skills and expertise to provide the fabricated skids as well as frames that are required to build hyperscale data centers. and we can do it with a certain amount of quality as well as speed. And that is what is this particular agreement with one of the leading suppliers or EPCs for data centers. It's a specialized field, and we have signed a long-term agreement, which is essentially about 500 crore plus over the next 2.5 years time of revenue that we can make. So it is a new pivot for us, and we would continue to look at that segment positively.
All right, Mr. Gaikwad, thank you so much for that. We would love to talk about your diversification strategy as well, but we will connect next time on that, because it seems from energy transition you're looking at the next industrial capex cycle as well. So that's the management of Praj Industries. Just pull up the stock once again. 6.5% cooled off from the day's high slightly, but still trading with some smart gains as we speak. We'll quickly slip into a short break. On the other side, we'll connect with Dipanjan B, Chief Financial Officer at Page Industries, to discuss their quarter gone by. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Welcome back. You're watching India Market Open. Not the most exciting day of trade. It's lackluster yet again with a very narrow range for the benchmark Nifty 50. We're trading above 24,300, but we continue to look at individual counters and focus in on the implications of earnings in the first quarter and what you can extrapolate from that for the rest of FY27. And one of the counters that we're focused in on is Page Industries. Of course, the results came through during market hours yesterday, where there was a bit of a crack towards the end of trade, and that had to do with volumes. Let's find out what exactly caused that pressure, how it impacted margins and various other factors. We'll speak with the management in just a bit, but before we do, let's go to Varsha. Varsha, what are the key numbers to focus on?
Well, I would say the Q1 disruption, Alex, that we've seen is temporary, and the outlook for FY27 remain intact. Now, volume growth was up almost 5.7% year on year, though sequentially, if you see, it was down. New launches are expected to drive growth. Now, talking about the margin, because that's where the pain point lies, cost pressure hit margins, cotton and synthetic price spike we have seen. Even gross margin, if you see, is down almost 188 basis points to 57.2%. Softer primary sales have impacted operating leverage for the company. Now, what management is expecting? So they're expecting ramp up of new units to enhance the long-term growth, and to which they've also given guidance. So volume growth is expected to be in double digits, and EBITDA margin is expected in the range of 19 to 21%.
Okay, all right. So interesting updates. Thank you so much, Varsha, for that. Dipanjan B, the Chief Financial Officer of Page Industries, joining in. Dipanjan, thanks so much for taking the time. So the street certainly paid very close attention to the outlook and the guidance going forward that the management had yesterday. And there was a fair bit of volatility. I think they were trying to make up their minds. Can you reiterate some of that? Because the concern really had to do with the volume picture for the rest of the year.
Good morning. Thanks for having me on the screen. Yes, our volume growth in Q1 was around 5.7%, which is good. I mean, we are in a happy situation, and the consumer demand has been improving. So we do expect the traction to continue, and we are, as we speak, we are gradually getting into the festive months in the next few months. So annual outlook, we are quite confident that we should be able to do a double-digit volume growth.
Okay, so you're talking about double-digit volume growth, Dipanjan. How are you looking at product and brand strategy from here on to make sure that with what competition is doing, you still continue to hold that kind of market share?
Yes, I think there is competition, especially in the online space, where we are seeing many new players coming in who are digital first. But our product spread or palette is quite vast. So whether it is in innerwear and whether it is in athleisure, there are interesting products. Innovative products are being launched. We have just launched the Jockey Studio, which is a tie-up with Disney and Marvel. So there are several products lined up, and we continue to focus on our entire distribution network. So these things will give us the strength to achieve this double-digit volume growth.
Dipanjan, hi, very good morning. Tamanna here. So the understanding is that this was a tough quarter for temporary reasons which will get fixed. If we can just go over some of those reasons. One is your raw material price hikes. Is that looking like there will be a softness in those prices now or a reversal there?
Yes, we did see significant price escalation, especially in the fabric and all petrochemical-based products like packaging materials. In the mid of May, kind of it started from April end kind of thing. And we did take a price increase, which we initiated around mid of May, but it was only partially offsetting the increase in input costs which happened. But this was a temporary blip. Close to June and even now, the prices are softening. And we do expect it will remain so for the rest of the year. So we do not expect any further blip in input costs unless the Middle East situation behaves differently. But otherwise, that's the way things are now. It's quite a comfortable situation as far as input costs are concerned.
So do you then expect margins to come back in the 22-23% range?
See, we typically plan and operate keeping in mind an EBITDA margin of 19 to 21%. So yes, if for various different factors, if there are quarterly higher increases in beyond 21%, that can happen. But yes, our typical operational range is 19 to 21%.
Also had higher manpower costs which have impacted this quarter, isn't it?
Yes, so we had started the Odisha plant early this year, and also there's one more facility in KRPet. It is being gradually ramped up, and people are being recruited there. So with that, while the recruitments are happening, but yeah, the new plants does take some time to reach the optimum level of efficiency. So given that, yes, there has been increase in manpower, but yeah, that is as planned.
Dipanjan, my colleagues actually done a few channel checks, not just for your distributors, but for the textile industry as a whole. And what she's found out is that seemingly the credit days from retailers to distributors has actually gone up. It's actually doubled. I'm trying to understand whether there's a seasonal factor and whether that will eventually have any implications for working capital for companies like yourself.
We as such have not faced that, because given the fact that our entire supply chain is now based on ARS, it is based on what the retailers buys from our distributors. So we are not seeing that. Yes, there has been inflationary pressures in the industry in general. So that might have impacted the increase in overall retailers' credit days, but we have, as such, have not faced that.
Interesting. So therefore, the rest of FY27 looks significantly better. And I think that's a good end to this conversation, Dipanjan. It's an absolute pleasure having you, and wish you and your team a very happy Independence Day in advance.
Thank you so much.
All right. Now, today, of course, marks the 4th death anniversary of veteran investor Rakesh Jhunjhunwala, and often, of course, known as India's big bull, from turning a modest investment into a multi-million dollar, in fact, $1 billion fortune, to inspiring generations of market participants. Jhunjhunwala's conviction-led investing approach continues to influence investors across the country. We remember the man whose market wisdom and optimism left a lasting imprint on the Lal Street, and in fact, everybody who has watched the markets for so long. Right, and with that, it's a wrap on this edition of India Market Open from Hiral, Tamanna, and myself, and the team that put the show together. Thank you so much for watching, and keep celebrating Independence Day with us over the course of the day. We've got lots lined up for you. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे? ओले ओले ओले।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell. Hold.
Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy. Sell. Hold.
Hello and welcome to NDTV Profit, and wishing all the viewers of NDTV Profit and CoinSwitch a very happy Independence Day. Now you're tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin below the $64,000 level marks on the lower volumes. UK's lawmakers press banks on crypto access ahead of new rules. FTC to join SEC in exploring crypto regulations without clarity bill. And lastly, Goldman Sachs expands Bitcoin push with a $2.25 billion asset manager deal. Well, the Bitcoin remains below the $64,000 level marks on lower volumes. Regulatory uncertainties there. And of course, these lower volumes are impacting the technicals also. Now you can expect a little bit of consolidation in the near future. The US macro data which came last night, that points to a risk-on sentiment for the risk assets. Looking at the UK ecosystem, the lawmakers are asking for major banks, especially in the country's incoming crypto framework will, so that they can change and regulate the digital asset firms. Now this move forms a part of a wider parliamentary inquiry into whether these banking restrictions are holding back the sector or not. The US Commodity Futures Trading Commission, which is called CFTC, has announced a committee meeting to advise the agency on the policy issues, including potential exploration of how to address crypto regulation in the absence of the congressional action. The CFTC announcement followed a similar notice of a meeting to be held by the US Securities and Exchange Commission, as we call it, SEC. Also, Goldman Sachs has agreed to acquire Neos Investments. This is an asset manager behind the $1.1 billion Bitcoin high income ETF, BTCI as we call it, in a cash and stock transaction that values the firm as much as $2.25 billion. Neos manages about $30 billion across 19 option-based ETFs. The acquisition is expected to lift Goldman's active ETF assets to roughly $80 billion, while its total ETF assets under supervision would exceed the $130 billion mark. And before we wrap, here's a quick check to the changes to the crypto prices over the last 24 hours. And we see there is a variation, but all below that 1% mark on the either side. Bitcoin is on the lower side, down 0.2%, but Ethereum XRP in the positive. But the overall support resistance range is quite narrow, ranging between the $62,000 to $65,000 mark. Well, time to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. The market outlook for the second straight day, consolidation at play, but there is a negative bias. Consolidation likely ahead also. A little bit of risk on rotation is happening, but so much also. It's largely expected to stay with the larger coins, especially Bitcoin and Ethereum. The support range is unchanged from the last analysis. That's around $62,000 to $63,000 when it comes to Bitcoin. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Well, welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Thomas Sarkar, and to all our viewers, wishing you a very happy Independence Day. And thank you so much for tuning in today. And if you send us your stock queries as well, we'll get to that in just a bit. As you look at the markets though, you've seen, especially on the index, as we continue to look at it, largely a bearish momentum. So we've been stuck in this range between 24,200 as well as 24,500 to 600 odd at the lower end of that spectrum right now. And hopefully a better second half session, if possible, could lead to some momentum and ending the week. We started off at 24,570 odd at the start of the week. So important to see how and where we end actually. Let's also look at the individual names that are buzzing in trade today on the back of news flow as amongst others, but the heat map also is very important to look at. We've not seen too much of a wild move on benchmarks today, but in terms of individual names, Apollo Hospitals up 3.3%, so is Adani Ports, Adani Enterprises and Eternal as well as Bharti Airtel. These are the top 5 movers, but you can see the larger breadth continuing to be in lead, and that's led by Tata Motors PV. It was a weaker set of numbers for the company, not anticipating too much margin progression in Q2 too, and hence you're seeing that 5% downtick on the stock. Tata Steel, Hindalco are the other losers in trade today. If you also look at the sectoral heat map as well, not too much trend getting formed here too. And let's look at the and only Nifty Metal that's down 1.5%. Nifty Auto also slightly under pressure, but apart from that, not too much to talk about. Also, the advance decline ratio. Before we start taking your stock-related queries as well, you've seen the advance decline ratio continuing to be, in focus as well. Let's pull that up before we get into a conversation as well. That also is the other factor. And probably if we can pull up the advance decline ratio before we go on to the Leap management to talk to them about their IPO as well, as I was saying. Because the advance decline ratio has seen mixed trends. You've seen more...
And joining me is the management of the company, Sunu Matthew, founder and MD of Leap India.
Thank you, Dima.
And Rajesh Malle, who's the CFO of the company. Thank you for joining us on NDTV Profit.
Thank you.
I want to start by asking you that the business is asset heavy, and most of the IPO proceeds are going towards debt repayment. what does the current debt look like, and after the repayment, what are the interest costs you're looking at, and also what will be your expansion plans and how are you going to fund it?
Okay, so many questions into one question. So we are raising round about 480 crores for the company. So already we have a very strong EBITDA. We have done 379 crores of EBITDA this time. So we will use around about 360 crores to actually repay the debt, which will bring our debt to equity ratio in a very comfortable situation. And on the basis of that, we have a huge credit line. So we will be good to go for next couple of years. As far as the expansion plan is concerned, we are getting into GCC, Gulf countries, and we have already told the plans about it. Most probably from this month or by 15th of next month, we will be starting our revenue generation from GCC. So these are our initial plans, and rest when the Q1 numbers will come.
So pallet pooling contributes about nearly 50% of your operating revenue. Now, how will you diversify this and grow the other segments like containers, MHE and forklift rentals?
See, currently we get around about 62% from pallet pooling, around about 14% from MHE, and rest everything comes to containers. So this container business, when we talk about containers, it is crates and foldable large containers. That business is growing tremendously, and it is predominantly used in automotive sector. So we are not looking at stopping any sector. We are there into 38 sectors. We want every sector to grow. So currently we are into a very nascent stage of pallet pooling in the country. So whichever leads first, it is absolutely okay for us.
So 2,000 crore of your IPO proceeds are, an offer for sale out of the 2,480 crore IPO. Now with the KKR selling, the KKR-backed Vertical Holdings selling its stakes. Now, how does one look at this as an investor, and what will it change for Leap India's long-term growth plans?
So first of all, you should look at it that KKR has put in more than 2,500 crores into the company, and they are taking somewhere around about 2,000 odd crores. So looking at this, now we have taken them as the promoters. So they are also bound now to not to sell for next 3 years. I also cannot sell for 3 years. They also cannot sell for 3 years. The most important part that you have to look into this is that I am buying the shares. I have put in my personal money. I have bought the shares at the same valuation that I have given it to the shareholders. So they are here for long term. It's a very long fund. So they will be sitting with me for next 5 to 7 years. So there will not be any pressure in the market of they coming on to sell the shares in the near future.
All right.
Right, now shifting focus back to the query session. Let's welcome in our fundamental and technical guest on the show. We are joined by Somil Mehta, the head alternate research of Mirai Asset, Sher Khan, and Samir Dalal of Natwarlal and Sons stockbroker. So firstly, to start off with, the first query is coming in on Tamil Nadu Mercantile Bank. Sitesh Roy has been holding this counter since the Q1 numbers and wants to know whether should he continue to hold the stock or exit. Any stop loss if you could suggest on this. Somil, any view on Tamil Nadu Mercantile Bank?
My view would be positive on this bank. Overall, the trend is up. In the very short term, you can definitely book some profits because we've seen very good rally on this bank. However, if you have a medium term to long term view and if you're holding on to it, keep a very strict stop loss around 790. So my view is positive in the medium to long term.
Got it. Well, the next question is from Satyan. He's asking about GMR Airports, something he's been holding on since the last 4 months at 95. Stocks back to that level of 100 where it started that rally from. He's asking if he should still continue to hold this particular position. But Samir, welcome to the show. Very good morning to you. Firstly, both of you guys looking very dashing in kurtas. But Samir, how are you looking at GMR Airports now?
Good morning, Puneet, and thank you for inviting me. And you all are looking dashing as well.
Thanks so much, Samir.
And so GMR Airports is a unique, interesting play in the sense that, the airport space, there are going to be pretty much two listed players eventually. One is, I think, at the moment GMR, and the other one will be Adani whenever it comes up for listing. Look, the expansion that can happen and the growth that can happen from the increase in the airports and the usage is great. But this is a very capital intensive business. Returns come much later. ROEs are questionable. So from that perspective, it's difficult to take a long-term call right away on whether this is a long-term investment or not to be made. For me, at this point of time, it's an avoid. You're making some money of it. You bought it at 95. I say take the money. There are a lot of other companies which are capital light in nature, high ROE businesses. Invest in that. This is going to be something that is going to be painful for a longer term period.
Okay, the next query is coming in from Rajesh from Bangalore. It's on HFCL. He's been holding on to this counter. He's having nearly 300 shares, bought at a price of 96. He wants to know whether should he continue to hold the stock for the next 2 years. The stock has run up significantly from his buying price. Any view on this, Samir?
Yeah, we do know about this company. Look, the stock's done extremely well for you. It's more than doubled. Look, they're making wires. They have some defense products and electronic products and all. But the real story of growth has been the fact that, the data center expansion is going to lead to a great growth in the wire segment, the fiber optic cables and the wires that they make for the data centers. Now, this is something that everyone's just latching on to, and I don't think it's going to play out the way everyone expects it to play out. So for me, both HFCL is a sell and so is Sterlite Tech at this point of time. I'm not denying the fact in the near term, everything looks hunky-dory and they may continue to go up, but the growth will be unsustainable over a longer term period. And at that point, what will happen is you will end up holding this stock at higher prices and not get any return. So avoid it. And if you have, for you should actually book your profits.
Got it. Well, let's go across to Gurugram now. Nishant is dialing in for a stock related query. Nishant, very good morning to you. What's your query?
Hi everyone, happy Friday. I bought Astra Micro at 1085, around 55 shares. So I want to understand if I should buy more, hold or sell it. So
You buy this in the recent correction, Nishant?
Yes, during March, April time.
Well, I think it's turned out to be a very good bet for you. Many congratulations. Any view here, Samir, that you can offer Nishant? He bought a growth stock at a good price. Should he continue to ride that wave?
So the defense space is going to continue to do well. The problem only lies in the fact that valuations are absurd, right? Trailing earnings, if I'm not mistaken, above 65, 70. Forward earnings, I think, are also around 50 odd. So from the fact that valuations are rich, upside is going to be limited. But given the kind of spend we are expecting to continue to happen in defense over the next few years, I guess you could hold on for another year or so. I think these premium valuations can sustain for another year or so. But at some point in the future, they will. So keep a close watch on it. If it goes up closer to 2200, I'd say book profit. But don't add it.
Right. The next query is coming in from Vedant Garg. He wants to know the buy targets for Gopal Snacks, and is the current level a good time to buy, and any targets if you could give on this, Somil? Somil, your view.
Gopal Snacks has been in the downtrend, so my view is definitely negative at this point of time in the medium term, in the long term. However, in the very short term, you can keep a stop loss around 268. There is a small spike I'm expecting towards 300 levels. So 300 would be my target, but not in the medium term, not in the long term.
Got it, Somil. The next one's on HEG. Akhil from Pune holding shares at 542 odd. Samir, he wants to know if he should continue to hold this for the next 3 to 4 years, or is it too expensive of a story even to consider and add more right now, is his question.
So honestly, I would say hold on to it. In fact, on corrections, add on. I'll tell you very simply why, right? They are making graphite electrodes which go into making steel from the electric arc furnace route, which is using scrap steel to make fresh steel, right? New steel. Not new steel, but steel. Now, this this part of the business is going to keep growing for electric arc furnace investments because there is going to be more and more scrap steel available for recycling. Second, they're also going to be making graphites, which are going to go into electric batteries, the plant for which is under set up. And once that gets going, what you will see is the top line and profitability. The initial phase, of course, the profits will not grow, it will just be top line growth because the cost will come immediately, but the profits will take a while to come. But as all of that materializes and finishes, what you will see is the profitability growth. Third, this is there are very few players in the graphite space. I think globally 6 players. 2 are in India. One is Graphite India, the other is HEG. HEG's got a very nice large capacity and they have a large investment in one of the companies in the international markets. So they kind of have a good grasp and good say on what the graphite pricing eventually should be. The only risk for them is the needle coke that they purchase, but I think that will be a pass on for them. So for me, it's a hold on and corrections buy.
Okay. The next query is coming in from Vijay from Chennai. He wants to know the short-term targets for Maruti Suzuki. Saumil, any view on Maruti?
See, I'll be positive on autos overall. M&M, Maruti, Bajaj Auto, all of these stocks are looking good. Two-wheelers are consolidating a little bit. However, two-wheelers are doing good. Four-wheelers are consolidating a little bit. So Maruti, Suzuki probably would consolidate around this area, around 13,500, 13,800 levels. But I'll be expecting the stocks to break the consolidation on the upside. Specifically for Maruti, the breakout levels is above 14,500, and once it breaks out and confirms the medium-term trend, the next level on the upside would be 15,500 and above.
Got it. Also, Saumil, a quick view on Aarti Industries as well. Sanjay from Bengaluru bought the shares at 493, asking if we should continue to hold on, sell out, or average down. What would you recommend?
Hold on to it. No need to add on to it. There is a triangle breakout which happened a couple of trading sessions back, and it has been retested today. So I'll be expecting this stock to continue moving up. Keep a stop loss around 480 in the very short term. If you're holding it for short term, keep a stop loss around 480, and the 200 daily moving average will be a base for the stock now, which is 450. So these are two support levels. I'll be positive in the short term, medium term, long term, all 3 time frames.
The next query is on Newgen Software. Govind from Hyderabad is holding around 1,000 shares bought at a price of 900 rupees. He wants to know, should he add more or book losses? Any view on this, Samir?
Sorry, no coverage on this one.
On charts, any view, Saumil?
See, my view is negative on this stock. The breakout levels are above 620. If it closes above 620, only then we'll probably will be able to revisit and think a little positive. But at this point of time, the trend is negative, and I'll be expecting the stock to go down till at least 490 or probably 470 as well.
Got it. Well, the next query now coming in, and this one's from Andhra Pradesh. Pradeep dialing in for a stock related query. Pradeep, very good morning to you. What's your query?
Yeah, very good morning. My query is regarding ICICI Bank.
Okay.
I want to know the entry price of entry time for ICICI Bank for a short term period of time.
For a short term. Okay. Saumil, coming back to you, what's your view on iBank?
ICICI Bank definitely looks good. At my positive side, on the private sector, ICICI Bank looks the most promising, but at this point of time, the private sector banks are not doing good. The large cap ones, the small caps are still doing good. ICICI Bank, I would suggest buy on declines, not at this point of time. The buying rate probably would be around 1350, 1360 levels, which is the 200 daily exponential moving average. And then revisit. Once you get a reversal signs in the stock, then you can enter there.
Got it. Well, let's now start the rapid fire round in this edition of the show. Samir as well as Saumil, you know the drill. First question is from Padma from Bengaluru. Saumil, she actually sold BEL unfortunately at 384. I don't know but she wants to enter at that 360 level. So I don't know if she made money or no, but I think it rebounded from that 380 level actually. So is there a chance to go back down, or is this a good time to re-enter, Saumil?
I think BEL, if you're holding it for long term, if you're trying to get into it for long term, great stock to be in. I'll be absolutely positive on this one.
The next query is on STL Networks. Shomil, any view for short term?
Short term, definitely positive. Keep a very strict stop loss around 24.80. My targets on the upside would be 31, 32 levels.
Sudhakar from Hyderabad wants to know if it's Lotus Developers is a good time to buy right now. Samir, any coverage, if not, on the space?
Nothing on Lotus Developers, but real estate remain positive.
Next query is on LG Electronics. Manideep from Andhra Pradesh has a few shares bought at a price. Okay, he has bought it at different levels. Should he continue to hold this counter for long term? Samir, any view?
Oh, it's a tough one to answer, but I mean, for me, valuation's not the comfortable, but growth is there. So the question is which way will it swing? But I would not be one to invest. I would actually sell.
Rajesh from Hyderabad actually wants to buy either Naveen Fluorine or BSC. Either of those counters, Samir, I know different industries, but for the long term, anything that you like?
Both very expensive, BSC and Naveen Fluorine. I would avoid both. There are lots of other counters you can invest in at this point.
Next query is for you, Samir. It's on CG Power. Arvind from Chennai has few shares bought at an average price of anywhere between 780 to 1500 rupees. Can he hold this counter for the next couple of years?
Yes, absolutely. Hold on to it. Then the expansions that they're doing in the semicon space, the power, the transmission distribution space, all of that is going to do extremely well. This is definitely a hold.
Ms. Sita from Telangana is holding on to Tata Motors PV, but at 589. Samir, how did you view the results, and is it a good time to buy now?
Results were a bit disappointing, but that's okay because we expect it to bounce back. But it's a buy for me. I would add on.
The next query is on Max Financial Service for you, Somil. The viewer wants to know whether is it a good time to buy this counter.
See, I'll wait for a breakout. The breakout is above 1670, so I'll wait for a breakout. My view is positive, but I'll wait for a breakout.
Also, Somil, on Juniper Hotels, if you have a view, Harsha from Vijayawada bought these shares at 265. I know not too much historical evidence for this counter, but any view here?
Juniper Hotels, my view is negative on this one. It's been trending down, so my view is negative.
The next query is on Texmaco Rail. It's for you, Samir. Sampath Balaji from Chennai is a long-term investor, has around 300 shares, bought a price of 250. Should he hold or sell?
Hold on to it. If you want to add something, add Titagarh Rail.
Vari Renewables, our viewer Radha Krishnan is at 1150 rupees per share is what he's bought at Sawmill, and wants to know if he should book out or continue to hold.
Was it Vari Energy or Vari?
No, Vari Renewables. Yeah, stocks at 890 odd. He's bought at 1150.
Vari Renewables. See, just give me a second. Okay, so now in the very short term, it's in the downtrend. However, in the medium term outlook, I still believe that it's a good stock to hold on to. My targets on the upside would be at least above 1100, probably above that as well. But you'll have to hold on to it for a little while now.
Okay, the next query is on Cupid, and it's for you, Somil. Arvind from Chennai is holding few shares of Cupid. Can he hold the counter for the next 1 year?
The Cupid is in an uptrend, and I definitely like the stock. It's been in the uptrend for a very long time. Do not add fresh, but you can hold on to it. Keep a very strict stop loss around 240.
Correct. Well, that was the last question of the rapid fire. Do stay tuned. A lot more stock related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already done so, do start sending your queries right now, either on WhatsApp or you can call us on the landline number that is flashing on the top of your screen as well. Let's continue with your stock related queries now. This one's from Sumant, who's from Hyderabad, holding on to Metropolis Healthcare, bought at 590 rupees per share. Samir, he wants to know if he should still hold. I mean, within the diagnostic space as well, the results are good, but is it priced in? What's your view?
So I believe the growth for this industry is still very strong, right? We in India are still predominantly, if there is a problem, go for a blood test, or if there is a problem, go for some scans, right? That trend has to, over a period of time, change. And that trend will become preemptive testing. When that starts happening more and more, we believe that this industry, which has great operating leverage again, will start doing well. Now this could take a little longer. So if you're a long-term investor, stay invested. I think the opportunity is still extremely good. If you are looking from a 1 year kind of view, if you get your price, maybe exit. But if you have 3 years, stay invested. I think there's a lot of money to be made.
The next is a caller query coming in from Hyderabad. Sai, you can go ahead and ask your query.
Yeah, good morning. And
good morning, sir.
I'm holding some shares of LIC since 6 months, I guess. And okay. I've got some in OFS. Basically, I'm a long-term investor. So what sort of targets can I expect? And where do I need to book my profits, because I can't resist if I get 10, 12, 15% of profits. Yeah.
Okay. Samir, any view on LIC and he's currently sitting on a profit. Should he book that or should he continue to hold? What would be your view?
I say hold on, right? So, everyone keeps talking about the fact that the embedded value is so high for LIC, which will eventually come out. And I believe that is very true. The problem is that the selling has not finished. So government has sold, but who has bought those shares, right? So a lot of your PSU banks and certain institutions which were part of the government were mandated to buy into the OFS of LIC, which is why the subscription was so strong. Now, some of these banks do not need to hold on to the stock for long. They will offload it, and that is what is stopping the stock from rising in the short term. If you're a long-term investor, I believe eventually somehow they will get this incorporated and pushed into the Nifty. And when that happens, automatic buying will come through. And as that happens, the stock will move up. So stay invested. Long-term value is good. I think in the very short term, you might see it stagnate. Medium term is also good. So for me, this is a buy on even at current levels and even on dips.
Got it. Got that view, Samir. The next question, and this one's on TBO Tech, a fairly recent listing. We've seen in the last couple of years a good listing come through for TBO Tech. Our viewer wants to know if it's a good time to buy this for the long term, and this is Mr. Rao. Samir, I don't know if you've studied this counter, but how do you look at TBO Tech now?
Cover TBO Tech, I'm sorry.
Okay, let me go to the next question then, and this one's on Grow. Our viewer holding shares at about 185. He wants a really long term, next 5 to 10 years is what he's mentioned, Samir. How are you looking at this? This is Pawan Kumar asking the question, and the question coming in from that, we know about the growth prospects of the company, but how are you looking at it in context with the space as well? We've seen BSE also come off a little bit. We'll have the NSE IPO this year. How are you looking at these companies now?
Okay, so BSE and the exchanges are very different from Grow, right? Of course, they cater to the same thing, that is investments in the market. But Grow is more to do with low cost broking, which is appealing to the mass market and things like that. And then they are, of course, now getting into the MTF book, and they're trying to do some amount of wealth and all of that. So from that aspect, that part of the business, if that can scale up, that is better because that is more consistent revenue. The transactional business which is there is, if for whatever reason the market volatility goes down, I've discussed this multiple times, if the markets fall and interest in the markets by itself reduces, then Grow's business takes a massive hit. So alternatively, we remain very positive on the wealth management side. And there are few companies that are doing that and doing that very well. One is, of course, Motilal Oswal. They have the wealth angle, they have the mutual fund business, they have the credit business, they have the MTF, and they have the investment banking. So they cater to a very vast spread of products in the wealth division, which is something we think is very good. So that is the one we would prefer. The others, if you want to look at from wealth, and Nuvama and IIFL, where it's more steady stream revenue rather than transactional revenue, which is Grow. But Grow will, in 10 years' time, will obviously scale up its operations, so it'll do well. But from here, what your returns will be, maybe mid-teens at best. But I think the other businesses could probably give you accelerated returns of 18 to 20% compounded.
Okay. Well, on this side, let's welcome our new technical guest, Devin Mehta, manager, a technical and derivative analyst with IDBI Capital Market. So the first query coming in from Naga from Hyderabad. He wants to know the good entry level for PFC. Also any targets that you could give, Devin?
Good morning, firstly, and PFC, we have seen that pressure from the higher levels. So overall structure is weak, but if someone wants to invest or trade in PFC for short to medium term, I think a long position should be avoided in this counter. In fact, any bounce back towards 400 can be a good shorting opportunity for trading purpose. On the lower side, the support is placed at 365. So that can be the levels we can watch out for. And on the higher side, the selling is recommended and not buying at current levels. And the stop loss can be 410. So the structure is weak and short trade is recommended on PFC.
Got it. The next question coming through, and this one's from Balasubramaniam, who's the regular viewer of the show. Wants to know about Uno Minda, Samir. He's holding shares at 1267 odd. Asking if he should add more at the current price. Would you recommend that?
So the price is not much different from what he bought it, right?
Yeah.
The auto anks business is something that will continue to do well. From that perspective, we believe Uno Window and the products that they have will continue to grow. But wait a little before you buy. If the stock comes closer to 1100, it might be more of a buying opportunity. At this point, just stay with what you have.
Okay. The next query is coming in on MRF. Right. Ram from Hyderabad is holding 3 shares at a price of 1,34,000. He wants to know the long-term target on this. Samir, do you track MRF?
Yeah, difficult to give a target on MRF because the valuations are already rich. But we believe that the entire tire space in India, we just discussed another auto inks company, but the entire tire space in India, which is also catering to the auto industry, is going to do extremely well. This is one of the easiest ways, we've always said this, to play the auto industry without caring whether electric vehicles, CNG vehicles, petrol, diesel, whatever kind of vehicles comes into, because it doesn't matter, you need tires, right? And not only that, as the volumes keep increasing in India, the replacement demand keeps increasing. And that is where the real money is made. The OEMs, when they sell they make a limited amount of profitability. But when they sell in the aftermarket, the margins are much higher. And as that part of the business keeps scaling up, I think the profitability will keep increasing. So hold on to your MRF. In fact, corrections closer to maybe 110, 120, you can even buy more. We think over the next 2 to 3 years, you can comfortably get a compounded return of over 15 to 18%.
Got that view, Samir. But the next question is from Vikas, who's from Bengaluru. Wants to know about MV Photovoltaic, holding shares at 350 odd, Deven. Asking what he should do with his 350 shares. So he's currently, actually he holds 3,000 shares, pardon me, at 350 rupees per share, Deven. He's currently sitting on a loss. What should be his strategy?
But I think overall the structure is positive. We have seen a good up move in this particular counter recently, and after that we have seen a consolidation. So on the lower side, 305 is the strong support for this counter. So I think one should hold this counter with a stop loss of 305. On the higher side, 333 is an important level. Once this stock crosses 333, we can see some further up move towards 365. So one can hold this counter with a stop loss of 305.
Okay. The next query is on. Okay, the next query is on.
Max Financial.
No, it's on Bank of Baroda. Deepak from Kerala is holding 550 shares of Bank of Baroda at a price. Okay, 550 shares bought at a price of 250. Any short-term target on this, Deven?
Okay, so it is currently trading near the buying price itself. So one can hold this counter. PSU Bank recently have done well, but Bank of Baroda was the underperformer in this sector. But as far as chart structure is concerned, I think 243 can be the stop loss, as the view is short term. And once it crosses 250 levels and closes above this, we can see some move towards 256. That will be the first target, and after that 262 can be the next target. So overall short term view is kind of weak, but again it is trying to sustain above 250 levels. So if it closes above this, we can see some further up move. So 243 will be the stop loss, and one can hold this counter.
Correct. The next counter is on Inox India. Our viewer Arun Selvam is holding shares at 1320. So he's sitting on some good gains right now. Wants to know the next couple of years view, if he should still continue to hold on. Samir, would you recommend that?
So we don't have coverage on.
Anything on the charts, Deven, that suggest any view on the up move? I know it's a very long-term 2-year view, won't be possible, but on the charts, what do you see?
No, I think if I consider the weekly and monthly chart, the overall structure is positive for this particular counter. One should definitely hold this. The stop loss can be 1750. 1750 is a good level where one can place a stop loss because the consolidation has been made in this particular range. On the higher side, there is a resistance around 2100. So once stock crosses this level, we can see a good up move and breakout in this counter, and stock can move towards 2400 levels as well in the coming months. So I think overall structure is positive. One should hold with a stop loss.
The next query is from Damodar Pittu from Bangalore. He has bought 130 shares of Apollo Microsystems at a price of 385. He wants to know whether should he continue to hold this counter or exit. Samir, any view on Apollo Microsystems?
The valuations are rich, right? Extremely high. Look, we believe the growth is there. The defense space, which we discussed earlier also, the opportunity still exists. The products that they have are good. We think this is at best at this point a hold because of the valuation. Returns will be muted over the next year and a half, but over a longer term period, any corrections closer to maybe 320, 330 pose a strong buy. So hold at best for the current.
Got it. The next question coming in is on Bank of India. Murli, who's from Hyderabad, holding shares at 91 rupees per share. He wants to know about, if he should still continue to hold on for the next couple of years. How do you see the PSB bank space, Samir, and is Bank of India in one of those picks?
The Bank of India is also something you can hold on to, but do you want to be a little more aggressive in the banking sector, or do you want to just be a passive investor is the question, right? So for me, because Bank of India is just like something that is going through the motions, I don't see aggressiveness. I don't see them taking calls, which is going to allow them to do something exceptional. For me, it's something that's avoidable. If I had to take a pick, the best in the banking and PSU banking at the moment is, of course, SBI and followed by Canara Bank. But SBI, the valuations are a lot higher compared to the rest of the PSU banking, right? So Canara Bank and Bob, which was discussed earlier, are the top two picks. But not that you're going to lose money in Bank of India, but I think you'll make more money in the other counters.
Okay, the next query is on EPAC Durables. The viewer is holding around 1600 shares, bought at a price of 390. Should he hold or sell? Any view on this, Devin?
No, I think sell. Try to exit on bounce. If any small bounce occurs towards 230 odd levels, one should try to exit. Overall structure is weak. We can see some further corrective move towards 197 in this counter. So try to exit on bounce.
All right, let's go across to Satish now, who's dialing in for a stock-related query. Satish, very good afternoon, very good morning to you actually. Welcome to the show. What's your query?
Sir, Manipal Health I purchased through IPO. I've got it, 25 shares. I can hold it or?
Got it. And you are in good gains, so congratulations for that. But how are you looking at this space, Samir, now? If not a direct view on Manipal Health, what would be your recommendation on the hospital space? We've seen multiple news flows come through, parliamentary panel commissions, recommendations. How are you looking at the space now?
So, across the board, Puneet, valuations are really expensive, right? Manipal is no different. Now, the question is, which one of the hospitals do you really want to own and which one has the growth? So for me, when Apollo was trading closer to the 7,000 levels, we thought that was a good opportunity to enter for the simple reason that, they're going to go through a demerger where you're going to get the testing arm separate, you're going to get the pharmacy arm separate, and then the hospital separate, and then you could hold on to the hospital, which would have a slightly lower valuation compared to the rest, like Fortis or even Manipal or that. So, look, the opportunity for growth in the hospital space because of the kind of just simply put, the kind of population that we have that needs catering to is huge. Plus, you have tourists coming in because our healthcare is a lot cheaper than international markets. So, that is something that will grow. It's just that can these higher valuations sustain for the next 3 to 5 years? That's the question that we've got to answer. And at this point of time, I'm a little skeptical that these high valuations can sustain. So I would book profits. If these stocks fall, whenever they fall over the next year and a half, that might be an entry point. As for the regulations which you discussed, Puneet, look, the room rate capping is just one aspect of the thing. The bigger charges in the room today, when you go to the fanciest of hospitals in Bombay, and I can just tell you about that, your room cost as a percentage of overall cost of the treatment will probably be 5 or 6%. So capping that, you're like, it's not changing the dynamics of the hospital business. Yes, some amount of profit will go down, but they'll make that up through some other, the OT charges, or the share that they get from what the doctor's fees are. All of that could change. So I don't see that as a negative, but valuations, yes, I do see as a negative, and that is only corrections I would probably look at buying. I wouldn't buy them at this point.
Got it. Let's go across to Vijayawada now. Bindu, who's a regular viewer of the show, now joining in for a stock-related query. Bindu, very good afternoon. What's your query?
Good morning. So I'm holding Vishal Mega Mart 500 shares at 110. So I want to know about the 6 months view of the stock, and I want to even add more. At what price I can enter for adding more?
Enter for adding more. Okay, so you want a view on the charts then, 6 months shorter time frame. So can we get you a view on the charts, Bindu?
Yeah.
Okay. Deven, how do you look at Vishal Mega Mart? Stock has seen some correction, but what's your view on the charts now?
No, I think the overall structure is weak. I think one should wait to add more at current levels also. In fact, we can see some further correction towards 98 odd levels. So overall structure is weak. One should try to avoid adding more on dips. But in fact, if it negates the current structure, which is of lower top, lower bottom formation, and if it breaches above 112, then I think that will be a good time and opportunity to add more. It will be on the higher side, definitely, but at that time we'll see some kind of a end of corrective move and start of new fresh up move possibly. So 112 is the resistance. If it closes above this particular level, we can see some further up move towards 120 levels as well. So adding on dips is not a good idea for this particular counter. I think we can see some further corrective move towards 98. Try to avoid adding more at these levels.
Well, the next question coming through, and this one's on TVS Motor. A viewer wants to actually know if it's a good time to buy now, and this is Suresh asking the question. Samir, actually, we've seen a massive run-up from that 3,000 mark, which it corrected to, and then a very big run-up. The valuations, of course, are most expensive for this counter. So should she wait for some correction before entering?
Yeah, absolutely. Wait for a correction before entering. All of them are expensive. Bajaj, the cheapest of the lot would still be Hero. And if you want to take an outlier in the space, it's take a very small position at this point of time is my suggestion. But Ola Electric, I think a turnaround when it comes there, that stock could actually rally quite a bit because Ather has already run up quite a bit. Bajaj is quite expensive. Aisha is quite expensive. TVS is quite expensive. So Ola and Hero, but Hero's also run up recently. So a small correction before you buy that.
Samir, it took just 15 minutes for you to send across the first bouncer for the show as well, because Ola Electric, I think, is the first time you've spoken about it on the show, but got your view, and I think we'll probably take this up with you again in a more detailed discussion, because right now it's the time for the rapid fire round. You both know the drill. The first question is on Marksons. Kishore from Hyderabad bought these shares at 270 odd. What should he do with this counter now, Deven?
So overall structure is good. I think one should try to hold. Overall pharma stocks are looking good. Hold with a stop loss of 280. We can see target towards 340.
The next query is for you, Samir. It's on Cochin Shipyard. Ravi from Mumbai is holding the stock at a price level of 1100 rupees. Should he continue to hold or exit?
So he's got it at a good price. Hold on to it. If it comes back to that 1100, buy more.
Deven, the next one's on Manappuram Finance. Our viewer bought shares at 355 and asking a stop loss and a target.
So I think one should hold with a stop loss of 322 levels. We can see up move towards 365.
Next query is on L&T. It's for you, Samir. Siddhi Ambre from Mumbai is holding 270 shares, bought at a price of 4,047. Should she hold or sell from long-term perspective?
Hold at this point.
Hindustan Zinc as well. Deven, our viewer bought shares, I think at 595 and wants a 6-month view on the stock.
So I think we have seen slight corrective move in this particular counter. Stop loss can be around 555. If it closes below that, one should try to exit. And on the higher side, 600 is the resistance. If it crosses above that, we can see some further move. But 600 will be the target.
The next query is for you, Deven. It's on Wipro. Siva from Amravati is holding 5,000 shares, bought at a price of 201, currently sitting on a loss. Should she continue to hold this counter for the next 3 months?
I think exit on bounce around 190.
Next one, Gillette India. Our viewer George wants to know if he can add this for the next couple of years. Samir, would you recommend that?
No, not at this point.
The next query is for you, Devin. It's on Sun Pharma. Asta Sabarwal is holding few shares at a price of 1,830. Should she sell or hold?
I think one should try to book profits.
Next one's Office stocks trading at 269 is what, and Manoharan actually bought it at 269. Stocks very closely there. But Samir, any view here if you track this counter by any chance?
So, the stock has corrected quite a bit, and because of which the valuations are looking decent. So I would actually add at this point.
Next query is for you, Devin. It's on Bandhan Bank. Aditya Gaur wants to know whether should he buy or avoid Bandhan Bank at current levels.
I think avoid this counter.
The next one's Olectra Greentech. Devin, a viewer wants a short-term view. I think the results were a little weaker and hence stocks down today. But any view on the stock?
I think structure is good, holding about 200-day exponential moving average. 1290 will be the stop loss, one can hold. And on the higher side, 1400 is the resistance.
The next query is for you, Samir. It's on Irida. Sriram from Hyderabad is holding 100 shares at an average price of 180. Should he average more or sell?
Sell.
On time, Technoplast. Edwin has bought these shares at 197. Devin asking a target.
I think try to avoid. In fact, try to exit on bounce.
Next query is for you, Samir. It's on Tilaknagar Industries. S. Sriram from Vishakhapatnam has bought few shares at a price of 335. He's a long-term investor. Should he hold or sell?
I don't have
Any view here, Devin, on Tilaknagar?
I think overall the structure is positive. 550 can be the stop loss.
Correct. Next one's Keynes Tech. And Samir, I don't know how you viewed the quarter one results. Our viewers watched the 3122, suppose the correction. Any view now?
The results were mixed actually. It wasn't that great, right?
Yeah.
The problem is that this is a sector you can't totally avoid. So at best, I would say hold at this point. I wouldn't give any more recommendation for buy because I'm not totally convinced that the turnaround is there.
Right. The next query is on GE Shipping. It's for you, Devin. Bharat from Andhra Pradesh is holding 260 shares, bought at a price of 1,560. Should he continue to hold or book losses?
Book losses. The stock has breached 200-day exponential moving average. Try to exit.
Raj Shekhar is holding on to Vari Energies. He bought these shares at 2149, so got in fairly early here. Samir, any view? Should he book out his profits now or wait on?
No, please. I'm buying this stock. I'm very positive on Vari. Trading at 17 times trailing earnings. We think the opportunity is very strong. We have a target price of 3,501.
The next query is for you, Samir. It's on Vedanta Limited. Uma from Bangalore is holding 158 shares at a price of 286. Should she continue to hold this?
Sell.
On Azad Engineering as well, Samir, Sriram Raghuram holding shares at 1707. Any view on this counter? Has been a very strong performer.
Valuations are absurd. Book profits.
Okay.
The next query is for you. Devin. It's on Netweb Tech. He's holding, Murli from Hyderabad is holding few shares. Should he continue to hold or exit?
So I think the structure is positive. One should hold with a stop loss of 4785.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Samir as well as Devin, thank you so much for helping us solve all these queries over the last half an hour as well as an hour. Appreciate your time and inputs. But viewers, out of time on this edition of the show, thanks so much for watching and helping us and actually giving us your 68 queries as well. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where we get you interesting companies based on their earnings and also a lot of other stories as well. But it is the flavor of Independence Day, and of course, happy Independence Day to all the viewers of KYC and NDTV Profit. But before that, I've got a Desi company for you. It's the official Indian Railways online ticketing portal. I'm sure you must have guessed it by now, but if you have still not guessed, I'm going to give you some more hints. DIs are increasing stake in the company a little bit, but nevertheless they are doing. Another hint I would like to give you about this company in KYC today is the valuations are at 5-year low for this company, and stock itself hasn't performed much, but weak numbers have come in. So is there any value here? That's the big question to be asked. And the company in focus is pretty much interesting. It was established in the year 1999, so it's technically a Gen Z company. The company in focus, I'm sure you all know, is IRCTC. Today we'll be talking about this, but there are so much overhangs in the stock. We'll try to get that from the management, and that's why I've prepared a list of questions, which is very much important. Earnings, especially on the margins front, there is a pressure. Will that continue or not? Going ahead, that's the first question we'll be understanding. Has the travel been impacted because of geopolitical crisis? And if yes, how much of that impact is coming in the railway bookings? Also, the catering and the rail near business, how is that looking? All companies looking, of course, in the tourism segment also, and when in terms of growth, the update on the new website, this upgradation itself is a very, very big trigger for IRCTC. Also, we'll try to ask,
this segment of tourism segment. And recently they introduced even Japan tourism packages, pretty interesting, coming in from IRCTC. Also, other question would be the Vande Bharat sleeper cars. What's the potential here? What kind of cross-selling can be done? So these are the important questions we will try to understand from IRCTC. But let's understand what's the business of IRCTC. I'm sure a lot of you know, you must have opened your phones, websites to see the website. It's the official Indian Railways online ticketing partner to start with. But more details is it was established in the year 1999, manages online ticketing, catering and tourism segment as well. It's just not ticketing, it's a Navratna enterprise as well, as we talk about it. And going ahead, also another important factor about the company is it holds a virtual monopoly in online train bookings. Of course, there are some private players also like Ixigo, which are indirectly the competitors of IRCTC, and they have exclusive branded packaged drinking water which you generally buy. It's called Rail Neer. I'm sure you know the logo also about it. Also, they have premium trains also like the Maharaja's Express, specialized Bharat Gaurav trains, and this is where the magic happens, especially for the tourist coming in from foreign. 89% of tickets were booked online, so you can imagine it is the future. Almost is expected to click that 90% mark as well. But when you book something in IRCTC, it's a very interesting fact I would like to talk about. The verified Aadhaar linked user IDs can book up to 24 tickets per month. Of course, if it's not verified, then you can do max at the most 12 tickets. So this is a very important booking basings if you are going through IRCTC. Also, it handles an average of over 7 to 12 lakh bookings a day. Can you imagine how big this is? Also, let's talk about the second fact for IRCTC. The portal serves over 10 crore verified customers. Look at the scale, look at the data which IRCTC manages. Q1 performances, largely catering segment has done well, and even the tourism segment we see a 14% growth has come in when it comes to the revenue analysis. What was muted was of course the online ticket. Con call, 4 important things. The margin weakness is driven largely by tech investment, and that happens since it's technically a platform stock. Second important con call is the catering margins. That should normalize towards the historical 10 to 12% range going ahead. Third important con call highlight which I took was the rising Vande Bharat volumes. That has remained a key driver for the stock, and we're going to look about that reason as well, and the meaningful potential from the non-fare revenue segment, the payment aggregator business, that is of course subject to RBI as well. These are the important con call highlights which you should note down. But what may work for IRCTC in current situation? Majority of the analysts are having a buy rating, and do wait with me. One of the last ratings in KYC is analyst take, and I'll give you the exact number. Valuations are attractive right now. Is it the lowest? That you need to wait it out for us. The third reason is the monopoly nature of the business. Will this continue or not, or will this be questioned? That's the ask. The tech upgrades are going on, and once the benefit starts coming in, there is a good volume up move we can expect, especially if you understand tech. But what may not work for IRCTC is the declining return ratios because of these investments in tech, and that's the slide which is coming in. The platform stocks are out of flavor on the Lal Street right now, and that is where maybe the valuations are attractive. There is rising competition which I mentioned earlier. So these are the concerns which might be there for IRCTC, and of course the margins part, because of this tech investments, and management commentary also looks like there will be pressure at least in the near term, next couple of quarters to be honest. So this is the entire picture for IRCTC, the good, the bad. But let's talk about the ratings also, the rating parameters in KYC. These are the general numbers which we always track. There's a strict rule of thumb in our analysis, and I've got you these rating parameters to judge the company. Of course, this includes return ratio, street cred, and shareholding also. This is over a period of time. Valuations, we take a 5-year view for the company itself, how it's actually panning out. And last but not the least, the analyst take. How many analysts are having a buy rating, sell rating, or even a hold rating? Let's talk about income statement first and see what's happening here. Largely, the income statement is pretty decent, revenue going up almost 14% CAGR, but the concern starts coming in when it comes to the margins. If you can pull out the Q1 numbers where I mentioned you, there was a little bit of concern coming in, and which is there here. That is where we see that some concern comes in, and because of that, to balance things out, I'm going to give this a neutral rating here. Balance sheet, it's largely very nicely put. Margins is also like a decent 35-36% margin does come. So it seems like it's a normalized margin. Not much of a change, to be honest, happening. But yes, quarter basis, just Q1 numbers is something which I looked at. So I've given this a neutral rating. Balance sheet, let's pull out and see what's happening in that. It's a largely well capitalized balance sheet. The business model is such, it's a platform. It'll always have a very good chunk of cash, also almost 2,800 crore plus of cash is there. So there's no problem as such. That's why I'm going to give this a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Let's talk about the cash flows. This is largely a very stable business model, and cash flows will also be quite lumpy. See the jump coming in from FY25, a good jump in FY26 of 1,274 crore rupees. Even the conversions have been pretty strong. So net, even if you include the tech investments, it's not going to impact so much on the cash flows. It's a very cash heavy business. So I'm going to give this as well a strong thumbs up. But return ratio, let's see what's happening here. In this business model, the return ratio is pretty high, around 40 to 50% for ROC, and they have maintained that, though a little bit of dip has started coming in and it has come below the 50% mark in FY26. So a little bit of concern definitely comes in, but it is still a very high rate, to be honest. The rate of fall is also not that alarming. So I'm going to give this a neutral rating when it comes to the return ratios. Apart from the return ratios, let's talk about the shareholding. Largely unchanged, government owns it. FIs, there is a slight dip from that 7%. It has come down to, you could say, 4%, but DIs have been lapping up, especially last year. This is where slightly they have increased their stake to around 15%. So it's net quite neutral, no major action is happening. So I'm going to give this a neutral rating as well. But let's talk about the street cred, how much the stock has actually made returns for the investors, and the data is very dismal. From 2025 highs, the stock is down 32%. You beat 2026 return or even 1 year return, the stock hasn't performed. But the biggest pain is for the long-term investors. Last 5 years, the stock hasn't even given a positive return. It's down 5%. So whichever way you look at, short-term, medium-term, or even long-term, there is a concern, and because of that, I've given this a strong thumbs down when it comes to the street cred. Valuations, on the other hand, if there is so much fall, the valuations do become attractive. So the 5-year average is at 52 times. Currently, it's trading at 41 times. It's at the cheapest 5-year levels which I could think of. The peak levels were almost 2 times of this at 115 times. So nevertheless, the valuations look very, very cheap right now. But the question is Dalal Street willing to give that much of premium valuation to a platform name, and that also railways? Because both of these factors are technically out of flavor right now. So because of that valuation, I'm going to give this a strong thumbs up. The last one is the analyst tech. Let's see what's happening here. One side, there are totally 8 analysts tracking. There's nobody talking about a hold. There's a sell coming in from 37.5% of the analysts, but on the majority side, 62.5% analysts still feel it's a buy rating. 12-month target price, of course, from the current levels, 20-30% upside potential, is at 606 rupees per share. So it is still a neutral taking when it comes to the overall analyst take. But we have discussed with you all the 8 rating parameters. Let's do a small revision and give the final KYC ratings for IRCTC as well. Income statements was neutral, but looking at balance sheet, cash flow, it is pretty strong, no major concern. Return ratio, slight dip definitely coming in, but returns haven't been made, and that's the big concern coming in for the street cred. And because of these lower returns, the valuations do look attractive, but the analyst community is divided for this counter. So overall, let's give the entire KYC rating for IRCTC 5 out of 8. It's largely in line to slightly positive for the general numbers which we give in KYC. So it'll be a very interesting conversation we'll have, but time for a quick break. And on the other side, we'll be having a chat with Rahul Himalayan. He's the CMD at IRCTC, and he will answer to all our queries. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning.
Welcome back to Know Your Company. Now we are joined in by Rahul Himalayan. He's the chairman and MD of IRCTC. Good afternoon, sir. It's always a pleasure to have you. Sir, did you see the impact on the travel which has happened in the first quarter due to the geopolitical crisis? And do you think this sustaining in the second quarter as well?
Overall, we had a revenue of 1370 versus 1160 in the quarter of financial year to 2025-26. So in this, as far as the impact is concerned, first I would like to talk about the revenue mix and all. We saw that in this 1370, 732 came from catering, 109 from rail need, and internet ticketing 361, and from tourism 168. So there was a delta of 210 crores between 1370 and 1160. To this delta of 210 crores, catering itself contributed to 181 crores. So catering has a margin of around 10 to 12%. Conventional margin I'm talking about. Internet ticketing has around 80 to 85%. The tourism has got 14 to 15%, and rail need 14 to 15%. So one thing is that 181 out of 210 crores, which enjoys only a margin of 10 to 12%, which is 54% of the total revenue. That was one of the reasons for our profits not scaling up, number one. Number two, the West Asia crisis impacted the rail need segment largely because the cost in the raw materials such as the resins, which account for the preform, caps and shrink rolls, impacted the cost to grow from 55 to 61 crores, that is 6 crores plus. Then there is the HR decision we took where the gratuity was increased from 20 to 25 lakhs, impacting around, and the post-retirement or settlement benefits. So this impacted around 20 crores, of which 10 crores was booked on catering itself because catering formed around 54%. And lastly, the POC, the proof of concept trains, which were not there in quarter one of financial year 25-26. There were 6 trains in around 4.7 crores of that impact in quarter one of financial 26-27. There'll be around 4 trains in quarter 2 and 2 trains in quarter 3. So these were the debilitating or the retrograde factors which caused our EBITDA to come down. West Asia crisis stabilized, HR will not repeat, and as I said that there is a tapering in the POC. So with all these and with the introduction of new Vande Bharat sleeper trains, we will try to maintain our EBITDA margin 30% plus.
Right. So this 30% plus EBITDA margin likely to come from catering to Rail Neer.
See, our ticketing is also growing to the extent of 5 to 7% as far as convenience fee is concerned. And in tourism, we are going to grow leaps and bounds. From 745 crores, we have reached 890 crores. This time we are planning 1,000 crores plus. We are planning the induction of a Maharaja's rake, whether that will be able to see light of the day in this financial year or next. Bharat Gaurav trains, we have proliferated beyond the country. In the Indian subcontinent, we have gone to Bharat Nepal. We have done Bharat Bhutan, with Bhutan being managed by road. Then in Northeast Discovery, we have reached even Sairang, which is the 6th northeastern state to be connected by rail. Then we have gone to Bharat Sri Lanka. So that spirit of pilgrimage and spiritual, we are encompassing and enveloping the entire subcontinent. In tourism, we are also focusing on MICE, meetings, incentive, conference and exhibition, an area where we were not much into. But with that also, we have divided the entire country into 5 clusters, fixed service providers, whether it is various ministries, PSUs, agencies. So that is one business which will help tourism to grow. And with the coming up of the unified portal where IT and tourism will meet at crossroads, there will be an interface where 5 factors such as scalability, then UX, UI experience, the technology, then financials, and lastly the marketing regimen will help our e-ticketing customer base to use the tourism products of IRCTC. Other than this, in Rail Neer, we have got expansion of 2 plants, augmentation of 2 plants, that is Danapur and Ambanath. Ambanath from 2 lakh bottles per day to 3 lakh, and Danapur from 1 lakh bottles to 2 lakhs, and 4 new plants coming up, Prayagraj, Mysore, Ranchi and Bhagalpur. So with this and in catering with anticipated around 15 to 20 new Vande Bharat sleeper trains coming up, we are expecting to maintain a EBITDA margin of 30% plus.
And Rahul sir, a lot of tech investments are happening and everybody is waiting, including the consumers, about the new website. What are the timelines for this upgradation?
As far as the new website, it has already been launched as far as the beta version is concerned on 15 July. Now around 80 to 85% utilities and interface has been developed on that website. Anytime, maybe 15 days down the line or in this quarter, we will be able to come up with the full-fledged version of the website, which speaks about no advertisements, no captchas, no pop-ups, and giving a seamless booking experience with faster ticket booking speeds to the user.
And Rahul sir, looking at the current revenue breakup, it is skewed towards the catering and even the internet tourism. How is this likely to grow going ahead? A lot of new plans have been announced by RCTC also, but how does this revenue mix change?
Yeah, like in catering, you have seen that there has been a growth of around 34% itself as far as the revenue is concerned. In tourism also, in the profit margins, there has been a sizable growth of around 46%, in revenue around 14%. So with tourism, with new concepts coming up, catering and internet ticketing are more or less work in controlled environments. But in internet ticketing, like you saw in 24-25, we were 1,200 crores, 800 crores for convenience fee and 400 crores for non-convenience fee, that is a non-fare revenue. In 25-26, we were 1,500 crores with 1,000 for convenience fee and 500 for non-convenience or non-fare revenue. So we will also focus more on the non-fare revenue and using our e-ticketing expertise like in collaborating with various metros, as we've already done with DMRC, NSRTC, and being a e-ticketing expertise being utilized in like Char Dham, Kedarnath Yatra, with the Lakshadweep ticketing administration, Andaman Makruz, and all these areas where there is no component of railway, but we will utilize the expertise in providing services to them. So in this way, we are planning to grow.
Right. And what will be the numbers for this year, the growth numbers which we are targeting?
Growth, like I said, that we'll try to maintain the margins in catering 10 to 12%, rail neer and tourism around 14 to 15%, and IT around 7%, because convenience fee has more or less stagnated. With we are reaching around 90%. It is around 88.7%. But with all this, the exact figure I cannot give you, but we'll try to grow year on year, maintain a CAGR as we have been doing in the last 3 years.
And sir, speaking of Vande Bharat sleepers, as they are coming, what kind of growth we can expect across your verticals,
See, talking about cross traffic from other people diverting to railways, that is of course there, because railways, whenever we talk about a longer lead, then people try to shift over to railways. But with more Vande Bharat trains coming up, like 15 to 20 trains may come up in this year. That is a Vande Bharat sleeper, which have got a longer lead, more capacity, plus a passenger growth of around 8%, plus augmentation in the existing trains. In this way, our two segments will benefit. One is the catering, and second is the internet ticketing, with the growth in trains and passengers.
Well, fair enough. You have given us an entire picture of how the growth looks like, and especially second quarter is something which we will be targeting for the company's website to come in. Beta version is already there. Thanks a lot, Rahul sir, for taking out your time and giving your views on the company and the industry as a whole. It's always a pleasure to have you with us at NDTV Profit. But let's do a revision of the KYC ratings, how things have panned out. Income statement has, largely been decent enough. The balance sheet cash flow, the way the business model is, very cash heavy business model, so that's not a problem. Problem little bit is coming on the tech investments, and that is eating up the margins and maybe the return ratios as well. And this is what the numbers we have given. So we try to make it as fair and square as possible in our analysis. Street cred, however, has been a big pain point. If you're an investor, long term, you haven't made money last 5 years, this stock has given negative returns, and also in the short term also seems to be a bearish sentiment. Looking at the numbers, the Q1 numbers were on the weaker to mixed side, and the valuation makes it quite attractive, especially if you look at the 5-year average valuation, that is at its lowest levels. To put that in perspective, 12-month forward P is 41 times. Analysts take both sides, it's divided, when the overall KYC rating after talking with the management also stays at around 5 out of it, largely in line to slightly positive. But yes, it's going to take some time once we start some more green shoots coming in this counter. But as of now, it is out of flavor in Dalal Street, be it platform stocks or even railway stocks, and now you add both of them up. But this is what you get. So for interesting stories like this and much more, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions.
Hi, thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew. With me is Hiral Dadia. And first of all, from both of us and the entire NDTV family, here's wishing you and your families a very, very happy Independence Day. It's a day of celebration for everything that has been achieved over the last 79 years, but certainly it's a celebration of the optimism and the promise that India holds for all of us. And to celebrate this, we've got a stellar lineup over the course of the next half an hour, starting with Sandeep Tandon, the founder and CIO of Quant Mutual Fund. Sandeep, thanks so much for joining us today, and wish you and your team as well a very happy Independence Day. I was doing a little bit of reading. Hiral and I actually were doing this earlier today, and we discovered that you started your career around the time when India was completing 50 years of independence. And so therefore, the first question that we have for you is, when you were starting out and you were looking at India at 50 and looking forward at the opportunity that it presented, how much of that has been achieved in your opinion? And two, as you stand right now, after all of these years, what are the promises that you see at this moment?
So, frankly speaking, a lot of things I've achieved, but expectations bound to be on the higher side. But the way I look at now, I think it's a India moment, and maybe in next 15 to 20 years perspective, if I talk about, I think demographic cycle in our favor. We are extremely constructive on India as a asset class, if I have to say, and maybe by 2047, 50, we're going to be in a structured bull run, because the changes and reforms which we have seen and the turmoil which you are seeing in the global market, and I think this turmoil is going to stay there for a slightly longer period of time. With that background, and on a relative basis, I think India has done remarkably well, and we are If I have to say something has changed in India, so if I have to talk about purely from a perception analytics, India perception has changed, which means India P multiple, which is slightly elevated, and it will remain elevated from a longer term perspective. At least till 4750, we expect the P ratios of Indian companies will remain elevated. So I think it's a constructive background, both in absolute terms and relative basis. I'm not looking at next 2 months or next 6 months perspective.
You know, it's an interesting point, Sandeep, that you make, and Hira on this side. We've spoken about India at 50. Right now, India is at 79. Would it be right to say that India is no longer only a promise? It is more of an opportunity that everyone is sitting on. And with India, when you said it's India's moment, would it be right to call it India's Swadesi moment at this time, because you have all your domestic and retail investors who are actually participating in the markets right now, whereas your FIs are still on the sidelines?
So the way I look at, see, from a FI perspective, we have to understand they don't look at absolute return, they also look at the relative opportunities. So the relative opportunities were far better in last 2 years in the emerging market as well as the US market. So obviously money is bound to shift there. But as we now entering the second half of this year, and we are seeing an acceleration in anti-AI theme, which is gaining momentum. And if we believe this anti-AI theme is a reality, then I think India should be a huge beneficiary of that, because we were degraded or downgraded in this AI theme scenario. And now we should be a logical first beneficiary. And that's the reason money is coming back. Even if you look at FIs have come back, not with a bang as we expect, but you have to again look at they were big time seller for last many quarters. At least if I have to say, in last 1 quarter, selling pressure has come down, and month on month we are seeing actually slightly incremental flows only. Maybe large volumes are coming from the passive side, but ultimately volumes are picking up. FI participation is rising. I think background is more constructive as compared to what we were there a few quarters ago, or maybe even last quarter.
Interesting. Sandeep, you and your team are students of data and you back a lot of your decisions based on that. So what are you seeing now that maybe a large part of the rest of the market, in your opinion, might be ignoring?
I think if I have to say, maybe your last 2 years of underperformance, somehow extreme negativity is there, so much deep rooted, if I have to say, is there in the subconscious mind of most of the participants, including best of the money managers, best of the strategists, best of the analysts. That's the reason you are seeing the maximum downgrade about India came in last 1 quarter or last maybe 2 quarters or so. And that mindset is not changing at all. Okay, it has improved, but I think the bearishness is still there. This is the most important data point which I am observing. When we see extreme pessimism, which is getting so deep rooted, then obviously, which means worst is behind. And this is what we said on the 1st April, that worst is behind us. And it's not time to capitulate. It's time to capitalize this opportunity. And if you really look at right from 1st April onwards, market has done extremely well. If you're on the right side of the trade and right stocks, if you are actually you have made money. The challenge is people are not coming out of that shell, which for last 2 years they were unable to perform. And you have to also see whatever has performance which you've seen in the past, those same stock or same sectors are not going to perform going forward. And hence, this is a time to rebalance and rejig your portfolio. And I think if you keep a slightly more constructive mindset, I think you will see opportunities.
Okay. So with regards to where, the next opportunity goes, Sandeep, you're talking about extreme pessimism, which always becomes an opportunity for someone who's tracking the markets like the way you are. Where are you seeing this opportunity? Because a lot of conversations happening that, okay, is it the data center moment, because India is an ancillary play when you talk about AI to some extent? Or apart from that, you're talking about AI and the Magnificent Seven that come in the picture as well from a global perspective. So where are you on it?
See, if we really believe that anti-AI theme has begun in India or globally, then obviously money will come to first sector, which was biggest affected party was the IT services. And we have seen turnaround in IT services. Actually, they have recovered a lot, maybe 20-30% from the recent low which we have seen. That's the one sector. Second thing, obviously, money is now coming towards the hard assets, the real assets where we're talking about the utility companies or the power companies or the ports company or the airport companies. These are the areas which I'm seeing. Auto ancillary is another interesting space which is getting built. So anything related to data center, okay, though it is if I have to pay, when I talk about one side NTI thesis and second side I'm talking about a data center thesis, because India is in the very early stages of that. Okay, I don't think we will get impacted. Rather, anything related to data center, the theme, whether we talk about power, telecom, optic fiber, select IT companies, equipment providers, and that's a theme which I think has potential to last from a longer term perspective. Anyway, power or energy as a theme, we are more constructive, even say maybe till 2032, we are in structure mode. So I think the opportunities are there. Auto Bank has done so well as compared to main auto companies, So defense is another area. If I have to look at it, they also have corrected a lot. So there is some opportunity should emerge in this. And apart from mainline company, I think some of the ancillary companies which you have to look more closely, and they have done extremely well. So it's a question of how well you're able to spot these opportunities.
It's a very interesting point, Sandeep, that you've made, because you haven't in the past been afraid to fish in the deeper waters, right? And therefore, to the point that you're making, and let me also throw in the energy theme to say that obviously globally there is a movement towards more exploration and production, and in various industries, Sandeep, the picks and shovels guys are the ones that are making hay at this moment. So in your opinion, obviously market capitalization is not a factor because depth of the Indian market is getting much deeper. Is that something that you're looking at, the picks and shovel spaces?
Answer is yes. Okay. And as you rightly said, the depth and the breadth of Indian capital market has improved significantly, and which is a very good news from a equity investor or anybody who is participating in the capital market. Though a lot of people are slightly worried in last 2 years, the impact costs have risen, volume have shrunk a lot. But overall, we are not at all disappointed the way even reforms are happening in the financial space. So I think it's a moment which is one has to recently we have seen the CAS has implemented. So it's a new thing which is coming into our life. The most important aspect is that retail investor actually showcase signs of huge maturity as compared to their previous behavior. And this is one of the reasons why we are able to absorb lot many selling which came in last 2 years, particularly from the FI side. Domestic mutual fund flow was so meaningful and retail participation was so large that we were able to absorb. And this is the changing moment. If I have to say what has changed, I think the retail participation has increased. And I think if I don't want to say exponential, but I think it will momentum will remain. And that's a very positive news from Indian capital market perspective, which means even the large selling can be absorbed. And you just imagine a scenario when these FI selling comes down drastically purely on the relative basis, if they see India becoming more attractive, then India has potential to accelerate in terms of return, which we have missed out. So maybe it's a time for small consolidation phase, but ultimately things are looking good for India.
Yes, so things are looking good for India. Sandeep, how do you look at the freedom from energy dependence as an opportunity when you have to take India into context, and how big an opportunity will that be according to you?
See, frankly speaking, the current government and PO himself has taken so much initiative on the green energy side, which is playing out very well. Obviously, now challenge is more on the transmission side. So we expect a lot of things happening out there. And then the storage aspect, which is also important challenge. But what the good news is that both from the public sector and the private sector, we have seen good amount of capex happening in this space. People have at least understood. Now the challenges which we have seen very recently is about the LPG and LNG. I think the storage facility, we believe a lot of efforts are getting talked about how to increase that capacity. I think in next 5 to 7 years, you will see that area also will be strengthened further. So I'm more constructive, and given the government interest in this space, and everybody was slightly shaken what happened in the Middle East very recently, it is actually helping us to start thinking on those lines. So which is the good news, because I always say in India, after every crisis, we have strengthened a lot. So I think sometimes crises are required for this country to strengthen. Maybe it's a wake up call, but I think it's a steps in right direction.
Deep, not to generalize, but in the earnings season that we've seen gone by, in a lot of cases there has been a better performance than was anticipated, particularly in the broader markets. The thing is that there are a lot of pockets which we've already spoken about, which are discovered, and therefore the valuation metrics, the popular ones at least, look a little high. But would you argue on the other side to say that the potential and the likelihood of a long tail for some of these industries and companies is such that it's justified and you should not miss this opportunity? And where do you think that those opportunities lie right now?
See, frankly speaking, we as a house who is a slave of data, and we talk about our VLRT framework. So valuation is the important backbone, but it should be also look in tandem with how the liquidity analytic and risk appetite, that basically the sentiments which are prevailing. The way I will look at a lot many names in India we have chased, and so-called new age companies where a lot of excitement is there because top line growth is quite visible and is quite remarkable also. But given the valuation which you think that gives us huge amount of discomfort, if I have to say, what is very important is that you are also getting lot many names are trading in the neglected hated zone. You look at realty sector, because of IT, people have given up in that sector completely. I think some of the, if we believe in India demographic cycle and if we believe something has changed in India, I think real estate is going to do very well in long term. Maybe not that's a return which we have seen. So I'm just giving a small example. Like few years back, people have given in the power sector, utility companies to get very low valuation. PSU was a very classic example where people were allergic to PSU names. PSU will not participate. And look at some of the PSU companies have done extremely well as a theme has played out. So I think we as a house is always look for opportunity. Rather, I will say risk-adjusted opportunity. That's the theme we like to play, and there are enough opportunities available. Okay, why to chase only select name where tailwinds are very high and perception is equally good and everybody wants to participate? I think I would like to not taking a contra call. I would like to avoid these all over-admire, over-research and over-hyped company. I think it's the time to look at some of the neglected territory stocks, and they should do very well. And textile could be one sector which you look at. I talked about real estate as a sector which is looking good. Pharma has been opportunity for a while. Even IT sector, IT services sector, we turned positive for last 2 months. There also we see some amount of opportunity. Energy obviously is a very green sector from a longer term perspective. Well, there are opportunity. Telecom is a big theme which you should look at. Opportunity. Optic fiber is a big theme. Telecom equipment is also a very meaningful theme which is playing out. I think these are areas which you look at.
Sandeep, then my question to you is, with the framework that you function with, right? If you have to look at timing, if you have to look at valuations, if you have to look at liquidity and risk appetite, right? How would a retail investor take into consideration these inputs? Because it becomes absolutely crucial when you're thinking from a quant perspective.
See, frankly speaking, some of these areas which we specialize are data driven and slightly complex. You need to have access to these data first, and then you should have understanding how to convert the data into an intelligent decision making process. The best option is to participate through mutual fund route, and on mutual fund should be opportunity for large retail investors. That's on a lighter note. But what is more important to understand, and you can see when you look at the market, when pessimism is on the higher side, the give up mindset is there, people are getting capitulated. We have seen vomiting happening in some of the cases where results were slightly weak. People have given up, completely 8, 10, 20% fall. And if you are seeing a value in some of these names, because what is happening right now, the buying interest is on the lower side. Whenever any news happen or any tweet comes from Mr. Trump, people generally try to unwind their trades on a quickly basis and buy and disappear. And that is one of the reason the price impact is more meaningful, on both the sides. So I think we as a house actually thrive this opportunity. Okay, if you can play on both the side and keep your emotions under control, I think you should be winner. So I think instead of getting capitulated in this narrative or noise which gets created now in the social media also in a big way, what is important if you can segregate these noise and identify a few larger themes, okay? Then there's opportunity and an appropriate time you see stock has corrected 20-30% and you think this is the sector which you like. If you have your sheet, let's say stock which you identify is already, list is already ready, you look for opportunity in extreme pessimism rather than you also getting capitulated along with that.
Yeah, that's a good point. That's a good point. On that note, Sandeep, thanks so much for joining in. Pleasure speaking with you, and once again, wish you and your team a very happy Independence Day.
Yeah, thanks a lot.
Interesting points.
Interesting points and interesting strategies as well, because everything is not only fundamentals. A lot of it is probabilities and possibilities as well. In fact, let's get in our next set of guests as well. We have Abhay Agarwal, Managing Director at Piper Serica, joining in, and Aman Chauhan, Fund Manager at Abacus Asset Manager. Welcome to the show, gentlemen. Always a pleasure to speak to both of you as well, and wishing you a happy Independence Day. Abhay, let me start off this conversation with you. In fact, we posed this question to Sandeep as well. The question is, at 79, what is that opportunity that you are seeing that will actually develop into a wealth-creating idea when India is at 100?
Yeah, hi. Thank you for having me, and wishing, in advance everybody a very happy Independence Day. We are growth investors, and for us, whatever we are seeing, whatever we have seen over the last couple of years, I think the big opportunity for India, which is already emerged and is going to emerge in an even bigger way and give a lot of opportunities for investors, is the whole innovation-driven manufacturing play. And you are seeing young companies, which may be small caps right now, some mid caps, getting rewarded by markets for their outperformance, which has come from years of investing in innovation. And this is across innovation in pharmaceuticals, it is innovation in electronic manufacturing, in auto components. So I think the clear future is, as an opportunity for Indian investors, global investors investing in India, is to back the emerging Indian companies that are really committed to R&D, developing unique intellectual property, learning, scaling very fast, using the volumes that they get in the Indian market, becoming very competent manufacturers, and then exploring the global markets. And the good news is that the global markets are very receptive of Indian manufacturers right now. There is no baggage there. All the companies that we talk to are either setting up their own presence, acquiring small plants in developed markets, doing product registrations, product certifications, accessing large global OEMs, and who are not looking at India as a cheap provider of manufactured items. They are looking at India now as somebody who's an integral part of their de-risking their global supply chain. So I think immense opportunities for investors, as long as they can take their eyes away from traditional sectors, traditional large caps, and focus on these, fast growing small and mid caps that are focused on manufacturing.
Good answer. And thanks so much for joining in, both of you gentlemen. Aman, I'll come to you. And effectively, let me ask you this with a slightly different tilt, which is those companies and sectors that were predominant in the first 26 years of this century, effectively from the time that India turned 50 to now. Some of them are losing ground, based on what Abhay has also described, to say that don't focus on the frontline companies. They've run their race. The next race is going to be run by these smaller, more agile companies that are not just using cheap labor. So where do you see the opportunities?
See, what you say is right, but frankly, this was right 25 years back also when we turned 50. At that time also, the bigger companies, because of a higher base, were unable to get the kind of growth which markets like, and the smaller companies grew faster and they were much bigger wealth generators than what the larger companies were. Sectors were different. That is the only difference. Even today, that's the case. There could be larger company also in the same space. For example, the other speaker mentioned about manufacturing, or you can say technology focused manufacturing, which is true. Same is, there could be larger companies there which might not grow the same way as a smaller company in the same sector would be, right? So that call of large company versus mid company always there. It is there today. It will be there 5 years later also. Specifically coming to the opportunity, besides the manufacturing opportunity, which my colleague also shared, I think there's one more big opportunity which India can capture is getting its share in the global trade. Right now, it's sub 5% share in the global trade. We are a very small player, which is completely dominated by China, right? So one side, manufacturing will pick up because of domestic consumption. We want to reduce the import dependence. At the same time, with rupee at 95, we are now very cost effective also on the global export front. This is also a big opportunity, and it is across sectors. So it is not, it was IT for the last 20-25 years, and maybe pharma along with that. Now chemicals, engineering, cap goods, lots of these sectors can take a decent share of the world trade. And I believe that is something which can be the next 10-20 year growth opportunity for Indian corporates.
Okay, so Aman, basically you're talking about more on the defensive side as well, where there is an opportunity that is coming in when you talk about pharma as a sector. How are you looking at the BFSI space, the financial space? Because the moment you see infra and these other sectors picking up, there is that correlated benefit that does flow through the banking space as well. How are you looking at it from an opportunity perspective now?
See, broadly, on a simple term, no economy can grow without the financial sector participating, right? So obviously, we'll grow, the credit growth will come in, and the financial sector will benefit. But who within that will be a bigger winner is the call we have to take. Our pick is we like select NBFCs, companies that are among the top 3-4 players in the respective sector that they operate into. Second preference will be private banks. Within the private banks, as we just discussed, the larger ones have run the race. They'll still grow, but it's going to be a small growth rate on a very high base, the likes of the GTFC, ICICI, or the larger banks. And hence the preference is towards mid-sized private banks. So this is the pecking order that we have within the financials. We like NBFCs with the larger NBFCs, and within private banks, the mid-sized private banks.
Oh, okay. All right. Abhay, I want to come to you on the next one, which is that you described manufacturing, but I want to ask you to perhaps, if you possibly can, be a little bit more specific in what exactly you're looking at, because some of these auto ancillary companies are no longer just auto ancillary companies, right? They're diversifying into aerospace, into precision engineering, right? So how would you approach investing in the space, and what are the contours?
Now, Alex, we are very excited about this whole, technology-led, IP-led, R&D-led manufacturing space. And as you said, the companies that have strong engineering skills will look constantly for adjacencies to grow into using those engineering skills. So if the large market is presenting itself in the form of robotics, AI-based IoT, defense, and defense has multiple aspects to it. I think it is but natural that these companies will grow into their agencies, and because of their manufacturing scale and capabilities, they will find high receptivity also. And that's what I said, Alex, in my first point, that there are plenty of these companies. I obviously, would not like to name them because of SEBI restrictions, but what I can say is that in the space of, say, 5,000 crore market cap to 50,000 market cap, the good news is that there are enough opportunities for investors to look at. And specifically the theme that you mentioned, companies that have been very good in their core segment, now using the same skills to go into newer industry verticals and finding receptivity. I think you will see these companies double in 3 years' time, triple in 5 years' time, at margins that will increase, balance sheets that will not be used for leverage, the growth will be self-funded. So I think these companies are like a long-term investor's dream. You can easily look for an IRR of 20% over next 5 years just backing these companies, as long as you're ready to dilute your focus on the traditional P multiple and look at actually the price earnings to growth multiple when you look at these companies. Because if investors are going to screen these opportunities only looking at traditional PE multiple, they'll always find these expensive.
Yeah, that's a good answer, Abhay, and I understand you can't get more specific than that, but you've told us as much as you could. On that note, Abhay, Aman, thanks so much for joining in today, and pleasure spending time with you.
Thank you.
All right, so, well, I think that sums up the promise that India has for investors.
The opportunity that India has,
the
promise is already made.
Absolutely, absolutely. Heading into 2047, let us know what you think about some of the things that we discussed in this program, and stay tuned, lots more coming up over the course of the day. This is NDTV Profit.
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
ऑप्शन रूल के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे? Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Confused? What to buy? What What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio with me, Heera Aldadia. But first up, let's take a look at what's happening in the markets right now as we speak. Absolutely lackluster. We are below that 24,400 mark. This week seems like a non-event for the markets. To which, let's quickly look at the factors that we're watching out for, because it's a no fun Friday. Nifty below 24,400. Secondly, if you talk about Bank Nifty as well right now, the range that we're looking at is somewhere close to 57,000 to 57,400. The volumes itself have been on the lower side. In fact, if you talk about the overall volumes on the back of cash, they have been reducing. Let's pull up Z Entertainment. That's the stock which has actually pulled Nifty Media Index up in trade as well, and all the other sectors are kind of trading in the red. In terms of today's session, a couple of companies that are in focus: Ashok Leyland, Bharat Dynamics, Cochin Shipyard, NMDC, Patanjali Foods, Voltas, all of these companies that will be reporting numbers. And the key is to track the US retail sales data as well. So all in all, a day of consolidation that continues. No major moves, but a lot of stock specific action is what you're watching out for. If you have to look at individual. In fact, from manufacturing and exports to defensives and green energy, India Inc.'s growth engine is firing on multiple fronts. We've grouped these opportunities into saffron, white and green themes. Representing the key pillars of India's economic transformation, let's explore the stocks leading this tricolor story. In fact, let's explore the saffron stocks with Parth, followed by Puneet and Varsha, who will discuss the white and green stocks respectively. Over to you, Parth.
Thank you, Hiral. Saffron as a color signifies growth, and India has spent decades building building the foundations of its growing economy. Today, that growth is spread across sectors, be it manufacturing, be it exports, or be it consumption as well. Everything is just scaling rapidly right now. Indian companies are scaling, and they are coming to conquer the world. And that's why we have compiled a list of companies that have grown their EBITDA by a significant margin in the last 4 quarters. In fact, let's have a look at the list that we have compiled for you. The first company in the list is Chennai Petroleum. Yeah, that's what I was speaking about, the foundations of our growth economy. But if we could just go to the list of the companies that have scaled their EBITDA, the first one is Chennai Petro, whose gross refining margin have surged to around $9.3 per barrel. That was versus near zero in the same quarter last year. The second one is Newland Laboratories, whose Q4 margin hit almost 40%, and because of the CDMO ramp up that the company has seen. Another one in the list is HFCL, which has seen its exports jump to 41% of the revenue, and margins have doubled to 17% as well. The next company on the list is Eternal, where Blinkit has turned EBITDA positive. That's the Q-commerce growth engine working really well for the company, and that's what has pushed their EBITDA. The next one in the list is LMW, where machine tools revenue have crossed 1,000 crores for them, and offsetting the flat textiles revenue for the company. The next one in the list is PB Fintech, where we have seen insurance premium cross 30,000 crores, growing at 42% year on year, and that's what has pushed the EBITDA of PB Fintech as well. The next one is Cupid, which is exporting its products to around 125 plus countries. That has driven that 93% revenue surge and EBITDA for Cupid as well. The next one is Lloyd's Metal and Energy, where pellet output has tripled and margins have expanded to around 34% as well. And also MTAR Technologies, very big name in terms of EBITDA growth. Clean energy orders have driven that 30% growth in EBITDA, in revenue and EBITDA as well. And lastly, Aegis Logistics, where we have seen record LPG throughput volumes, which led that 68.8% growth in the gas division EBITDA. So these are the top 10 companies that have significantly grown their EBITDA in the last 4 quarters, and this is the saffron stocks as we call them. And now let's go across to Puneet for the white stocks.
Well, thank you for that. When you think of the color white, it gives you that calmness, the peace and the serenity, and here as well we are looking at that in your portfolio. So the list that we have compiled is of the defensives of a portfolio that will save you from rainy day. And when you look at that, you think about the IT, the pharma as well as the banks. So the IT sector has gotten under pressure over the last few months because of the AI-led moves. You've also seen banks also starting to come a little bit under pressure because of the net interest margin aspect. And pharma is a time to look at the domestic companies compared to the exports now, which has been the theme over the last 10 to 15 years. So what we have done is compile the stocks in the pharma space with the highest return in the last 1 year, and the question being if they will be the kings going forward too. So Laurus Labs has been the highest return. You've seen that for Sai Life Sciences and Aurobindo, as well as Gland Pharma and Divi's, a 44 to 123% return in the last 1 year. But even though going forward, barring a couple of names, you don't see too much of a return potential. But don't worry, we got you covered, because we've also combined a list within the pharma space that have the highest return potential. And here you have names like Abbott India, Mankind, Sun Pharma, Torrent Pharma, as well as Piramal, which could be something that you should watch out for in the next year. Also, don't forget about the banks as well. Here, you've seen a massive return for Federal Bank as well as Bank of Maharashtra. Both have been big outperformers. But even in the public sector bank side, stellar returns from Union as well as Indian Bank as well. Here also the return potential is actually quite strong still for Bank of Maharashtra, while you've seen a single digit kind of return potential for the rest. But also look at the ones which have the highest return potential. It is HDFC Bank, down 25% in the last 1 year, still has a lot more room to go. Axis, ICICI as well as Bank of Maharashtra, again because of the high return potential features on our list. But the story is very different for IT, because you have seen a lot of stocks do well in the IT space. And if you can show the names on the screen, you see Oracle Financial as well as Coforge. Those are the two ones which have done well in the last 1 year. What's also interesting is they have the highest return potential going forward too, of 11 and 5% respectively. But you have seen saffron, you have seen white. Going to Varsha now for the green stocks that you should have in your portfolio.
Well, I would call Green India, Clean India. I would call our country from energy importer to, clean energy builder. Now, if you see, India has once depended heavily on imported fossil fuels. But now, today, India is amongst the world's fastest growing renewable, energy markets today. Now, solar panels, we are into wind turbines, we are in batteries and green hydrogen, which are becoming India's next manufacturing opportunity. Now, talking about opportunity, investors are actually not looking at earnings today, but they are focusing on the capacity generation that India has been doing when it comes to renewables. Now, talking about bigger opportunity may lie ahead as these assets start, generating the earnings or cash flows for our country. Talking about companies which are in focus, you have Inox Wind, you have Suzlon, you have MV Photo. Don't look at the 1 year return. Look at the return potential. Inox Wind, you have 50% return potential that investors are betting on. Suzlon 31%, MV Photo 22%, though it has given almost 47% in the last 1 year. Moving on, you have Waaree Energies, you have NHPC and Tata Power. All these stocks have huge potential. You have 22% when it comes to Waaree Energies, 15% and 14% for NHPC and Tata Power respectively. But let's deep dive into each stocks. Talking about Inox Wind, well, they are actually shifting from turnkey EPC to equipment supplier. That is nothing but the high margin projects. You have Suzlon Energy, wherein management is actually targeting 25% CAGR for next 5 years. Also, wind installation to accelerate as utilities diversify beyond solar for Suzlon. MV Photo, everyone is actually betting on this company because they are building domestic solar manufacturing capacity, which will aid growth for the company. Even Waaree Energies, they are actually reiterating when it comes to the EBITDA guidance maintained at 7,000 to 7,700 crore. In fact, the major thing is they have massive investments across cells, modules, investors and electrolyzers. Then you have NHPC, wherein renewable portfolio continues to expand beyond hydro. In fact, they are doing huge capacity, wherein FY27 capex has been planned at 15,000 crore. Lastly, you have Tata Power Company. Renewable capacity is expected to cross 9 gigawatt by FY27 end. So, I would call it as Green India, the next freedom story for us.
All right. So, 3 colors, 3 opportunities, and that's the tricolor opportunity that investors are sitting on. Thank you so much, Parth, Puneet and Varsha, for getting us all the details and all the research that you guys have done, and it becomes an opportunity for all the investors. But moving on, Sharad, over to you to actually now take the rapid fire as well from here on, because a lot of stocks that are buzzing in trade today.
Well, I must say, the hats off to the graphics team. It's looking visually wonderful for all the team out there, Hiral and the entire research team. But moving on to the rapid fire round, first stock is of course going to be Tata Steel also. And Sachin Janardhan joins in with us. Sachin, hi and happy Independence Day to you. Wanted to understand the technical levels, to track, especially for Tata Steel here in the current levels.
So Tata Steel currently on a daily chart had turned from basically uptrend to downtrend, and currently it is trading near the support level. So 180 is a very crucial support. If you are closing below 180 levels on a weekly basis, that will be actually a dent for on charts basically, and then we can say at least 160 and 150 levels on the downside. On the upside, it need to capture 180 levels. Till then we are not capturing, or on a daily or weekly basis 190. We will be in a range of 180 and 190 only.
Right. Your view on LG Electronics? The stock has done well, as stock is up also. Do you think this will sustain going ahead? Because after a long period of consolidation, we are seeing more action in the counter. LG Electronics.
It need to close above 1750 levels. Today, the stock is going up, but comparatively when we see the volumes on the first day of the IPO launch, it is very less basically. But still when we are seeing on a weekly basis, we are getting some kind of volume, but we need to close above 1750 from a greater point of view. If we are doing that, then 1950 and 2150, that will be the targets for LG.
All right, apart from LG Electronics, another stock in focus is definitely going to be HEG and Graphite. It's expected that there would be a price hike coming in these counters as well. Let's just show both the charts of HEG and Graphite to get the entire picture of how things are actually panning out. And there is a good kind of a bump up happening. But do you think either of these two counters, anything will sustain, Sachin?
So HEG on charts comparatively to Graphite, it is looking good because it has already given a breakout on a weekly basis as well. So we can see at least a 5 to 10% good run up in a very short period of time.
Right, and just before the earnings, Bharat Dynamics is also in focus. Street is expecting some good set of numbers here. Is there any trade to be made just before the earnings coming in? Bharat Dynamics, the stock is in a consolidation in those levels.
So actually the stock is struggling near the 200 SMAs and EMS levels. The trend is down, so because trend is not supportive, we should avoid preempting that. Any kind of a breakout above 1470 level, that will be good.
All right.
So thank you for that. In fact, I'm going to take the next set of rapid fire questions. Sachin, Tata Motors PV, the management is expecting cost pressures in the second quarter. What are charts indicating?
So compared to Tata Motors PV, I love CV because the trend for CV is good. So I will avoid Tata Motors PV.
Okay, what about a Balu Forge? The outlook is positive. Any further momentum?
So Balu Forge Industries, it is trying to change the trend from down to up. So as of now, if someone is getting profit, book profits and wait for the confirmation.
Okay, what about a Manorama? Because very good returns in the last couple of months. The momentum has continued. Would you advise to stay invested or book profits?
One can book 50% profits in Manorama and rest we can trail the stop losses.
Okay, Praj Industries, strong performance. What are charts indicating?
Basically, sugar industries, we are getting some kind of a traction in all these levels, but most of the sugar stocks are into a downtrend. So any kind of bonds will be a good opportunity to book profits.
Okay, Wellspun Living, strong numbers again. Are you expecting charts? I mean, are charts also telling you that the improvement is expected to continue? Good investment bet.
So yes, we can add in Wellspun Living, and especially on dips basically because the run-up has already happened. But on a dips, it's a good opportunity to add.
Okay, Nalco Hindalco did have a good run on the back of some global news. Currently trading slightly under pressure. What would you advise?
So Nalco and Hindalco, both the charts are in uptrend. This is a good basically addition if one wants to do it. There is no problem.
Okay, so a good addition as well. But thank you so much for joining in, Sachin. Always a pleasure to speak to you and get all the cues in terms of the rapid fire. But moving on, Electra Green Tech, that stock is in focus, and this is after reporting its first set of numbers. While their revenue grew, what was interesting is that the margins have been under pressure. You're not seeing that kind of profit growth as well. In fact, I did get an opportunity to catch up with the management, that is Mahesh Babu, Managing Director of Electra Green Tech. Let's listen into what he had to say. Joining us is Mahesh Babu, MD at Electra Green. Mahesh, welcome to the show. Always a pleasure to speak to you. Help us understand, 65% revenue growth. It's the e-bus, the mobility business that has driven growth as well. However, the profit growth has remained muted this time around. Costs have increased, and that's what has caused the compression in terms of margins. Is this probably something that will tell you how FY27 is going to look like, or are you expecting a turnaround in the remainder of the quarters?
Hi, firstly, I'm pretty happy that we had a good growth of, as you say, 66%. If you look at the e-bus business, the EBITDA margins points are pretty similar. I would say very minimal impact. But you also know that we have a energy division. In the energy division, Q1 is always a little bit muted. We had challenges in terms of forex and raw material impacts. I think with all that what's happening around in the Q1 globally, I think what we did, we are pretty much sure that we'll be able to pull back. I think we had a good start in Q1. The bus division did extremely well. The energy division Q1 is impacted due to raw material prices increase and the forex, and which is now mellowed down. And we believe that in the energy division, we will have a better margins going forward in Q2 and Q3 as well.
Okay, so Mahesh, are you saying that the profitability pressure that we are seeing is temporary and it's mainly linked to the scale-up costs, or there is a potential where FY27, the margins will be slightly more muted as compared to what you had achieved in FY26, in spite of the uptick coming in there?
See, if you look at the EBITDA, we had a EBITDA impact, as I told you, to the energy division. But if you look at the PAT, I think we are investing for the capex, so depreciation is playing a role. Plus, our capacity enhancement term loans have started, so that payments has some financial impact cost. So if you look at it, The EBITDA bring back will happen in the coming quarters due to mellow down of raw material prices. So I'm sure that the business is at the right path. As we know, we are also investing in the future. So there will be impact of depreciation in terms of capital cost, which we have done, which is building the future. That's how the growth rate comes from.
Okay, and what about battery costs? If I may ask you that, have the prices gone up and how are you accommodating for it?
See, battery price costs have a minor impact because of the Forex mainly. But however, we are able to work on cost optimization for the other parts, and we are able to minimize the impact so far. And we are renegotiating other terms as well, and then we are trying to improve the profitability as well. The impact is very minimal, I would say, based on the battery impact cost.
Okay, and as we've spoken about the mobility business, which has continued to drive or dominate the business, I would say, has it come in from higher deliveries, or is it because of a richer product mix?
No, this is Q1 to last year to this year on year. It's based on higher deliveries.
Okay.
We have delivered higher numbers, and hence the revenues are higher. The margins, as I said, had a very minor impact, of course, because of the Forex and the raw material cost. But we could able to mitigate it successfully and reduce the impact very small. I would say, looking at what's happening globally and also the impact on raw material and Forex, the performance of the team in the Q1 is, I would say, reasonable, and we are very well poised for taking the Q2 and beyond to get back to the growth as well as profitability.
Okay, let's talk about bus deliveries and the order book as well. So how much did you actually deliver in the first quarter? And if you have to talk about your current order book, how much of it is executable in terms of FY27?
So we have invoiced about 358 vehicles in this quarter, which is higher than the last Q1 of last year. So if you look at it, we have about 8,000 plus orders in pipeline, which we have to execute in next 2 years. So as I said, this year our target is to close to 2,000 to 2,500 deliveries this financial year. And we want to ramp up further as well going forward in Q4. So we start with Q1 with a 350. We want to exit with 500 plus 600 vehicles.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए।
28, 29, 30.
तंबी कैसे टाइगर कैसे
Buy now.
Sell immediately.
Hold it, boss.
Buy now. Sell.
Hold.
Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Hello and welcome back to NDTV Profit. You're watching Lunchtime Trades with me, Puneet Zaveri. Thanks so much for tuning in. This is a show that gets you a roundup of everything that is happening in the world of commodities, news and updates. And today on the what is also as a key top buzzer that we have at this hour, all while you grab your lunch. Let's take a quick look at what the markets are doing as well, because we've spoken about the benchmark indices and largely being in a consolidatory range yet again, and that's visible on the Nifty 50 today. So we started off the week at 23,570 odd. Let's look at the Nifty 50 now of where it is trading at, because we've seen pressure on the index, seen some revival from the day's low, now at 24,350 odd. So the last couple of hours become very crucial of where we end the week, which has been very range bound as well. Also pull up the sectoral heat map too. Here you're not seeing too much of a wild move actually across a bunch of stocks and spaces today, and especially within sectors, only a couple that are buzzing. So Nifty Media is one where it's up almost a percentage. You're also seeing some moves come in on the consumption, but again just 0.2% up as well. While in the losers as well, Nifty Metal was down 1.5%, has recovered from the day's low, and it's coming at a good time when we are tracking commodities. Also is the advanced decline ratio. We've spoken about this in the morning as well. Well, the declines have largely been having a bigger impact compared to the advances in this week, and that is visible on the screen today as well. So it's been a week where there has been results reactions, but a lot more on the downside is the stock prices reaction as well. Mid cap, small cap also show you that, and the BSE 500 is very interesting as well, because here you are channeling a lot of those gains as well. Both these indexes continue to be in red, but Nalco is one which has seen actually some profit booking today. Stock was up at the start of the week, given up a lot of those. Samman Capital as well as Tata Motors PV, and we'll put more focus on this counter in this show as well, is down almost 4%. What is actually up by 20% is Galaxy Surfactants. Stellar set of numbers, guidance being raised, visible on your screen. So is LG Equipment and Z Entertainment getting some relief today. So up 5.7%. Happiest Minds 2 continues to do well as well. But the gold prices today, and when we come back and talk about commodities, have actually slipped today and are headed for a weekly loss as investors are locking in their profits after a mild US inflation data propelled bullion to its highest level in more than 2 months. We've also seen weakness in that case for the near-term Federal Reserve rate hike, and that that poll is also up where you can see it clearly that the hike is starting to go down, and the aspirations of that as well. Bullion climbed to its highest point since June 5th yesterday, before settling 1.3% lower and setting it on track for a weekly loss. On the other hand though, oil prices stay steady as the fresh US threats to maintain a naval blockade of Iran indefinitely revive the concerns over crude supplies. The Brent is holding above the $87 a barrel mark, WTI 82, but we are now being joined by Biren Vakil. He's the commodity consultant at Paradigm Commodity Advisors, now joining in. Mr. Vakil, very good afternoon to you, sir. Thanks so much for joining in. It's Puneet this side. Just as you look at what's happening yet again with gold and led by global factors as well, how are you reading the current moves?
Seasonality speaking, usually gold tend to bottom out in the second quarter, and annualized top may emerge around September, October, being a festival season. Here, near term, two key events are there. One is Jackson Hole meeting, August, which would be scheduled around 27-28, and thereafter, very soon we have September Fed meeting. Market is expecting either one small hike or maybe a couple of small hike in the current year. So path to least resistance is mild upside, say 45, 46. And for a while, 4,000 seems to be a floor.
Mr. Vakil, you're talking about the levels on a dollar basis, right? 45 to 4,600 is something that we'll be watching out for. Is that a correct assessment?
Yeah, this is basically intermediate relief rally.
Relief rally, okay.
Heavy correction.
Correct. Got it. So you are largely expecting that there could be one rate hike that we might happen in this year that will have a bearing on gold too, but largely continuing in this band that we continue to be stuck in as there has been the volatility in the global markets start to recede, or at least they are getting more comfortable with a more uncertain environment, right?
Basically, we are, what I'm sensing is largely commodity sector is witnessing fatigue. A lot of retail wealth destruction seen during first half volatility, be it crude, be it metals, be it bullion, silver. So now market is, I think, in relatively resting mode. And we may see once this festive demand kicks in somewhere around late August or early September, we may see once this Jackson Hole meet is over, we may find a new direction, probably mild upside.
Just one last question, Mr. Vakil, as well. So, you've seen wealth destruction both in gold as well as what you've seen in silver too. What would be your strategy for individual retail investors now?
It is time to be sidelined for a while, and once Jackson Hole is over, we may get clarity on Fed side. Fed is missing inflation target since last 5 years. A central bank like Fed continuously missing its inflation goal looks somewhat strange. So let us wait for Jackson Hole what they give signals.
Well, Mr. Vakil, we'll leave it at that. Thanks so much for joining in, giving us your time today to NDTV Profit. We wish you the best. But let's also just pull up a couple of counters and see what they are doing. Tata Motors PV is the first one. You've seen that stock, under pressure today on the back of what we've seen on earnings too, down almost 4.5% now. And it was a stock that continued to be under pressure from the start. You actually saw some revival actually post actually the first opening, which was down 5.5%, but a weaker performance from JLR continued to have a bearing in this particular quarter as well. What you've also seen is that the wholesales were down almost 9.5%, and hence that was because of a chassis supplier. JLR has also issued more cautionary tale on China. They've said that the quarter one volumes were down 25%, and they feel that it might get a little more worse first before seeing a revival on this counter. Management also anticipates the same. What's also interesting is that these were comments from Richard Molyneux, who is the CFO of Jaguar and Land Rover. Also, when you look at the new launch pipeline too, you've seen, of course, consistent pressure on this, but JLR's free cash flow position has also worsened significantly in this particular quarter as well. I just want to talk about the new launch pipeline too, because they have launched and expect 4 new model launches in this particular year. That will be on the electric vehicle side, and we'll start it off by Range Rover Electric. That will be starting in September, and then post that they will be following with the other models, especially Jaguar, which will be in early 2027. So this continues to be one impacted stock. Let's also look at Electra Green Tech. That is the other factor. Let's also pull up the results that came through this morning too. Stock was down 4.8% on the back of results, and it is continuing to be under pressure too. I'll get to Electra Green Tech in just a bit, because the flash on the bottom of your screen show you the numbers coming in for Ashok Leyland as well. Revenue is up almost 11% in this particular quarter. Net profit though largely continuing to be flat. Now, why is this flat? Would be because of the higher raw material price impact, and hence continuing to see not too much adverse reaction right now, because this was baked into the estimates that we were working with as well. So you do continue to see a similar profile for Tata Motors CV, which came a couple of days ago, where the impact of commodity was higher. Margins were down 110 basis points, but on an overall basis, the street actually cheered the commentary that came through post the con call. Here as well, I suspect that will be a similar picture to play out, because a lot of strong commentary will come through, especially on the electric vehicle portfolio, which is Switch Mobility, and hence that revenue uptick of 11% continues to be important as well. But now let's also look at Technocraft Ventures, which is in focus as the company makes a strong debut today. The company lists at more than 34% in premium over its IPO. My colleague Nimit spoke to Mr. Tyagi, who is the whole-time director and CFO at Technocraft Ventures. Let's listen into what he has to say.
First thing I'd like to ask you, Karthikeya, is where do you think the market weighed you so positively? Was it your order book? Was it your working with the government? Was it the sector that you're in, your EBITDA margins? Where do you think the positivity for your listing and the demand for your stock came from?
Good morning, everyone. Thank you so much. And I would like to wish everyone a very happy Independence Day in advance. And so when you talk about what I think, I would also like to thank all of the investors who have put their faith in our stock and come forward to support us in this time. And so I think what the investors might have seen unique in our particular stock is that first of all, we are completely concentrated in the field of wastewater treatment, and it is the need of the hour. Our water resources are getting depleted day by day. The groundwater levels are going down. The rivers are getting polluted. So our order book of 1,500 crores, that's around, I think, 98%, 99%. That's entirely constituted of wastewater treatment projects. So I think that's one thing that the investors might have looked at. And another thing is that we provide end-to-end composite solutions from the household, building the household connection chamber, laying the pipelines across the entire city, and then taking it to the treatment plant, constructing the treatment plant, engineering it, making the water fit for reuse as the government deems and as per the guidelines of the National Green Tribunal. So I think that those are some of the things that the public might have looked at, and I think I'm very glad that the investors have put faith in us, and we look forward to delivering the results that we promised to do so.
Take that. Let's dive a little bit into that. One of the things, of course, like you said, the key things is your water treatment contracts that you have, which is a large chunk, substantially over 80% of the chunk of your projects is water treatment. Going forward, can we expect the same from you, or is there a plan to diversify that more into your, say, road projects also, that which form a minority part of your revenue model? How do you look at the future growth? Are you going to double down on water, or are you going to diversify into other projects?
I would just like to slightly correct in that sense. So water treatment is freshwater treatment. We are mainly into wastewater treatment. So currently we're focusing on the wastewater treatment projects under Amrut 2.0, Swachh Bharat Mission, and Namami Gange. We also have experiences and capabilities in executing road projects, highway projects, and power and transmission projects as well. So currently, we're focusing on wastewater treatment because the contract value that we can qualify in wastewater treatment is much higher than what we can qualify in road projects and, let's say, power transmission. In wastewater treatment projects, we can qualify for contracts around the value of around 400, 500 crores. So as our ticket size grows, that's what we have been seeing over the years. Our margins have been getting better because there's lesser competition, lesser players who are qualified to bid for the same contracts. So that's what we are focused on. Although if there is a very good opportunity in executing some road project or some power transmission projects to keep our qualifications alive, because how it works is for government projects, if you would like to bid for a contract, there are pre-qualification criteria that you need to have executed similar projects in the last 7 years or 10 years. So if we see an opportunity to bid for projects which keep our margins intact and the execution is similar to what we have executed in the past, we might take up small projects here and there just to keep our qualifications alive, because you never know which sector would be booming in the future. So you would not like to exit any segment completely, but we are focusing on wastewater treatment completely.
I'll take that, and absolutely that was well answered. I'd like to also ask you another question on diversity. Is your fresh issue, right? A lot of it is going to be going to working capital. Of course, I think the market understands you're a cash-intensive business. You require regular cash flow. Since you work primarily with government contracts, there's always a risk of receivables getting stuck. What's your strategy there for an investor? Are you going to look at more fundraisers in the future, or is there a process to ensure that you have that cash flow from the fundraise that you've raised here today?
Sir, that's a very good question. Like, a lot of people have this question about government contracts, that payment from the governments are not received in time. So firstly, I would like to point out that our debtor days are around like 190 to 120 days. And as you can see from our balance sheet, debtors with aging more than 6 months, I think it's only around 2 crores or something above that. So it's a very minuscule amount as compared to our revenue over the years. And also the government, the schemes that we are talking about, Namami Gange, Swachh Bharat Mission, Amrut 2.0, they provide 10% mobilization advance, which is mostly interest-free. And so at the beginning of the contract, as soon as the contract begins and signing is done, you can get 2 installments of 5% within 30 days, which is interest free, which covers the lag that you might see in like payments received from the government or the receivables realizing in real time. So that covers us, and it provides us with like some space for execution capabilities. So we're not really concerned with that, because over our past execution track record, we have not faced any bad debt. all of our payments have been realized, so we're pretty confident that we won't face any problems going forward.
Last question to you, Karthikeya, is about the diversification of your geographical market, right? You're, of course, heavily present in Uttar Pradesh and Rajasthan, Uttarakhand also. You've recently expanded into Madhya Pradesh, Bihar and Odisha.
Yes.
How do you see, in a project like yours, relationships and scale, taking that from one state to another state is a complicated challenge. What is your plan to scale the relationships and the business that you've built in Uttar Pradesh and Rajasthan to these other states?
Sir, so if you talk about the political scenario, these are central government schemes under Amrut, Namami Gange and Swachh Bharat Mission. So it's a share pattern with the central government, the state government and the urban local body which is executing it. And we have seen that the political scenario does not really impact us directly, because when we procured projects in Rajasthan in September 2023, the elections were right around the corner in December 2023. And then the BJP came into power in Rajasthan and the schemes were not impacted. As he said, there are central government schemes and the funding and it's essential projects. And if you talk about execution capabilities, we have an in-house engineering team which is responsible for the entire design and engineering of the project. And for execution purposes, our teams mobilize from the teams that are working in Uttar Pradesh, they go to Rajasthan. The teams that are working in Rajasthan, they go to Bihar. It's a cyclical kind of nature. And if we go to a new state where we need to mobilize new resources, we're very much capable of doing the same.
Well, of course, that was Technograph Ventures, a good listing for the company as well. But viewers, you did see some very interesting visual on the right-hand side of our screen today. And that was, yes, you heard it right, the man himself, Tukaram Munde. He is, of course, the Commissioner of Food and Drug Administration in Maharashtra. And he will be speaking to our editors today, and hence we will be putting out that that aspect too. I'll just get a confirmation of what time that will play out for you as well. 6 o'clock today is when you will be watching that live on our screens, and hence all those questions that you might think we will ask him, we will surely will as well. But as we wrap this edition of Lunchtime Trades, important to get some perspective on Skyways Air Services as well, which the company is in focus as it prepares to open its IPO on August 24th. My colleague Parth spoke with the management, Yashpal Sharma, he's the chairman and managing director, and Himanshu Chhabra, the CFO of the company, for the IPO plans and what looks forward in terms of growth. Let's listen in, and thanks so much for watching.
Today we are joined by the management of Skyways Air Services. The company is coming up with its IPO on 24th of August. We are joined by Mr. Yashpal Sharma, Chairman and Managing Director of the company, and also Mr. Himanshu Chhabra, who is the CFO of Skyways Air Services. Well, I had a couple of questions, but my first one is that we are raising around 400 crores of fresh issue in our IPO. So once that is used for, and that will be used for debt repayment and working capital purposes. So what will be the interest cost savings that we'll see after that debt has been repaid in the coming quarters and years as well?
So the overall fresh issue is 390 crores plus, and out of that 216 crores will be used towards the debt reduction, and 130 crores of the funds will be utilized towards the incremental working capital requirements of the company, and the rest of the portion is after the issue cost towards the general corporate purpose.
Okay. And with the debt repayment, after that debt repayment is done, how much interest cost savings can we expect?
So in the short term, yes, there will be an impact on the debt, the interest cost. And as we have seen in the last 3 years, the scale of the operations have been consistently growing. So this incremental working capital also will help us in utilizing this amount towards the growth of the company and not take any additional working capital debt, which has been the traditional or the past source of primarily working capital financing.
Got it. And also, our revenue saw spectacular growth in FY25, growing at around 74%, but that growth moderated to 25% in FY26. So, what kind of revenue growth can we expect from Skyways in the coming like 3 to 5 years, and how much of that growth will be coming organically versus acquisitions?
So we have consistently grown our volumes over the last few years, and even if you look at the volume growth of the last financial year, it has been very rock solid. The freight rates which determine the revenue moderated a little bit last year. So even with a 7-8% moderation in those freight rates, our revenues have still grown in a pretty decent 25% range. The organization's always motive has been to consistently grow our market share, grow our volumes, and which have always led to a decent increase in our revenues as well. And in times ahead, the strategy of the group will continue to remain the same, to remain very committed towards adding a bigger share from the current customers and also adding new customers in our portfolio, consistently expand our geographical footprint whenever possible, and we will continue to grow our volumes through these business acquisitions. And if there's any time an opportunity which is worth exploring for an acquisition, we will surely explore that as well.
Right. And also, sir, how much of the recent growth and margin improvement has come from that unusually strong freight rates and the Red Sea disruptions because of that? And what happens to our revenue and profitability once that rates normalize in the coming time?
So the business, like I had mentioned, that the freight rates do change from time to time, and there is always a 5 to 10% variation upside and downwards sometimes in the last few years that we've seen. Whenever there are these big market shocks like the Middle East war or the Russia-Ukraine war, etc., there is generally a change that we see in the marginal change in the freight rates, as well as the fuel index goes up and down. So these are all passed through to our customers, and even if you look at our last 3 years or even beyond the profitability, it has remained very consistently in the range that we have been in, and we are very confident that even going forward we will be able to maintain the same kind of momentum that we have been able to see in the past.
Understood, sir. And also on the margin front, they have increased consistently from 3.75% in FY24 to 3.85 in FY25 and 4.47, a significant jump in FY26. So where do you see these margin levels in the next 3 years, and what is driving this expansion currently, and what will be the factors to watch out for in terms of margins in the coming time?
So the margins profile have been consistently growing, as you rightly mentioned, and our endeavor will always be to serve the customers well, and the margins and the profitability are subset of how well you serve your customers. So we really hope that we are able to serve our customers well, and the profitability impact is always with the kind of services and the kind of solutions you are able to offer to the customers.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे टाइगर कैसे
Buy now,
sell immediately.
hold it, boss.
Buy now, sell,
Hold.
buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So let's start with the first management on the show today. We'll be speaking with Fusion Finance. Now, Sanjay, the MD and CEO of Fusion Finance, is joining us to give us more idea on what lies ahead for the company. So one of the reason or one of the question that is actually there in the minds of investor is the fact that you have maintained your AUM guidance of 10,000 crore rupees despite the fact that your current AUM was largely flat at close around 7,700 crore. Why this confidence, and what are the factors because of which you are getting this confidence that you will be able to achieve this 10,000 crore AUM?
Absolutely. Yeah, good afternoon to you and your viewers. So I think first the key thing, this is the first quarter where you see the pre-provisioning operating profit kicking in. So far, most of the till Q4, the upside on PAT came from the credit cost coming down. And the actual operating leverage, this is the first quarter that you see coming in. So just to share a number with you, that from a year on year, the pre-provisioning operating profit has improved from 86 crores to 102 crores. That's approximately 18% growth, which essentially says that while book is growing, but the quality of book that is growing is exceptionally higher than ever in the past. Now, coming to your point of AUM growth and where the confidence is coming from, I think first quarter was a test on everything that we had put on the table in the last 1 year in terms of the changes we had done on credit, the changes we had done on guardrails. We had made certain guardrails which were very different from the rest of the industry. And Q1 was also a quarter which was full of external uncertainties. I think while we were watchful, we were also looking at which are the areas where growth should come in. So the way the annual operating plan was divided was that for achieving 10,000 crores of AUM, we roughly need to do about 8,500 crore of disbursement. If you were to divide it sequentially, let's say between H1 and H2, we broadly assume that H1 will be approximately 44-45% of this entire 8,500 crore, which essentially means that roughly about 3,700 crores between quarter one and quarter two. First quarter is about what, 1,800 crores. So we are looking at least 8 to 10% growth from here. The changes which we have done on the new customer, that has led to a higher acquisition on the new customers. You clearly see the new customer acquisition going up in the last 4 quarters from 26% to 37%. It is easier to scale up on the existing customers, and there were certain differentiations, product differentiation for existing customers that we had picked up, but we did not execute them in Q1 because, like I said, there were too many external headwinds and we didn't want to do anything which changes the credit architecture. But I think now we have 6 months of this geopolitical and inflation and all the other things. The book has held very well. First, about 15 days back, we introduced most of these differentiations, and we are already seeing the green shoots in August. So we are fairly confident that for reaching this number, 8,500 crore of disbursement or translating into 10,000 crore of AUM, we need to grow by roughly about 8 to 9% over the previous quarter, and we'll do better than that. So I think the quality of book gives us the confidence that the runway is very clear for the next 3 quarters.
Disbursements will also improve, given the fact that it had declined, and I believe it must be because of the reasons that you mentioned. But going forward, disbursement rate will also improve significantly.
Absolutely. And Q1, we all know, is a soft quarter. So if you see, the industry has come down by 20%. But I think the encouraging thing is that our new customers continue to grow. So the new customers on a percentage basis now form about 37%. While I'm talking July, it was close to 42%. And it is much easier to grow on your existing customers, which is where this quarter we see the upside coming from. And we are pretty much on our AOP, like I said, 44-45% coming in H1 on disbursements.
And just wanted to check with you on this front as well. Are the headwinds related to the MFI space behind us completely, or are you still seeing some signs of that?
So I think the good thing that has happened is that last 18 months, we all know that there's a huge deleveraging that's happened in the industry. And because of which let's say what you call, there's a subprime segment in every segment. So the subprime has completely moved out. And the customers which are there in the MFI sector, and I'm not just saying for Fusion, are far superior. They are, let's say, the premium most customers. They have managed headwinds for the last 18 months. And I think all of us are fairly confident that going forward, let's say level 1 shocks will not alter the MFI sector or the MFI current set of borrowers too much.
Okay. And on the margin front, how much further margin expansion could be possible if funding cost comes down for you?
So you already seeing that the incremental cost of borrowing has come down. So it used to be what, about 13% few quarters back. So one, that has come down. There's a small our average cost of borrowing, you still see a little higher by 30 bips. That's because of M2M that we took, which is not actually a actual impact, which you will see away going in the next quarter. There is an impact. So the borrowing cost impact, let's say, will be about 10 to 12 basis point. Second, we had done an interest rate change on yield, of which only 40% impact has crept in the book because, as you know, it happens gradually. So there is another about 10 to 15 bips which will come from there. So I think from a current level of 11.93, there's a margin on NIM expansion expected of at least 20 basis points by end of the year.
And when it comes to the MSME AUM, it has reached to around 800 odd crore rupees. What is the target MSME AUM target that you have for FY27 and FY28? Any targets on the overall mix as well?
Right. So we're looking at 15 to 20% of the book coming from MSME. And I think the way the collection efficiency in the current bucket on MSME is also phased, we are 99.3% upwards, which again creates a clear runway for us that I think the right to win that we have created in the MSME will build on from here. Also, just to reconfirm that MSME is also a ROA accretive product. So our customer yields are about 20 to 21%. And this is also a strong ROA product, with obviously a much lower credit cost. What we are additionally doing is that there's a lot of real estate that we have in MFI. We will be utilizing this real estate for scaling up the MSME businesses. So there are 200 odd branches we have identified in MFI, which do MFI but are based in MSME catchments. We will be we'll be using these branches as spoke to the main hub MSME branches, and there'll be a dedicated MSME resource. We are expecting these 200 branches to add on the disbursement front at least 10 to 15% more from the current level. So about 8 to 10 crore additional disbursements coming from this. We have also launched an individual loan product for MFI borrowers in rural markets, where there will be a credit oversight from the branch credit as well as the MSME credit. So eventually, by let's say end of this quarter, you will have three clear verticals which will be driving growth. The existing JLG, which will grow at a certain pace, but individual loan from the existing set of JLG branches and done through existing employees, but with an additional oversight of credit from both MSME as well as the MFI credit. Just to reiterate, there are 250 branches in MFI which have credit, which are labeled as PQM or portfolio quality managers. So individual loan to MFI borrowers who've been with us for 3 cycles and more, I think we are expecting that book to be about 1,000 crores in the next 1 year. And the third is the MSME on the 90 MSME branches, plus on the 200 real estate of MFI. So these are the three growth engines that will be driving Fusion in the next 1.5 to 2 years.
Individual loan product, how much can it contribute going forward over the say next 1 or 2 years?
Yeah, so we have right now identified it only for customers who have completed 3rd cycle with us, which essentially are 3 to 4 years. The PAR for these customers is 0.2%, while our average PAR is about 1.8, 1.7. So about 2.5 lakh customers we have identified in this. We are quite confident that we will be at least 20-25% of these customers will be able to acquire in the next 1 year, which essentially means about 1,000 crore of book will get added in the next 12 months approximately on the individual loan.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Fusion Finance. Well, that was the management quite confident on achieving its FY27 targets. Moving on to our next management, that's 1.1 Solution. We are joined by Ashok Karnik, the CEO of 1.1 Solution. Sir, congratulations on a good set of numbers firstly. But starting off with your revenue, 2x revenue growth is what you're targeting for FY27. How much of that comes from AI versus human services?
This entire revenue that we have currently put together, which is 2x, is together because of our consolidation from last year, which we put together as what we purchased from our first quarter last year, which was basically Netcom. AI is still trying to really catch up on the grounds over there, and this year we will see a very marginal revenue contribution, but not really significant. But in another 2 to 3 years of time, the AI revenue will start growing up and be a significant number in the overall revenue for us.
Over the longer time period, how are you planning to involve more AI into your business?
Our AI has already started involving across our entire landscape of customers today. And as we speak there, we've been able to contribute in a very significant manner, bringing in value to each of our customers. So they are still picking up. They are trying to bring the contributions coming in. It requires a lot of work from both ends, not just from our ends. But we have moved far ahead. To just give you an example, today we support one of the large airlines in the Indian aviation segment. And we've been able to really offset about 30% of their volumes by manpower against an AI. And as a result, they have rewarded us with more business volume to us. So we're a very strong foothold. We've got about 6 to 7 implemented cases, 12 more cases are under pipeline. LATAM is also seeing a lot of traction on acceptability towards our AI business, and we're moving very strongly across all cohorts.
Okay. Now, when we speak about growth outlook how is the growth looking like for operating margins on the EBITDA margins front? What is the kind of expansion that we can expect from the company's side, say over the next couple of years?
So EBITDA will continue to remain very stable as we continue to multiply our growth at this point of time. However, with AI inducement, we will see about 3 to 5% of growth on our EBITDA margins, which you'll see over the next 2 to 3 years.
Okay. Any idea on the idea or anything that you could share with us when it comes to the guidance front and the growth levers that you're looking for the company, say for the next 3 to 5 years?
So we are looking at acquiring about 1 or 2 companies in the next 3 to 5 years, and our objective is to try and double our revenues, keep our EBITDAs constant, keep our PAT constant, induce AI. The newer companies that we are currently looking at are to be in America and LATAM region. And specifically in this region, we are looking at companies which have got brands which are Fortune 500, and we can leverage our AI to try and bring in much more value to them, see how this can improve their contribution as well as improve our contribution on the margins, and become a very large, globally respected company than what we are today.
Right. And you were talking about these acquisitions. Have you shortlisted anything? What are the key parameters that you consider while deciding on these acquisitions?
We are looking at EBITDA accretive companies all throughout. And as I said, that we are looking at Fortune 500 company logos that are being part of this organization. And the work for identifying the right set of companies from here on is underway. And that will continue. So hopefully we should be able to get the right mix, the right opportunity for us to really try and have them join us in this journey of growth for us.
Well, thank you, sir. Thank you for joining us and giving us the way forward for 1.1 solution. Well, that was the management, quite confident on growth and is looking for more acquisitions that could lead the growth for the company going forward. Well, with that, let's slip into a short break and we'll be back with more managements on the small cap segment post that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Small Cap Buzzers. Well, the next management on the show is Amagi Media Labs. Now, we are speaking with the management to understand more on the Q1 numbers. Sir, firstly, to start off with, when it comes to firstly, to start off with, you delivered a 24% underlying constant currency growth in the first quarter. What gives you the confidence that the 20% growth rate can be sustained, say, over the next 2 to 3 years? What are those factors because of which you're so confident?
So if you look at it fundamentally, given we are in the media technology business and the whole media industry is transforming worldwide. So this is a big tailwind for a company like Amagi as the whole transformation is happening towards streaming and globalization of content that's happening. So truly, if you look at it from a macro standpoint of where the media business is going and what Amagi's solutions and technologies are providing for our customers, we're quite kind of comfortable with the sort of growth rate that we're seeing, and we would see this in the mid to long term as well.
Now, streaming unification grew around 26% on a YOY basis and now is your largest business. How much of a future growth will come from winning new customers versus increasing the wallet share with existing customers in this segment specifically?
Historically and otherwise, if you look at our business, because it's a business-to-business transaction that we do with a lot of TV networks and content creators, if you look at it, you would have seen that NRR, which is the net retention of the company for the trailing 12 months, is 125%, which is a metric which tells you that our existing customers are doing volume growth with us as a company as you move forward. So essentially, if you look at it, this business and the behaviors of this business has always been that a large part of your continued growth comes from existing customers and you are adding new customers on an ongoing basis. So this is the exact trend that we're seeing across modernization, streaming unification, as well as in the marketplace and the monetization pieces. And I think that will continue to go forward as well. So to long story short, I think our existing customers would be a critical part of the growth process as we move forward. And having healthy addition of new customers, which we are quite comfortable in what we're seeing, and some of the wins that we've talked about today are clearly indicators that we are actually not only growing on the existing customer base from an expansion standpoint, but also being able to deliver new customers who would become the foundations for the future growth as well.
Right. Now, when it comes to EBITDA margins, they have expanded sharply in the first quarter, despite the fact that the gross margins were under pressure. How much further operating leverage is available, and what would you consider a sustainable EBITDA margin range, say, over the medium term?
So essentially, if you look at it, I think we've talked about it from the day from our IPO standpoint, is this is a high operating leverage business. Because it's a subscription-driven business, essentially what it means is that every year we are adding incremental revenue, and a large part of that revenue is what is actually flowing down to the bottom line. We will continue to see this as the trend line that we goes. If you look at our results and the presentations from investor presentations, you would see that if you look at it, our indirect cost structures are starting to really come down, right? So if you look at our sales and marketing costs, as well as R&D cost, they've come down from 24% to 21% in technology and 27% to 23% as part of our sales and marketing example. So you're going to continue to see this trend. So gross margin, I think we're comfortable in the zip code where it is today. And I think we should look at this business as a complete operating efficiency business across direct and indirect costs. And that's the story that I think will continue to play out for the next 3 to 5 years. We're quite comfortable about the leverage that's happening. Having said that, I think it is inching up. You would have seen that we were at 10.5% last year, moved to 11.5% this year on this quarter alone. And you're going to continue to see that inch up as we move forward as well. So we're comfortable. It's going to be some sort of a late teens in the mid to long term. I think is a very reasonable assumption to make.
Right. If you look at the receivable days, that remained around 95 versus your target of 80 to 85. What will drive the improvement going forward, and by when should, and will that also result into a strong EBITDA given the fact that there will be more free cash flow flowing into?
So essentially, if you look at it, again, this is in an annualized basis, if you look at it, right? So our business is fundamentally generating more growth, and the growth tracking down, and we're going to bring the cost, the monies from the growth directly into the bottom line. And that is the directional call that I would like to give you, is that will again convert to eventually to free cash flow. And this year, we've also demonstrated this quarter, we've shown that we've kind of, obviously we have a negative free cash flow, we've halved it already. So directionally, the DSOs increased for us from a collection standpoint. We're seeing that reduction in the DSO, which is helping us today. So all of that, directionally, we are in the right trend lines. Obviously, getting to positive free cash flow means that we should see more growth, and which is exactly the plan of the business as we move forward. So the trend lines, the trajectory, the execution that we're doing, exactly the direction. There's no surprises per se in terms of how we see this today.
Thank you, sir. Thank you for joining us and giving us the way forward for Amagi Media Labs. Moving on to the next stock, that is Technocraft. The stock's been buzzing. It's a new listing, and a stellar listing is what we have seen. What are the factors that are aiding this? Let's get in Parth.
Right, Somit, a bumper listing for Technocraft Ventures. Issue price was 212 rupees and the stock came in at and listed at 284 rupees, implying a listing gain of around 40% today. Now, coming to a very quick SWOT analysis of the company, they have a strong order book of around 1300 crores, gives a good revenue visibility going ahead, very good return ratios as well, ROE of 26.5, ROCE of 27.7% as well. Coming to the weaknesses, two states, they have really high revenue concentration in UP and Rajasthan, around 88.6% revenues coming in from these states only. Also, their conversion rate is order conversion rate is pretty low at just 29.4% in FY26. Coming to opportunities, the water infra industry is pretty big. Government is spending around 7.6 lakh crores in the period of FY27 to FY31, and also the company has started winning orders. They won the L1 status of 196 crore Delhi Jal Board project as well. Now, lastly, coming to the threats, government is 100% of their revenue, so there will be that delays and receivables risk for them, and also they have a debt of around 76.7 crores, so that finance cost risk still stays in the picture. So that's the quick SWOT analysis of Technocraft Ventures.
Moving on to the next stock that remains in focus, John Cocktail. That stock is one of the top losers among the small cap stocks. At one point of time, it was down as much as 15%. Let's get in Varsha to understand more on what could be the potential reason behind this fall.
Well, it's Q1 numbers basically. So there was a good growth when it comes to revenue, but EBITDA loss is one of the key concerns. The EBITDA loss was actually, or the EBITDA was impacted by project mix and integration costs. Well, management is expecting a stronger H2, though JVD technology and global integration, if you see, remain a key long-term growth drivers for the company. Talking about value-added service mix, because that's where the pain point lies. If you see, the service contribution fell to nearly 1/3 of revenue, and lower project progress reduced service revenue. Well, company says that the service backlog remains strong, and the higher service mix is the key trigger for margin for the company, or for EBITDA for the company. Now, H2 outlook, they are expecting stronger execution when it comes to H2 FY27. Revenue run rate likely to improve meaningful. Additional order wins is expected before year end. Talking about their vision, that is 8,000 crore vision. So they reaffirm 8,000 crore as the long-term growth. That the growth will come from, of course, JVD, Voltron, and acquisition. So overall, revenue growth was fine, but it's the margin, or rather EBITDA, which is the pain point, which is led by lower, value-added service mix.
Right, thank you Varsha, thank you for that. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप संभूल के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे कैसे
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday,
Good afternoon, you're watching the afternoon edition of Ask Profit with me, Somit Sarkar. Now, if you look at the markets, up till the last half an hour, the market was quite dull, but in the last half an hour, we have seen some strong movement on the upside, and right now the markets are largely flat. Earlier, it was trading at least 100 odd points down in trade, and currently, we are struggling around the 24,400 level, which seems to be a resistance, but if it manages to cross that, then 24,500 is something that technical analysts believe is something that we could see on cards. Apart from that, if you look at the sectoral indices in trade today, Nifty Pharma is the top sector loser, down around 0.7 odd %. And right now on the gaining side, we have the Nifty Private Bank Index, which has also managed to come in the green, which clearly shows that the gains that we are seeing in the market today has been led by the private banking names. Now, on the Nifty, if you look at the stocks that are contributing to the gain, ICICI Bank, HDFC Bank and Bharti Airtel. These are the three major stocks that have been leading Nifty on the green right now. And Nifty Bank also largely flat. It's just down 0.1%, down around 50 odd points, because the private banking names have been pulling the indices higher on the trade. But let's start with the afternoon edition of Ask Profit. We are joined by Ruchit Jain, the technical analyst, research with wealth management, Motilal Oswal Financial Services. Ruchit, coming to you, the very first query is on Aventel. The viewer, Dr. R.B. Reddy from Hyderabad, he's holding around 1,000 shares of Aventel at a price of 185. Should he continue to hold or average this counter?
Do not average, because more or less the trend for the stock is sideways. Major support is around 155 to 152. So keep a stop loss below 150 and hold your existing positions.
Coming to our fundamental guest, Sunny Agarwal, Head of Fundamental Equity Research, SBI Cap Securities. Sunny, the first query coming to you is from Gautam from USA. He's holding 2,500 shares of PFC, bought at a price of 390. Should he continue to hold or sell these shares?
Yeah, good afternoon. I think he can continue to hold, but one has to keep in mind that PFC and REC merger is on anvil, and post-merger, maybe FY28 is the year where we will see a decent up move in terms of growth in terms of loan book and pursuant earnings. So if you have slightly longer term investment horizon, definitely you should continue to hold.
From Bangalore, his query is on Allied Blenders. He's holding 20 shares, bought at a price of 622, currently sitting on a loss. What should he do? Should he continue to hold this counter or exit? Sunny, any view here?
Yeah, would recommend to continue to hold, as the company has been continuously delivering a solid set of earning growth. Although this quarter was slightly muted, but what I feel is that going forward, the growth prospects are pretty robust.
Okay, Jai Shri from Coimbatore is holding 50 shares of KEC International. Should she average or sell? Ruchit, any view here?
The trend for the stock is clearly negative. A clear low top, low bottom structure last 4 or 5 months when the broader markets have done so well. Still, there is no participation on the positive side, and in fact, the pullback moves are clearly getting sold into. So my advice would be to exit from the stock and look for some better opportunities where actual gains can be made going ahead.
Raja from Chennai is saying that he has been allotted 94 shares of Leap India. Should he continue to hold this or exit? Sunny, would you have any view on this counter? It got listed today in trade.
So we do have a neutral view when we came out with an IPO note, as we believe that the valuations are pricing in the growth potential of the business. And anyway, the company continue to be in a very asset-heavy business with an ROE, ROC in the range of 8 to 9%. So I would recommend to exit at a current juncture and maybe wait for a quarter and to track the performance of the company and to re-enter into this Leap India.
Right, the next query is from Jai from Tirupur. He's holding 100 shares of Vari Energies, bought at a price of 3,054. Should he average now, hold or sell? Sunny, any view on this?
Vari, I think you can continue to hold at a current juncture, although we have seen that the entire solar industry is not in momentum or is not getting a very handsome valuation. But the kind of growth plan which the company has unveiled for the period of next 3 to 5 years, seems the business will gradually get diversified into the other areas of renewable. So if you have long-term view, definitely you should continue to hold and gradually average over the period of next 3 to 6 months.
Next query is on CG Power. Aniruddha wants to know whether should he buy CG Power at the current market price for long term. Sunny, your view on this?
Yes, can be added. What I believe is that the fair value of the business is closer to 1100, 1150. So keeping that price target in mind can be added in a portfolio.
The next query is from Vishwanath from Kurnool. He is holding 816 shares of Indo Farm Equipments. The query is for you, Ruchit. He wants to know whether should he hold or buy more to average this counter or just exit. Any view here, Ruchit?
Just hold your current positions, but do not average over here. We have seen a bit pullback move recently from the lows, but still volumes are missing on pullbacks. So until we see a good price volume action, do not expect a big trended phase. So for now, I won't advise to do any kind of averaging or adding more to your portfolio. But 130, 135 is the range where no major support for the stock is seen.
The next query is from Lavanya from Ilurus actually. She's holding 200 shares of Bharat Dynamics bought at a price of 1,390. What should she do? Should she continue to hold this counter or sell? Sunny, your view, the company just came out with their numbers. On the face of it, it looked quite strong compared to what the street was anticipating. But what's your view here on Bharat Dynamics?
Recommend to continue to hold, although quarter-on-quarter numbers are lumpy because of the changes in execution and the kind of final product delivery. But the kind of focus the government have on the missile front, I believe the Bharat Dynamic is one of a key beneficiary, and I feel the fair value of the business is closer to 1,800 rupees. So keeping that price target in mind, one should continue to hold.
The next query is from Sundar from Madurai. He's holding 200 shares of Shakti Pump at an average price of 720. What's the outlook on this counter? Should he continue to hold or should he exit? Any long-term view on this, Sunny?
Coming to Shakti Pump or Oswal Pump, predominantly solar pump companies, there we have seen that there has been delay from government in terms of rollout of Kusum 2 scheme, which has recently get over in the month of March, and the state government tenders are witnessing a slightly increase in competitive intensity, putting the pressure on margin. So maybe one can exit on rise or wait for the Kusum 2 policy to be revealed to the public. So maybe wait and watch. Let's wait for stock to recover, and then one can switch to some other better stock at a later point.
Okay. The next query is from Vijay from Chennai. He wants to know the short-term target for Cochin Shipyard. Ruchit, your view on Cochin Shipyard?
For now, it has been witnessing some consolidation. The 200 DMA resistance is around 1530, 1540. So that needs to surpass for any kind of trended up move. So 1530 to 1450 is the immediate trading range for the stock. If it manages to surpass that 1530, 1540, then expect levels around 1670 in the short term.
Next query is from Siva from Amravati. He's holding few shares of Z at a price of 159, currently sitting on a big loss. Should he hold or book losses? Ruchit, any view on Z Entertainment?
Hold for a pullback move. Good volumes have been seen at lower levels, and 90 is a good support for the stock. So I would say just keep a stop loss below 90 rupees and wait for a pullback towards 115, 117, where you can take a review account.
Okay, the next query is from Yara Raja. He's holding 1,000 shares of Tata Tech bought at a price of 780. Should he hold or sell? Sunny, any view on this?
Tata Tech, right?
Yeah, Tata Tech.
I think should continue to hold if you are a long-term investor. What I believe is that IT has made a temporary bottom, and there is some positive momentum as far as IT pack is concerned. But if you are a trader, I think one can book profit. If you are a long-term investor, should continue to hold.
Okay, Kavya from Hyderabad wants to know whether is it a good time to buy Viyash Scientific. Ruchit, have you tracked this counter on charts?
Yeah, so broader, there is a high top, high bottom structure on the chart. So overall trend seems positive. 240 to 250 is a good support zone for the stock. So maybe and some more dip towards 240, you can create fresh longs there.
Okay. Satyan here wants to know, he's holding LIC Housing Finance at 570, wants to know whether should he average or exit this counter. Sunny, any view, LIC Housing?
I think one should exit because the company has not been able to deliver any meaningful growth. Despite of trading at less than price to book, the growth is one of a challenge for LIC Housing. What we suggest is that better to shift to other housing companies like Home First or India Shelter, where we are witnessing a 20% plus kind of growth in terms of advances. So better to move out of LIC Housing and shift to better counter.
Sriram Raghuram Raman from Chennai is holding 8 shares of Fredun Pharma at an average price of 927. What's the fundamental view on this, Sunny?
Again, coming to Fredun, I think the company has been doing pretty well in terms of financial performance. So we have seen that profit has doubled over the period of last 2-3 years. So would continue to recommend to continue to hold as the growth potential is still better going ahead.
Right. Let's get in a caller query coming in from Mysore. Mohan, you can go ahead and ask your query.
I just want to know, can I buy Pine Labs for a long-term perspective?
Okay. Sunny, should Mohan buy Pine Labs from long-term perspective?
Again, coming to Pine Lab, what I feel is that the recent likely regulatory change on MDR is likely to augur well for all these payment-related intermediaries like Pine Lab and Paytm. So would recommend to continue to hold from a long-term perspective and can be added at a current juncture.
Right. Yet again, a caller query coming in from Hyderabad. Vaishnavi, you can go ahead and ask your query.
Yeah, good afternoon, sir.
Good afternoon, Vaishnavi.
Yeah, I'm having Ashok Leyland, the 2000 shares at 170 average.
And you can hold this for long term? Okay.
Yeah,
Sunny, your view on Ashok
short term view on this?
Right. Sunny, your view on Ashok Leyland?
So today the company came out with a number, I think slightly below the street expectation. Hence, we have seen a kind of negative reaction in the trade today. But we believe that again, the long-term prospect continue to remain good. Especially we have seen a very healthy volume growth across both HCV and medium and light commercial vehicle. So we'll recommend to continue to hold. We believe the fair value of the business is closer to 200 to 10 rupees. Keeping that price target in mind, kindly continue to stay remain invested.
Okay, the next caller query is coming in from Vizag. Chaitra, you can go ahead and ask your query. Chaitra? Okay, her query was on, yeah, I think we have connected the line with Chaitra. Chaitra, please ask your question.
Yeah, yes, sir. Good afternoon.
Good afternoon.
I'm having HL, Hindustan Aeronautics, 85 shares at 4,500 average. So what is the short-term target for this?
Okay. Ruchit, any short-term targets for Hindustan Aeronautics?
You can expect levels around 5,400 to 5,500 range, which were the previous swing highs seen in the month of July 2024. So recently the stock has given a good breakout on the weekly and the monthly chart. So hold on the existing portions for those targets.
Okay. The next query is from Gananath Maheshwar. He wants to know whether is it a right time to enter Tata Motors PV. Sunny, any view on Tata Motors passenger vehicle?
Again, the company continued to disappoint on financial performance as we have seen a margin pressure in JLR portfolio. But what I feel is that ultimately the stock is trading closer to its bottom, so risk reward continue to remain favorable. But for stock to move up from the current level, ultimately company to deliver on number front. So maybe it will be a slightly a patient capital that can invest in Tata Motors PV. We believe among the four-wheeler, relatively Maruti and Hyundai Motors are well placed if somebody want to ride from a short to medium term perspective. Tata Motors PV, if only you have 12 to 18 month investment horizon, and Maruti and Hyundai if you want immediate capital gain over the period of next 3 to 6 months.
Rakesh from Andhra Pradesh is holding 1 lakh shares of PC Jewelers, bought at a price of 9.6 rupees. Should he continue to hold this counter? Ruchit, any views on chart?
Of late, we have seen that the jewelry stocks have witnessed a good up move from the lower levels, but PC Jewelers has rather been more of a range-bound counter. 11 is the resistance for the stock. So until we see a breakout about 11, the stock is expected to trade within the range of 9 rupees on the lower side and 11 rupees on the higher side.
Right. The next query is a caller query coming in from Hyderabad. Sudhakar, you can go ahead and ask your query.
Yeah, good afternoon, sir.
Good afternoon.
I'm Sudhakar from Hyderabad. I have got solar industry shares at 30 numbers at 15,900, sir.
Okay.
What is the resistance level and shall I continue to hold? Because the results looks to be good.
Okay.
Can you kindly clarify, Agrawalji?
Right. Ruchit, any resistance that you're seeing for solar industries, any target that you could suggest here?
The stock is trading around its all-time high levels. So if you put retracement of the previous corrections, then it gives a potential targets around 21,300 to 21,400 going ahead. So you can expect those levels going ahead, and immediate support, that is a 20-day MA for the stock, is now around 18,800. So 18,800 is the support, whereas 21,400, 300 are quite possible.
The next query is coming in from Venkat from Hyderabad. He wants to know the target for the next 6 months for Divi's Lab and also whether is it a good time to buy right now. Ruchit, any view on Divi's?
Broader trend has been positive. The stock has been a relative outperformer within the pharma space if you see over last 3 or 4 months. But just because of the recent run-up, the momentum readings are in overbought zone now. So such overbought setups get either through some price-wise correction or time-wise corrections. I would advise to keep a bound-dip approach. Any decline towards 8,000 level would bring the risk-reward ratio favorable. So maybe around between 8,100 to 8,000 if we get go long at those levels with stop loss below 7,700 for potential move towards 8,800 then.
Okay, Kumar has bought few shares of JK Tyre at a price of 595. He wants to know whether should he continue to hold, exit or buy more. Sunny, any view here?
Again, can continue to hold, although we have seen margin pressure for most of the tire companies during this quarter. But again, the price action has been initiated to recoup the margin going ahead. So can continue to hold JK Tyre.
Right. The next query is on Inox Wind. Rajiv from Delhi is holding few shares for the next 6 to 9 months. Any target that you could suggest on this, Ruchit?
Overall trend is negative. Has been a relative underperformer in last few months. Then the stock has continuously forming this low top, low bottom structure. On the higher side, 82, 83 is the immediate resistance for the stock. So I would suggest to keep a sell on rise approach. Any pullback moves, if we get in between, take that as an opportunity to exit.
Right. The next query is coming in from Narayani from Coimbatore. She's a long-term investor and wants to know whether should she buy Grasim Industries or Tube Investments. Sunny, any view on both any of these counters?
One is Grasim and which one is the other one? Tube Investment. Okay, yeah. So again, Grasim have reported a good set of numbers this time, predominantly standalone business. Continue to do well, but at the same time we have seen a massive up move during the last 6 months. So maybe buy on dip is a strategy which one can adopt if somebody want to deploy fresh capital. And if you are holding in a portfolio, kindly continue to hold. Tube Investment, again a proxy play on automobile industry. So that industry continue to do well. Again, would recommend to continue to remain invested in Tube Investment.
The next query is from KCP Rao from Hyderabad. He wants to know whether should he purchase 10,000 shares of Finiotex Chemical, but not for long term. So Ruchit, any view on Finiotex Chemical?
So yes, we have seen decent consolidation in the stock over last few months. So I think going ahead, the stock needs a breakout above 45, 46 rupees. So I would say keep it on a watch list. If it manages to surpass 45 resistance, then create fresh longs above 45 only.
Well, with that, let's start our rapid fire segment. Ruchit and Sunny would kindly request you to keep your answers short so that we can take in as much as queries we want to. Firstly, coming in from Jyoti, Bharti Airtel 120 shares is what she is holding at a price of 960. Should she continue to hold this, Sunny?
Hold, yeah.
The next query is for you, Ruchit. It's on Power Finance Corporation. Subrata Mukherjee from Kolkata wants to know whether it is the right time to buy PFC.
Avoid.
The next query is for you, Sunny. It's from Shankar. It's on Bellrise Industries. Shankar from Bangalore is planning to buy 500 shares of this counter. Should he do that?
I would recommend the company declaring numbers today. So post numbers, maybe you can take call on Monday.
The next query is on Divki Torque and it's for you, Ruchit. Nandgopal from Bangalore wants to know whether should he enter this counter from short to medium term perspective.
Can buy with stop loss below 1200.
Right. The next query is for you, Sunny. It's on Quality Walls. The viewer wants to know whether it is a good time to buy Quality Walls.
If you are a long-term investor, definitely can be added in the portfolio.
Okay. The next query is on Canfin Homes. The viewer wants to know whether should he buy Canfin Homes for long-term. Sunny, your view?
Can be added, but relatively performance is muted as compared to the other housing finance player. We would recommend you to add Home First against the Canfin Home in your portfolio.
Right. Next query is on PG Electroplast and it's for you, Sunny. Akash from Bangalore wants to know whether it's the right level to enter PG Electroplast.
Can be added, although we have seen a muted performance. What we believe is that next 2-3 quarters should be relatively better. It can be added if you are a long-term investor.
Right. The next query is on Cabra Extrusion. It's for you, Ruchit. Ankur from Ghaziabad is holding around 200 shares, bought at a price of 81. Should he book profits or continue to hold?
Book partial profits and continue to hold rest positions for targets around 570.
The next query is on Pidilite Industries. It's for you, Sunny. Mandeep Singh from Jaipur is holding 10 shares, bought at a price of 1500 rupees. He wants a view for the next 3 years. Should he hold?
3 years, one can expect a return of 12 to 13% CAGR from a Pidilite. Keeping that price target in mind, one can continue to hold.
Okay. The next query is on NLC India. It's for you, Ruchit. Gopi Krishna from Bangalore has bought 3,000 shares at a price of 345. Should he hold this counter? Any targets?
Hold at current price. Review again on pullback towards 300, 320.
The next query is on Keynes Tech. It's for you, Sunny. E. Venkatraman from Bangalore wants to know whether should he buy this counter at the current level.
would recommend not to add immediately, as company has been facing a lot of cash flow related issue. So maybe wait and watch for a quarter or two, and then one can take call on case tech.
The next query is for on Petro and LNG. It's for you, Ruchit. Sriram from Chennai is holding 90 shares, bought at a price of 347. Should he average at the current levels or avoid?
Avoid averaging.
The next query is on Federal Bank. Jyoti is holding 1000 shares, bought at a price of, okay, it's on Fed Bank, not Federal Bank. She's holding 1000 shares, bought at a price of 96 rupees. Should she continue to hold this, Sunny?
Fed Bank Financial, okay. So again, Fed Bank, yes, we have seen a good recovery in the entire microfinance and the such kind of portfolio. So can continue to hold.
Well, that was the last query on the afternoon edition of Ask Profit. Thank you, Ruchit. Thank you, Sunny, for joining us and solving as much as queries we could. Actually, we have managed to solve around 110 queries, including the morning edition and the afternoon edition. And with that, it's a wrap on this edition of Ask Profit. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
ऑप्शन दूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे टाइगर कैसे
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. We're coming to you live from the NDTV Profit Suzlon studio, and we continue to celebrate India's 79th Independence Day through the day today, ahead of tomorrow, of course. And everybody's celebrating in the newsroom as well. It seems like a little bit of cheer coming through in the markets as well. Pull up the intraday chart for the Nifty 50. We've come back.
But sustainability is the key, right?
Is the key. It's come off the low point of the day, and I wonder which stocks here are contributing to this. We're still under that 24,400
mark. In fact, let's just pull up Bank Nifty as well and see if it is mirroring a similar kind of a pattern. There you go. Absolutely a similar pattern, 0.2% lower. But let's look at the heat map in terms of Nifty 50. And then we look at contributors as well post that.
I would think the private sector banks would have come off the low point.
And that's what it seems like, because look at it. You know, your hospital, which is the top gainer, and this is running up after the 2 days after the earnings. So it's interesting to see what's happening to Apollo.
Bharti's really picked up.
Bharti's picked up. Adani Enterprise and Ports, both of them are doing pretty well in trade. Wipro, eternal trend again from the consumption pact, but you still have HDFC Bank, ICICI Bank not giving up complete gains right now, but trading in the positive. But look at what's losing out and what's putting pressure.
Yeah, Tata Motors
PV, and it's the JLR impact coming in there.
But you know what? I would like to pull up the intraday charts for 3 counters, which is one Bharti Airtel and then followed by HDFC Bank and ICICI Bank. Because if anything, I think that this has contributed to a certain extent to the gains. And we look at the contributors chart
in a couple of hours of trade, you've seen that spike which has gone up.
And pull up ICICI Bank and HDFC Bank as well, because I would hazard a guess to say that there you go.
And
so
that's
there's
just
a big
in the last
spike.
15-20 minutes.
There's a big spike. So pull up HDFC Bank as well. There seems to have been a significant buying in these large heavyweight counters.
Look at contributors. Let's just pull up the contributors of Nifty 50, and then we look at the sectoral heat map as well. If you just see what's contributing, look at that. Bharti Airtel 38 points. I mean, I don't think so. I've seen a 38 points kind of a contribution in a while from a Bharti Airtel. HDFC, ICICI Bank very similar, and Apollo Hospitals. SBI on the other hand, so again you're seeing that PSU private bank kind of play, inverse play that's coming in to the fray. Reliance Industries is under pressure, Infosys, Asian Paints as well, but you still have that, you know, individual contribution. Just forget these names as well. Look at the others. That 62 points contribution is something which is actually playing out versus all your top 5 gainers that are contributing.
Yeah, let's take a look at the broader markets as well. Or you might actually see it here, but you'll have to look a little bit.
Small cap 250 is down almost 4/10%.
The mid cap index is, well, 100, mid-cap 100 is down about 0.4%. So the broader markets are not doing as well as the benchmark Nifty 50. The consumer durables index and the media index are up about.
Media is all about Z.
Yeah, it's all about Z. And pharma, you had that positive judgment that came through.
Brokerage is positive.
From the court. Pharma is down, CPSE is down, Nifty oil and gas. But let's pull up the mid-cap and the small-cap index just to show you whether or not
the intraday charts will be
come
interesting.
off the low point of the day. They're not. Mid-cap index is just about 0.4% lower, so too the small cap index.
Nearly at the day's low.
Pull up the advance decline ratio as well, and you will likely see that the declines are pipping the advances at this point, at least based on what you've seen in the broader markets, and that indeed is the case.
Absolutely. So clearly the breadth is something that we need to now look at. There's a lot of stock specific action in the markets as well, but I think the key factors and the levels is that 24,400, which is broken, and that's the reason why you're not getting that kind of alpha that's coming in. See, you hit a high of 24,400, and that's been that resistance area, and from there you've seen Nifty which has come off the highs as well.
We should speak to Rudramurthy, who's with us. Rudramurthy BV. Rudra, I'll come to you on the charts. And what are you seeing on the benchmark Nifty 50 that may give you a sign of what is to come next week? We've seen the VIX capitulate. It's still below that 12 mark, if I remember correctly, unless it's moved up above 12 in the last 1 or 2 hours. So therefore, are we likely to see more consolidation?
Good afternoon. Thanks so much for having me in the show. See, markets, if you see, especially on the Nifty and Bank Nifty, yesterday we have seen that first outperformance happening on Bank Nifty compared to Nifty, and that has been mostly because of PSU banks. Again, if you see today, yes, there has been some respite shown even from private banks, just now in your discussion which you mentioned. And for me, what is important is, yes, index is consolidating. Now the range is bit broad. On the lower side, if you see, yes, Nifty is taking that support at around 24,200, 250 range. And yes, there is a resistance kicking in at 24,500, 24,600. Or if you go a bit deeper, yes, 23,800 to 24,000 has been a very strong support, and market has held it now for a long time. And again, you are seeing some selling coming at around 24,600. So broadly speaking, this 600 point kind of a range is maintained by Nifty. And if you see Bank Nifty, similarly, it's a 1,500 point range, broadly between 57,000 to 58,500. So for me, I will still remain bullish on market. I will use every dip as a buying opportunity. And most important, this West Asia war effect is not seen now on the screen. So all the Trump mayhem which was happening around and too much of trouble what we were seeing in terms of volatility, that is not happening. And even Brent crude is also definitely below $100 per barrel. FIIs more or less have stopped their huge selling of 4,000 crore plus what you were seeing before. So to conclude, this is a market which I will use to buy every dip. I will remain very, very stock specific and sector specific. And specifically, if you see sectors which I like, Alex, look at the huge outperformance what you are seeing in new age and platform stocks. I've been bullish for this sector for a quite long time. Even now I see value in it. Look at stocks like Paytm, how it has performed. Even see for that matter Nykaa. And I still like stocks like Eternal, and even delivery at current levels look good to me. So you have to be very sector specific and stock specific. One such is new age and platform sector. Metals look good to me at current market price. I see a lot of value in stocks like, let us say, Hindalco. Even for that matter, look at steel. Look at even gold and silver, which has more or less bottomed, and that will help a lot of related companies. Right. So these are some sectors and stocks which I really like.
Okay, so in terms of individual stocks, Rudra, if you have to give top 3 picks, which are the Independence Day picks, which would they be?
So for me, the first stock will be from new age sector, and I pick Eternal at current market price. So buy Eternal at current market price. Look at targets of 360 and even 400 to come on Eternal. And I'll keep a stop loss of 300 for this long call. I expect a big move like Paytm, which has recently happened in Eternal in coming days. So second stock for me is Manappuram. The quarterly results which came was definitely a beat, and because of pre-positioning, stock corrected post the result. Available in F&O, but it is in ban. One can definitely buy it in equity delivery. At current market price, I will be a buyer in Manappuram. Looking at targets of 380 and 400 to come on the stock. 335 can be a stop loss for this call. And another stock, if I have to pick from this entire lot, third one, PNB looks very good to me, and I'm very bullish on PSU banks. So I am picking up PNB. Even SBI for that matter looks good at current market price. Risk reward is very favorable even to buy SBI, but it's a choice. I'm picking up PNB.
So you're making a choice. Okay, you're making a choice, Rudra, with PNB versus SBI right now. Okay, let me get in Vijay Chopra as well. Vijay, good afternoon and welcome to the show. In this kind of a market, which is absolutely in consolidation mode as well, you're seeing a lot of stock-specific action. What would your top bet be at this time?
I think that we have to be very, very picky as far as the market goes. Presently, I don't see any, upside or downside. The markets are going nowhere. The investors are kind of perplexed where to put money in. So I think that defense is one sector. I've been liking defense for a number of years now. Defense, you can look at companies like BEL, BEML, DDL, Mazda, Cochin Shipyard. These are some of the companies which are on my radar. Apart from that, I think that metals have taken a beating in the last 2 days. But again, they are down but not out. I believe that these are good times to pick up good stories like Hindustan Copper looks very good. Midhani looks very good. Hindustan Zinc looks very good. If somebody wants to buy with a medium-term perspective, because, we are in a long-term metal bull run, and any opportunity, any downside is an opportunity to buy. So I think that, copper stocks, zinc stocks, they should do very well. So defense and metals I'm looking at right now.
Defense and metal specific stocks though, Vijay?
Yes, so I mentioned that many stocks, VEL, BDL, BEML, Mazagon Dock, Cochin Shipyard, to name a few in defense. Apart from that, in metals, as I mentioned, Hindustan Copper, Hindustan Zinc,
These are good stocks to have. Mishra Dhatu Nigam. So these are good stocks to have in a portfolio with a medium-term perspective. But I do not recommend any intraday.
Of course, not. No.
Absolutely.
We
The
wouldn't
idea-
expect you to.
Yeah, the idea, Vijay, to ask you the question in terms of your topic was from a longer term perspective and taking into consideration today's Independence Day. So just on that lines. But let's also talk about the stock of the day today, which is Galaxy Surfactants. I mean, that stock is locked in upper circuit. Good set of numbers. Varsha joins us with what has really worked for the counter. Varsha, over to you.
Well, first let's talk about numbers. How were numbers? If I were to talk about the 4 key numbers, revenue was up almost 40% year on year at 1,782 crore. Let's look at EBITDA. EBITDA was up almost, at 249 crore versus 124 crore, almost doubling of EBITDA over here. If I were to talk about margins, margins were at 14% versus 10% last year, huge upside. And net profit was, of course, more than doubled at 166 crore versus 80 crore last year. Now let's see what are the key drivers for this. Volume growth. If you see, overall volume growth was in mid-single digits. Even performance surfactant, if volumes over there grew mid-single digits, the specialty care volumes also grew mid-single digits. So overall, there was a good growth when it comes to volume. Now, India had, there was a strong growth which was seen in India, which returns to double-digit volume growth after nearly 2 years. So this was one of the highlighting points. Growth was driven by tier 1 customer demand, and also the reformulation related volumes made a comeback, which was also one of the reasons why you're seeing a very strong growth when it comes to the domestic market. Now onto the specialty care, which is a higher margin segment for the company, saw mid-single digit volume growth over here. Favorable product mix led to that margin spike that we have seen overall. Key contributor which led to the improvement in the profitability. Talking about margin drivers, product mix is the main reason why you're seeing a good spike in margin. Of course, disciplined pricing strategy has also led to the margin expansion, and the better operating leverage was also one of the reasons. Talking about international business, well, EMET volumes dipped slightly due to West Asia disruptions. It saw high teen sequential growth, signaling recovery. Now, talking about commentary, what management is expecting? Well, demand recovery is visible across market. Strong momentum in specialty care is expected, and India business remains robust for the company. So overall, there was a good volume growth. There was a disciplined pricing that company has seen, and the highlighting point over here is the margin expansion, which was led by product mix, and of course the overall numbers were also great for the company, and hence you're seeing stock is up almost 20% in trade.
Thanks so much for that. The only question though is, Vijay, can you extrapolate that to the rest of FY27? There are no sellers in the stock today. And so even if you want to, you can't get it. But once that circuit opens, and assuming that there is an opportunity down the line, would you say that this is something to consider?
Well, yes, I think that the stock has been in consolidation for about a year, and we haven't seen much. And once the circuit opens, probably, because it's a gap up, we'll see the gap getting filled. Generally, it gets filled. But yes, if somebody gets an opportunity on the downside, so it is definitely a buy. But yes, I don't think that, once the circuit opens, to just jump and buy, no point in that, because the gap has to be filled. And if you get the stock around 2100, 2150, that would be a great level to get into the stock with a medium to long term perspective.
Okay, all right. Let's talk about Z Entertainment. Pull up the intraday chart. It's seen a spike, and this is after the SAT, the Securities Appellate Tribunal, has set aside the SEBI order which barred Z Entertainment and its promoters from accessing the markets. Nimit's joining in to tell you about what this is all about. Nimit, what were the arguments and what was the outcome?
A big breather for Z Entertainment coming from the Securities Appellate Tribunal, as it has provided interim relief to go ahead with its 3,143 crore preferential share warrant issue in the face of SEBI's market ban, which was put on the company for 2 months and on its CEO Puneet Goenka for a year. Now, 2 days ago, the matter was argued in court, where Z made the case that the approval, the shareholder and the board approval for this share warrant issuance came before the issuance of the SEBI order. SEBI said that it does not matter when the approval came, because they're trying to do it in the period of the market ban that's been imposed, then they need to be restricted from doing it. The key question that the Securities Appellate Tribunal asked SEBI here was that if this is in principle not being opposed by SEBI as a transaction, then what is the difference if they do it now as opposed to 2 months from now? Z also made the case that the valuation and timing is critical here, that the value of the shares that are being issued at now may change over the period of 2 months, and investors will be hampered because the money finally goes into the company. The amount that will finally come may reduce, and that risk is something that Z pointed out to the judge. What the judge tended to agree here, and judge has provided interim relief to the company to allow the issuance to go forth. It's also allowed it to access its mutual fund units for dividend payout. Remember, all of this lastly is subject to the fact that Z pays out the penalty on deposit that has to do in any appeal process. So once it does that, then the interim order will not apply to it for this purpose, and it can go ahead with its preferential share warrant.
Thank you, Nimit, for that. In fact, Rudra, let me come to you. If you have to look at the Z Entertainment from April lows, the stock is up nearly, 35-40%. Would you say, with everything that's happening around, probably this is the time to book profits, or are you seeing any momentum on the charts?
Hiral, very clear view on Z. First of all, I will keep a stop loss of 95 and look at targets of around 115 to 118 to come on Z. Yes, even from here, you can see a move of around 10 to 15% from current market price. So I will be a buyer here, keeping a stop loss of 95 and look at targets of 115 to 118. But one thing I am very clear, this stock is not an investment stock. It has disappointed people for a long time. I know Z from where to where it has fallen down, but then one should clearly understand that this is not a stock to own for a portfolio. And remembering Rakesh ji today on a day when he has taught us so much on market and had occasion to meet him one-on-one lot of times, he always says, you should know which is your trading stock and which is your investing stock. Never make an investment decision turn into a trading decision. Also, never make a trading decision turn into an investment decision. So remembering him very clear, this is a trading stock, not an investment stock.
Okay, trading stock, not an investment stock. Moving on, Somani Ceramics, that company has reported a strong first quarter, revenues up 24% and net profit surging more than threefold year-on-year basis. In fact, the margin expansion has remained the key highlight that was helped by higher realizations, better capacity utilization, and a stronger contribution from its bathware business. Abhishek Somani, MD and CEO at Somani Ceramics, joins in. Abhishek, welcome to the show, and always a pleasure to speak to you. Overall, if you have to take cues from what's happening, in the first quarter, or what happened in the first quarter, how are you looking at the remainder of the year? Because the expectation was that on the back of gas unavailability, and the problem that the ceramic companies faced, yes, there was movement that happened from the unorganized sector to the organized space, but any negative aspects which have not really played through in the first quarter that could come in the remainder of the year?
Thank you for having me, first of all. So what has happened in this last 4 months of volatility is that Morbi was shut, which is the cluster in India for ceramics, was shut in the month of April, and pretty much till the 10th of May because of labor shortage and all of that. At that time, we gained a little bit of market share, but since then, Morbi has come back completely alive. So Morbi, all the units are running, which is about 80% of the units are running. And the 15-18% which are not running will probably not run at all, because there is a little bit of a tailwind today for demand with the outage of 1.5 months. The only negative which we faced in the first quarter is that we did not get enough material in April, in May. That stunted our volume growth. Otherwise, normally our volume growth would have been, in this quarter, would have been closer to 6%. So that is the only negative. What is played out in the positive is that we are running our plants at virtually 100% capacity, both our JVs and our existing plant. And also the other positive is that we're able to pass on the entire natural gas pricing into the market. And that's been well accepted.
Interesting. Abhishek, hi, this is Alex joining as well. And so I'm curious about a couple of things that you've mentioned. Generally, in the space that you operate in, when there are supply chain related issues or issues relating to availability of gas, etc., that has caused a production delay more than anything else, there is a catch up of volumes that takes place. And I'm wondering whether that is likely to take place in the second quarter, and therefore what the volume growth is that you're penciling in. One, two, what is the quantum of pricing that has already gone up?
Right. The pricing went up approximately 16 to 17% for the organized players, and because the unorganized players were that much cheaper from word go, their pricing increase has been close to 35 to maybe 45%. So to that extent, our pricing between the unorganized and the organized has narrowed. So we are that much closer to the unorganized sector. That's number one. Number two, regarding the catch-up which you just mentioned, yes, there is a catch-up which is happening in the domestic sector. The domestic demand is getting more material. Please let's not forget that before the war, Morbi was running at a sub 70% capacity utilization. Now it's to about 80-81% capacity utilization. So that extra material has come up, and more or less all of the catch up has happened for two reasons. A, that extra capacity has started coming into play, and also the other problem which has happened in Morbi, which used to export about 25 to 30% of their produce, with the geopolitical issues and the container rates and the freight rates which have gone through the roof. All of that material is also finding its way into India. So to that extent, the catch-up is quicker. We are hoping that there would be a huge pent-up demand and a huge catch-up which will happen the minute the war stabilizes and the freight rate stabilizes. We feel that will take about a quarter or two.
Therefore, Abhishek, obviously it doesn't make sense to look at Q1 in isolation. So let me ask you then, if you were to look at the first half completely, and you're saying it's going to take another quarter. So maybe if I look at Q2 and Q3, what is the kind of volume run rate that you're anticipating?
So see, we were anyway better off from Diwali onwards, and this war had a little bit of a tailwind for the organized sector. So we are looking at a single-digit volume, about a 5 to 7% volume, considering that I'm still not getting enough material from Morbi, which is our quality of material. There is material available, but not of the same standard we would like it to be. So from that point of view, I'm going to be extremely cautious in saying that volume growth will be in the high single digits, because we have constraints of supply to that extent. But the plus point is that we're very extremely confident of the margins we've delivered in the last quarter and in this quarter, and those margins will chug along. It'll only get better over the next 3 quarters. Reason for that is that all my plants are running at 100% capacity, and there has been no price absorption. We've been able to price, push all the price increases. And otherwise, the third reason is our value-added mix is playing for the better.
The other question I have for you along with this is the new Tirupati manufacturing facility that you have spoken about to deepen the southern India presence.
Right.
What are the details in terms of the capex required? By when will it be operational? And what's the kind of revenue addition that you're expected to see if you have to look at the next 2 to 3 years?
So it's a joint venture, similar joint venture which we already have in the south, and we are putting in about 225 odd crore rupees to put up a manufacturing of about between 9 and 10 million square meters per annum. And for the plant, because it's a joint venture, for the plant it would be approximately a 275-300 crore rupee revenue, and for Somani it would yield a 350 crore rupee. And it would be at a better return rate, because obviously it's a more efficient and newer plant.
Got it. Okay. So it's good to hear, Mr. Somani, that things are improving on the ground, and they're likely to be better in the second half as well. So thank you so much for taking the time, and wish you all the best for FY27. Also from the entire team, wish you and your team a very, very happy Independence Day in advance.
Likewise. Thank you.
Okay. Let's go back to Vijay Chopra and Rudramurthy. Vijay, what do you have to say about sectors that have seen that supply chain disruption? And Somani Ceramics belongs to one of them. Based on our chat with him, the indications are that things are returning to normal. And Also, the other thing is the ability to pass on price increases or cost increases. They've done that, and generally what takes place is that there is a consolidation of market share with the organized players. So do you see certain benefits like that creeping into industries beyond ceramics?
Well, yes, the entire petrochemical space, petroleum-related industries, companies were, being affected by the supply chain disruptions. So if you look at the tire industry, you look at the ceramics industry, you look at the fertilizer industry, which were dependent upon, various petroleum and petrochemical stuff. Simple things like sulfur. Sulfur is a petroleum derivative, and it is used across chemical industry, across medicines, and so many things. So, due to this war, the supply chains have been affected. The inflation has gone up. People are talking about passing it on to the customer. But I believe that the inflation is very sticky, and let me tell you, it doesn't go away easily until unless people have disposable incomes going up and a serious upside. If we see in the salary revisions and businesses, which I do not see as of now, the inflation would eat away most of the growth. So I think that Somani has done well. The stock has bounced back sharply, and they are a brand. So above all, India is a consumption economy. So whatever the situation, the consumers are going to consume. It's not going to be as high as expected, but I think that these strong companies, Kajaria, Somani, they are going to do well over a period of time because the real estate sector has been doing reasonably well. But yes, if you look at the total economic scenario, I think that inflation is definitely troubling a lot of consumers.
Fair point. All right, on the charts, it's not really doing too much today, Rudra, but it's bounced from the low point over the course of the last few months. Is there momentum in something like a Somani, or if you were to expand that list to the rest of the ceramic players as well, do you see anything worth buying right now?
Alex, it's very clear on chart that this stock is consolidating. On the lower side, yes, 480, 490, you have support. And again, you have resistance at around 550 zone. So it is just consolidating in that 50 to 70 point kind of a range. If you want momentum, you have to wait for the stock to cross 550, or else it is just buy at the lows and then sell at the highs. So these are just stocks which are consolidating, not a momentum pick for a trade, but still for investing worth considering.
Got it. Okay. All right. Let's head across now to my colleague Somit Sarkar, who's joining in to tell you about what he's hearing from the dealing room. Somit, a lot of stock-specific action, but at the index level, it's been a little quiet. What is the news that you're picking up today?
Yes, not much of a movement when it comes to the main indices like Nifty and Nifty Bank, but a lot of stock-specific action, as you were mentioning. Firstly, it's Sudarshan Chemical. The stock is up nearly 5% in trade. A block deal took place in trade today. Dealers are indicating that the last chunk by the seller is been done. In fact, the stock is up now 6%. And the buyers among this trade were a large prominent HNIs and a domestic AIF. Those were the buyers in trade today. And the selling is largely over. So it would be interesting to see whose name comes in the bulk and the block deal data. For Piramal Pharma, earlier there were news reports that a block deal would happen by Carlyle, but the same got cancelled, and dealers are indicating that demand was quite weak for this block deal. In fact, the demand was for less than half of the shares that were offered in the block deal. Carlyle was offering close to 950 odd crore rupees, but they received demand for just 400 crore, and hence they had to call off this block deal. For Leap India, newly listed entity seeing sell flows on the first day of trade, but dealers are indicating that there is a strong demand that is coming in for this counter at lower levels on the large HNI and the PMS desk. For Voltas, dealers are expecting a weak set of Q1 earnings, so keep an eye out for this counter. It will be reporting its numbers today. Suzlon, there are buy flows on the large HNI and the PMS desk. Dealers expect some positive news flow here. For Pine Lab, the dealers are indicating that a large prominent HNI has been accumulating in trade this counter. And lastly, when it comes to Tata Consumer and Navin Florin, dealers indicate that there are some sell flows coming in on the domestic institutional investor desk in trade, and that's the reason we are seeing the selling pressure coming in for both the names in trade.
Okay, so a couple of names that Somit is highlighting seems pretty interesting as well. In fact, I want to pull up two of them. I mean, a Leap India actually I want to pick up, which is listed on the bourses today. Vijay, let me come to you. How are you looking at Leap India? Because muted listing, but it's more in terms of the financials, where if you look at the profitability margins versus if you look at the return on equity as well, there is a disconnect coming in there. But from a business perspective, a lot of levers in place. Would you advise any investors to actually look at a Leap India if you've tracked it?
Well, generally, my style of investing is very conservative. I generally do not get into stocks which are very high PE stocks. So for me, 20-30 is the limit for price to earning. So although it might, we are seeing a lot of action in the IPO space, but still I would be wary of getting into such a stock which has very high PE. So I would avoid at this point of time.
All right. Okay, so it's too early, obviously, to take a call in that. Let's ask about okay, in fact, we should address what is flashing on the bottom of the screen, and that's an important update that has come through, a shift in India's energy sourcing strategy. State-run oil marketing companies are stepping up discussions for long-term LPG supplies from the United States. My colleague Sesha is joining in to tell you more about that. Sesha?
Right, state-run oil marketing companies are stepping up efforts to secure long-term LPG supplies from the US. Now, sources tell us that representatives of these OMCs are currently in the US to discuss LPG availability and supplier terms as, India looks to further reduce its dependence on supplies from West Asia. The OMCs, have already accelerated spot purchases from the US. According to Kepler data, the US supplied 3.6 million tons of LPG to India between January and July. BPCL, also during its post-earnings call, said that it is buying a lot of LPG cargoes from the US. The company also said that Indian time-chartered vessels are now traveling to the US to pick up LPG cargoes, something it says never happened in the past. The push for US supplies, comes after India faced its worst LPG shortage following the closure of the Strait of Hormuz, which disrupted supplies. Now, the impact was visible in demand, with LPG consumption falling 8% to 14.7 million tons between January and June before, recovering in July. Now, importantly, the move to secure more LPG from the US also assumes significance amid the ongoing India-US trade deal talks.
Okay, thank you for that. Vijay, your view on the story that Sesha has got for us and the kind of impact we could see in terms of OMCs according to you?
Well, US always wanted this, the kind of pressure which US has made on the Indian, politicals, so to say, that, they want their stuff to be sold to India. That's why there are so many sanctions coming, if we source something from Middle East or Russia, there are sanctions in place. And this is, I think, a win for US. Definitely, US gas would be much expensive than what we source from the Middle East, because the logistics cost is pretty high. Even if they give at the market price without any discounts, it is not a good, thing for the OMCs. So for sure, they are going to be under pressure. I don't think that, if they import expensive crude or expensive gas, either they pass on the benefit, either they pass on the cost to the consumers, which is pretty tough at this point of time, because most of the things are, under a lot of scanner. The government is under a lot of pressure. But yes, I don't think that strategically it's a good idea to get things from US. But again, if we are under pressure and our reserves are pretty low, then there is no option left. So if you buy expensive fuel, it's not a good thing for the OMCs.
Okay, so that's with regards to OMCs. In fact, let's pull up a SML Mahindra as well. That company is in focus. In fact, they've launched their new truck range and they're positioning it around the higher profitability and smarter fleet management for Indian truck owners. Rudra, quick question. SML Mahindra, I know it's a recent one. I mean, lots brewing there as well. On the charts, if you have to look at this one, would you be a buyer?
Kiril, very easy answer. Definite buyer at current market price. Buy it lower, buy it higher, and this is a stock definitely to own for one's portfolio. If you see the chart pattern, it has given a clear breakout and there is a huge gap which it has created, and I feel that gap will be held. You won't get a price much better than current market price, or worst case 5,000 can be a rock bottom for this stock on chart. So I'll be a buyer at current market price. Every dip to 5,000 I'll be a buyer. Have it in your portfolio, you will make good returns. This is a stock definitely to have it in your investment portfolio.
That's with regards to SML Mahindra. Vijay, your view in terms of SML Mahindra or even a Mahindra for that matter, M&M?
Good company, but I see a big gap up opening which happened. Gap is between 4,600 and 4,950. So I would rather wait for the gap to be covered. It's a good company, no two ways about it, and I agree with my colleague. But yes, as I said, I'm pretty conservative in investing. So I would wait for the gap to be covered because markets are not going anywhere. So I think that one can get an opportunity to find the stock somewhere between 45, 4,600, and that would be a great place to enter.
To Puneet, who's in conversation with the management now. Puneet?
Thanks so much for that, Alex. So we are being joined by Vinod Sai. He's of SML Mahindra and Mahindra Advanced Technologies. Mr. Sai, a very good afternoon to you, sir. Thanks so much for joining in. My first question being, this product is built around the philosophy of what you call as profit ka rocket, and I wanted to get that right as well. How has this product been developed is this more of a fleet operator kind of a mentality that's been looked at aggressively with this product launch?
Yes, so in this business what we sell is actually not trucks. What we sell is a business proposition, and like any business, a businessman is successful if he is continuously working for maximizing the profits, and that's how the business expands. So what we have done here, whatever is in our control in terms of trucks, every aspect we have looked at. So the most important cost of business is the fuel cost, which is almost 50% of the cost of running or a cost of operation of a transporter. And there we have done a sizable improvement. We have done 13 changes, out of which the one change we will describe you. And the net result of those 13 changes that we have, in just a matter of year, we have increased fuel efficiency by 15% versus where we were earlier, and where competition is there today, because they have also done on this journey, because this is a very important aspect. But with every competition, we have a minimum of 6 and a maximum of 12 to 13% delta of higher fuel efficiency. How it translates is that as a truck of this class travels around 1 lakh kilometer on a year on an average, and that with the current diesel price, with a 10% fuel efficiency delta, if you look at it, translates into a 15 lakh additional profit in our trucks compared to any other truck. But that's not good enough, because this is about the fuel efficiency. These are profit machines and they need to run continuously. And one of the biggest nightmare of a transporter is that what if the truck breaks down? How quickly can you put it back on the road? And that's one concern they have had with brands who are challenger brands like ours. There we have done extensive work on three fronts, improving the reliability and improving our network, now with the added SML Mahindra network which we have. Now on national highways we have every 75 kilometer we have a service touch point, and state highways at 50 kilometers. As a result of all of this and our IMAX, where we are doing a lot of predictive diagnostics and hence preventive repairs, we are giving an unthinkable warranty which is unheard of in this industry, that in 48 hours, if the truck breaks down within 48 hours, if we don't put it back on the road, we will pay a compensation of 10,000 rupees per day, which is actually higher than the per day cost of a truck. If you include the EMI cost and driver cost and the other costs including insurance and all, the per day cost for a truck comes to around 6 to 8,000. We are going to give 10,000. So that's the promise with which we are trying to revolutionize the industry and maximize the profit for our customers.
Mr. Sai, also, because there's a very big telematic solution push that we've seen across vehicles, you also added a 2.0 version of that in your product now. Is that based on the feedback that you've received over the last few years, specifically over the last 5 years since we've seen fleet modernization come through? Have you seen that fleet operators are also looking to change vehicles in the next 4 to 6 years of usage because of getting that high efficiency? So has that been a thought process too?
100% Puneet. In fact, just to let you know that when we launched Blazo X around 2019, we were the first one to introduce a very advanced fleet telematics solution. In those days, the telematics in an industry was reduced to only the GPS location. We introduced a lot of features, including predictive diagnostics on some part, which in now the 2.0 version, which we are launching today, we have increased it to many other defects which or issues which we can detect and alert the customer. There is a 24/7 now room which we have created in our Chakan factory, where all Blazo trucks running across the country are being monitored by us, and any issue happening which is outside the normal is being alerted to the customer, and we are taking the truck and doing preventive repair. But we have added a lot of innovative features this time also based on the feedback of the customer. Just to give you one small example, actually it's a big relief. You know, this is the business where the asset of the owner is not in front of him. A customer who has 500 trucks, his 500 trucks are all over the country. His or her 500 trucks are all over the country. And that's the biggest pain point. That's the biggest nightmare. When he sleeps in the night, he does not know what's happening to his truck. And many times the truck gets stolen, and with the precious cargo. And when that happens, there is a hassle. There was an industry demand that can we, like cars, can we do the remote engine immobilization? We are happy to report that we are the first player in the industry now with Blazo iTruck to introduce a feature of engine immobilization. So if a truck gets stolen and the operator brings it to our notice, the next time the truck stops, because we do not want to do it in a running truck because it can lead to a safety hazard for other commuters on the highway. But the moment the truck stops, next time it cannot be started. So that's one big relief we have provided, and there is a whole host of other innovative features we have provided. There are actually 500 data we are capturing of the truck and the driver, the way he's driving every second, and we are doing huge analytics on it and providing customized solutions to our fleet operators.
Well, Mr. Sai, of course, a longer chat warranted, but paucity of time. Thanks so much for joining in. Wish you the best and look forward to our next conversation as well. But back to you, Alex, in the studio.
Thanks so much, Puneet, for that. All right, now today also marks the 4th death anniversary of veteran investor Rakesh Jhunjhunwala, often known as India's Big Bull, from turning a modest investment into a billion-dollar fortune to inspiring generations of market participants. Jhunjhunwala's conviction-led investing approach continues to influence investors across the country. As we take this break, we're leaving you with some of his top sayings. Take a look.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो सुबह केसरी।
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold, buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Welcome back to NDTV Profit, and you're watching India Market Close as well. In fact, Vinay Rajani from HDFC Securities, and we have Neeraj Diwan who are joining in as well. Welcome to the show, gentlemen. It's 3:15. We're just 2 minutes away right now in terms of getting the prices. But Vinay, let me come to you quickly. At this point, what would your top picks be?
So as of now, very few stocks are moving, and as we have seen a healthy correction from the higher level, but I would select stocks which are actually reversing from the lower level from the strong support. So one of the stock which I like is the Cummins India, which has taken a support at its 100 days EMA. So around 54101 can go long, 5300 should be the stop loss. On the upside, I'm expecting a target of 5600. The second stock I like on the chart is the Persistent System from the IT space. So this is one of the strongest stock in the IT pack and has given a flag pattern breakout. So around 55801 can go long, 5500 should be the stop loss. On the upside, we can expect a target of 5730 for the short term.
Neeraj, Divan joining us as well. Neeraj, good afternoon to you. And a couple of stocks are doing well, right? And from completely different industries, but reacting to numbers. LG and LG. It's an interesting pair. So therefore, from the auto ancillary space and from the consumer durable space, do you like any one of them or both?
See, as far as LG is concerned, the results were pretty good this time around. So there was top line growth as well as there was margin improvement. So the stock is reacting to that today. And, looking ahead also, I feel that if you see generally about the whole sector, results have been pretty encouraging. The top line growth is visible in the full sector, but the only problem was the margin, which LG is surprised. But otherwise also, I think because the growth is coming with strong demand, but strong demand should continue going ahead also, because now we're going towards the festival season. So I feel that if the strong demand continues and then some margin improvement happens from these levels, I think this consumer durable should do well over the second half of the year also. As far as the LG equipment is concerned, specifically, I don't have the valuation with me right now, but as a sector, I like auto ancillary because I feel that even auto demand has been very solid and it continues to be very strong. So, one has to be, of course, stock specific when it comes to valuation. So one can look at the valuation, then to decide. But sector-wise, I'm bullish on the auto ancillary and the auto space.
Okay, all right. While Neeraj was speaking about LG and LG, what has happened is that the cash market trade for F&O stocks has indeed closed. 315 has come and gone. And so therefore, let's take a look at where the benchmarks have settled, or where the last tick is. 24,354 24,300. Very, very interesting. By the way, yesterday's close at 315 was 24,353. So we've closed pretty much where we were yesterday at 315. It'll be interesting to see what the CAS throws up. Let's pull up the Sensex as well and see where it's closed up, and the Bank Nifty, all three. And in fact, the Bank Nifty should be at 57,459 or thereabouts, and the Sensex will be at, well, close to 77,931 or thereabouts. All right, so that's the long and short of it. It'll be interesting to find out how individual stocks move. But let's head across now to my colleague Parth, who's joining in to talk about Nalco. And this is really an opportunity because of the way that it has swung one way and then the other, to talk about the bull and the bear case, because we've heard about the alumina supply pressure or shock that is set to be a key driver of the fortunes of this company going forward. But there is profit taking coming through as well. Parth, what are you picking up?
Well, Nalco is in focus because of its zigzag movements. As you rightly mentioned, the stock gained around 8% on Wednesday, but in the last two sessions, it has corrected around 10%. So let's decode these moves through this bull versus bear analysis. Starting with the bull point, why the stock gained 8% on Wednesday. The Alunort's 50% production cut, that is of alumina, removes 2% of the global supply. So that is creating shortage, and that might increase the alumina prices globally. And because Nalco is a net exporter of alumina, they might benefit from that. But that disruption, that 50% cut, is because of gas disruption. So if those gas disruptions get fixed quickly, it might reverse, and it then that impact might reduce for Nalco. Coming to the next point, the EG is 1.6 million tons per annum smelter that was hit by Iranian missiles. That was disrupted during the war, and that had shut down, which actually collapsed the production in H1 by 29%. So that created a shortage as well. But now it has started recovering. Out of the 1,200 odd production cells, around 227 are already back up. That means roughly around 18% capacity is back live, and they are recovering at 3 cells a day. So if that recovers quickly, then we can see that supply coming back to the market. Also, in the Q4 con call, the management had highlighted, in the Q1 con call, they had highlighted that the export premiums have jumped from $60 per ton to $110 per ton. So that is giving them really good realizations. But the management has also said that this premium could ease further as the war-related disruptions come to an end. So that we might see that premium coming down from 110 to around $70 to $80 levels. Now coming to the next point, the company remains debt free. They have a very strong cash position of 10,500 crores, so that cushions their input cost. But those input costs are pressuring them as well. The production cost has risen by 16,000 rupees per ton because of the higher raw material prices. That includes caustic soda, that includes coke prices as well, that also includes fuel prices. So that is the entire story. If we look at the analyst recommendations as well, 8 have a buy rating, 2 have a hold rating on the company, and 5 have a sell rating on the stock as well. The 12-month return potential stands at 9.5% as well. Coming to the valuations, 5-year historical average has been around 14. Currently it trades at around 12 times, and the forward PE stands at 9.7 times as well. So that's the entire story about Nalco. It will be interesting to watch if the alumina shortage impacts the company, or that EGA plant restoring will see some negative factors coming in for them.
That's going to be interesting. Thank you, Parth, for that. Neeraj, how are you looking at a Nalco and Hindalco? Because we've seen the negative aspect, we've seen the positive aspect, and both of them to some extent do see an impact.
Yeah, see, in the shorter term, there can be some impact because of the raw material shortage and because of the bottlenecks which is there because of the closure of Hormuz and the Middle East war. But I think over the medium to longer term, I am positive on the metal space, especially non-ferrous. I think that the demand is tremendous and it should continue. And once you get some resolution to this Middle East war, demand will only go up. So once the disruptions are removed, I think it will be good positive momentum for the stocks and for this industry. In the shorter term, you'll get opportunities. I think those will be buying opportunities. So one should be looking at these opportunities to add slowly because we don't see whether this solution is going to come sooner or later. So that a delay can be there. So, but for a medium to long term, I'm positive on the non-ferrous space.
Got it. Okay. Non-ferrous is what on the fundamentals Neeraj is positive on. Let me ask you, Vinay, what do you think about the charts for the metal counters? Because broadly, what do you say? I mean, just as you trade into a stock and you go long on the stock and you expect that it will last a while, in the next 2 days you've lost practically everything that you gained. So how do you trade it?
Yeah, so choppy phase going on in the metal space, the stock like Nalco and most of the mid cap, small cap space, we are passing through the result season, and I've seen in the history that in the result season, most of the stocks are moving like this. So we should not rely on the chart patterns. On one day, it is looking bullish, on another day, it is looking bearish. So same has happened with the Nalco because of some news flows. It has come down by more than 10% from the recent peak. Now the stock like Nalco is now trading near to its long moving important moving averages. 50 and 100 days exponential average is placed around 370. So that is a strong support. But at the same time, it is on the weekly chart, it is forming a shooting star pattern on the weekly chart. That means there is going to be a consolidation at least for a time being. So I am expecting the consolidation to be there in the next couple of weeks because of this pattern which has been formed and the kind of fall which we have seen in this stock like Nalco. So the metal is not into a momentum right now. Very few stocks are relatively doing better. JSW Steel is one of the stock which is relatively placed better, followed by Hindalco. So these two stocks can outperform the metal space. But as a sector, metal is not into a momentum. So better to wait for more clarity and momentum to emerge, and then traders can jump into it and take a aggressive bet.
Okay, so that's with regards to where a few of the metal names go. Let's pull up some of the other stocks that we've looked at in today's session, which were buzzing. We've spoken about, Wellspun Living was one which did see a good day of trade. Z Entertainment was another one which seen a good day of trade as well. Anything on the charts?
Yeah, so Wellspun Living went up because of the result, positive result announcement, and after that it faced the resistance and came back low, significantly lower from the today's high. So again, it has fallen into consolidation, but the primary trend of the stock is quite bullish. So I think one can continue to have a bullish view for medium to long term, but for short term traders, I would suggest to get more clarity. So as of now, existing long should be held with a stop loss of 154, but I would not suggest to take a fresh long position as of now because there is no clear-cut pattern developing on the chart. So existing long should be held with a 154 stop loss.
Okay, it's Friday and it's time for a little bit of entertainment. At least that's how the screen is looking, because that's the one sector that's leading from the front, isn't it? The question is, what are the trigger points, and is this something that you can bet on to last for a longer period than just the weekend? Sharad is joining in with, I think, a very interesting take on this space. Sharad?
Well, Alex, in Bollywood, there is always a saying, picture abhi baki hai mere dost. And that's what I'm saying for the media stocks also. This is a sector where it hasn't given much returns to the investors over the last 2 years. But things are looking different. Z is pulling up, and it's the only sectoral gainer in the trade today. That's where the action is happening in the media stocks. But why are media stocks in focus right now? After a really long time, we are seeing a little bit of coverage. Let's look at the key reasons for it. There's a good volume-based buying which is coming in. Secondly, we see a little bit of technical reversal is also at play. Smart money interest is back. Interestingly, positive corporate developments have started come, and it's a under-owned sector. But let's look at the key triggers, which are the media related stocks and what's actually happening. Of course, you must be wondering, first reason is of course going to be Z. SAT has allowed the fundraising proposal for the promoters. PVR, big movies expected to release. A Sun TV network, there is of course an IPL angle. Prime focus, it's a small cap. The release of movie Ramayan, that might be a very big trigger for the company. Cineline ace investor Utpal Seth has entered into the counter. There is tips. Saregama, that's where the re-rating might happen on the IP front. But also let's move on apart from these triggers, looking at the exact momentum on the Nifty media, how things have panned out. Last 2 years wasn't that good, but in 2026, some hope is coming. Almost 10% returns this year we have seen, and today also it's the top sectoral gainer also. But there are some moving factors also why you should be looking at the media stocks. There's of course consolidation at play in the industry, which I spoke about. IP benefits when this comes to the balance sheet. That is where the alpha will be created in the media space. A larger market for distribution is something which everybody is looking at. But it's of course the weekend, so it's the Independence Day weekend. There are 3 important movies coming out, and if you are Imran Hashmi fan, Awara Pan 2 is there, The End of Oak Street, and also Batwara 1947. So a lot of entertainment options are there, and even media stocks are the top sectoral gainers today.
Thank you, Sharad, for that. That's very interesting. And, you know, if you have to do all of this, I think what Sharad put forth yesterday also was very interesting with regards to Lenskart, because jitna TV dekhoge, utne chashme lene padenge. So Lenskart is also going to be important. You can watch that on our social media platforms. But, you know, currently, if you have to just look at any of the rates, Alex, that you're seeing that have come through in terms of the reference data so far, I mean, your closing auction session, yeah, there you go. If you can just pull up Nifty 50, Bank Nifty also 176 points is what you're seeing, 150 points in terms of the Sensex. So a 2-point down take on Nifty 50, which is interesting. 6 points in terms of Bank Nifty. Very small number is what you're seeing right now.
It's practically, it has come through. I practically missed it because the gap is so small.
But just look at the numbers. They look interesting. Vinay, what do you make of this? Because yesterday we saw what happened on expiry with regards to Sensex. Anything that you would want to add on that front?
Wow.
So yesterday, definitely there was a big take in the option premiums of the Sensex at the money call and put, and we saw that the premium at the money call was trading at 315, and it came to level of as high as 180. So significant move was there. Today there is no expiry, so I think things can remain stagnant, and wherever we have seen the close in the Nifty at 315 spot, I think it is going to be there. But definitely we have been observing that every day the level which comes up at 328, 329 used to be at higher price only from the 315. So yes, definitely that trend may continue, and we may see a bit of higher take on the Nifty, but not significant as we saw in Sensex and Nifty yesterday.
I don't think that it's changed yet, and I don't think that the final levels are in yet. So we're going to have to wait for a couple of minutes to see how that pans out. 328 usually is when the last trades take place, and those are the limit trades.
Now we're seeing a certain change
again. There you go. So now the numbers have come through, and because the order matching takes place after that. I was wondering, it hadn't changed at all. And that's not something that we're used to seeing in the cash session. It's not a very big gap, though. It must be pointed out. 24,366 is where it's closed, and that's just about 10 points or 9 points above what you saw at 315. For the Nifty Bank, it's a gap of about 25 points or thereabouts. For the Sensex, I'm looking at 77,931. Okay, actually, no, I'm going to have to refresh and take a look at it because it's not really changing on my end. It appears as if the Sensex is not moved at all. And so from what you saw yesterday, where it was a 0.3% shift from the last level at 315 to the close at 330, there was quite a dramatic shift. It's come through right now. Even as we're speaking, 78,009 is the final level for the Sensex. The level for the Nifty 50 had settled. We were still waiting for the final orders to be matched for the Sensex and for the BSE, and so therefore the final tick that you're seeing is at 78,000 plus, where the 315 final rate was at 77,931. So just about 70 odd points, or 80 odd points for the Sensex, and just about 9 points or so, or 10 points or so for the Nifty 50. Let's head across now to Sharad, just to take a check of which stocks have moved in the cash session and what the cues are from the F&O space.
Alex, this might be the first time where we are seeing no major differences happening, and I'm also trying to figure out where is the deviation, but technically there isn't much, and that's a very good news. Volumes are also picking up, but let's look at the differences where the action is there. Piramal Pharma, there is a good deviation coming in. Indian Bank, Canfin Homes also make it to the list amongst the top gainers. Let's also look at the top losers, how things are, and then I'll show you the overall ATM function of the 24,300 and 24,400 levels. Largely for Metropolis and India Mart, this is where the deviations are more on the lower side, but the cash effect on the indices is coming down. I think this is the lowest variation we have seen over the last 10 trading sessions. And let's pull out the 24,400 mark. This is where the open interest is higher for both call and put. Also, let's just see the 24,300 levels. That is where your at the money strategy was working till 310, 320, and the same thing happened in the last trading session also. And this is where you can see the open interest changes happening for both of these parameters. So net, there are some variations, Alex, but today is the day we can say the variations have actually come down to its lowest levels in the indices.
Very interesting. Thanks so much, Sharad, for that. So therefore, what an interesting session this has turned out to be. Pull up the chart.
We need to notice also it's the first day
of the new.
No, that will be only on the Sensex.
yeah,
the first day of the new series only on the Sensex and not on the Nifty 50 though.
That's true. So new series, matlab new week.
New week, absolutely.
Right? So, but let's pull up the intraday chart for the Nifty 50 just to drive home that point. We've come off the low point of the day and we've ended about 9 points higher from the 315
Can we just have the intraday chart?
If we can pull up the intraday chart for the Nifty 50, we can talk about that and we can close things out. We've come off quite substantially from the low point of the day, but we've come off from the high point as well. And so therefore, pretty narrow range for the Nifty 50 from bottom to top, 24,296 to about 24,405. So just about 105
points. Yeah.
105 points. So pretty much what you saw in trade yesterday as well. You can pull up the Nifty Bank and you'll see a similar story panning out. Just a very narrow range for these benchmarks. You pull up the broader markets, the mid-cap index and the small-cap index. All told, I think this is the story of the benchmarks and the markets this week, where at the index level there's very little action. And to a certain extent, that can be attributed, I think, to the volumes one, but also to the India VIX. Pull up the VIX.
You know, before the VIX, can we just have a 5-day chart of the mid-cap and the small-cap index?
But just make this point, right, Hiral, because at 11.3, where we've fallen further in today's session, we've gone back to levels that we last saw at the start of 2026.
Exactly. So this 11.3, how desirable it would have been is not what it looks like, because that consolidation, that lackluster move is what is coming through with wicks at lower levels. If we can just quickly pull up a 5-day chart of the Nifty mid-cap and the small-cap index, I mean, there you go. For the week as well, it's just a 0.6% kind of a move.
You won't even notice it.
Exactly. Pull up the small-cap. There you go. It's in fact a downward tick on the small cap index as well.
And,
so you
and
know
the
we've not
benchmark, let's
gone
close
anywhere.
it out. Let's close it out. Let's look at the benchmark as well. The Nifty 50, we're down about 8/10%.
Yeah, so underperformance on the benchmark versus your broader markets. Let's quickly look at the advanced decline ratio before we wrap up and the sectoral heat map. We've not looked at the Nifty 50 heat map as well right now, but clearly very much where we were, where we started off in terms of your declines overtaking your advances in trade.
I don't think that the Nifty heat map would have changed from where we started today, right? You have Bharti Airtel likely on the top. It's come off just a tad bit from that 3% plus gain we started the show on. Apollo Hospital is doing well. I think the guidance for FY27 looks good. The Adani pair, the ports as well as enterprise is looking good. ICICI Bank has gained quite a bit actually from the low point. It's now ending with 0.75% of gains, and HDFC Bank
Pretty
ending in the green. But Tata Motors PV underperforming, so too is Jio Financial, and a couple of other names. Hindalco for one is seeing profit taking. But I think that brings us to the end of this edition of India Market Close. From Hiral and myself and the team that put this show together, thank you so much for watching. Stay tuned for a lot more interesting coverage ahead of Independence Day. And from all of us, here's wishing you and your families a very happy Independence Day.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch.
Hello and welcome to NDTV Profit and happy independence to all of you. You are tuned into the Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the $64,000 level mark on lower volumes. UK lawmakers press banks on crypto access ahead of new rules. CFTC to join SEC in exploring crypto regulations without clarity bill. And lastly, Goldman Sachs expands Bitcoin push with a $2.25 billion asset manager deal. Well, those were the top crypto headlines at this hour, but time to get some expert insights. The tax net around crypto is tightening globally, and the countries are now working to track digital asset transactions across the borders. So what exactly is the crypto asset reporting framework, or as we call it, CARF? And how does it change the way the exchanges, wallets and investors report crypto holdings? Amit Rana, partner at PwC, talks to us about the framework and its key features. Do listen in.
The crypto asset reporting framework was introduced by the OECD, the Organization for Economic. This is the OECD, which is basically all the developed countries of the world are members of OECD. India is technically not a member, but it does set the tone for a lot of policy in tax and other areas as well. So OECD came up with a framework some time back, which the intention of that framework was countries need to exchange information around crypto in a seamless manner. This is a subset of what is called the common reporting framework, which is also relevant for banks, for banking transactions. And the idea is that if I am an Indian person, and that's how it started, and let's say I am banking with a bank in Switzerland, and I'm earning income there, which I'm not reporting in India, then India was missing the tax on that income, which should have duly been paid in India. So the CRS framework, the Common Reporting Framework, allowed or enabled Switzerland and India to exchange information with each other, such that India knew that a certain individual in India had income in Switzerland. So that was the genesis of the whole CRS framework. Now that has been extended to the crypto world, which is the crypto asset reporting framework, and the concept is pretty much the same.
And Amit, while CARF is aimed at improving transparency and tackling tax evasion, it could also bring greater legitimacy and regulatory clarity to the crypto ecosystem. But what does it mean for the Indian investor specifically? Let's see what he has to say.
I think the biggest benefit is not direct, it is indirect, I would say. And the indirect benefit is, and we are all hoping, everyone who's involved in this industry, we are all hoping that as this information start flowing from next year, and India and other countries start getting this information seamlessly, they can get more comfortable with crypto, and they, this whole worry that crypto will enable massive amounts of evasion, money laundering, etc., which the authorities and the regulators have that concern. When large amounts of information is seamlessly flowing and India is getting full transparency on that, the authorities can get comfortable, and then they can start reducing the rigor of how this is being taxed today. Because today, this 30% tax that I spoke about, the 1% withholding is actually quite rigorous. And it's almost probably the most rigorous for any industry or any asset class that exists in India. So, which is actually impacting the ability for Indian users to trade because the taxes are prohibitive. So, as information starts getting more, seamless, and India starts getting more comfortable, and they, this whole worry that massive amounts will be evaded, etc. Maybe we can hope in future that the rigor of the tax can be reduced.
Thanks a lot, Amit, for that. And now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in, and yes, wishing you and your family a very important happy Independence Day.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold, buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds.
Pankaj Tibrewal, founder and CIO of Ikigai Asset Manager, joining us this morning as we're kicking off Independence Day celebrations. Pankaj, thank you so much for joining us. And, you know, just because of the occasion that we are kicking off, and we know it's a day earlier, but we want to talk to our viewers when markets are on. Just want to get your sense of where we are, because the last 2 years, from a returns perspective, have really tested the faith of Indian investors.
Great to be on your Independence Day show. So if you look at absolutely you're correct, last 2 years, markets have seen consolidation. And this is not for the first time, Tamanna, that for a couple of years, markets have been very subdued on return part. I remember when I joined the markets in 99, 2000, you saw a tech bubble. And then for 3 years, almost 2000 to 2003, you could go back to home just as market closed. There was nothing to do. And 3 years were the most boring period. And then came the mother of all bull markets from 2003 to 8. So I think markets moves in cycles. I think it's good that there is the realization check that always every year you can't compound at 15, 20%. And I think that's a good thing from a health of a market. Now, as far where we are standing today, I think we are at a very interesting point as far businesses are concerned in India. And let me give you some ground feedback. We have been interacting with companies across sectors, exporters, people who are leaders in the sector in the domestic market across home improvement, chemicals, financial services, and so on and so forth. I think for the first time, demand is not an issue to be talked about. The only challenge management teams, promoters are talking about is the supply chain. And I think that's a very, very interesting thing, that companies are thinking very large in terms of overall growth. And obviously, these geopolitical issues keeps on coming from time to time. But when you look at the data points now, the earnings season has panned out quite nicely, contrary to what people expected when they were entering into that. Almost most of the companies have reported, and the top line growth for the first time in the last 12 quarters is more than 20%. And when you remove OMCs, the three of them, because they had a peculiar issue and there was the 18,000 crore drag on the profit side, the overall earnings growth is again in excess of 20%. And large cap, mid cap, small cap all have delivered very strong numbers. And the one word, if you would like to sum up this earnings season, is the resilience of corporate India. And if you look at, for the first time, about 60% of the companies reported have reported more than 15% earnings. Normally, this number is between 45 to 55%, and the beat has been far more than the misses this time, and we have seen upgrades across the board. I think it's a very, very welcome step in a most challenging quarter, and I've always said that inflation, to a certain extent, is a friend of corporate India. When inflation comes, you are able to get pricing along with volumes, and that helps on the top line growth, and a lot of operating leverage kicks in when the top line growth moves above 15% for corporate India. And that's exactly what has happened this time around. And the outlook for second quarter also looks to be quite decent. Many companies have alluded that July, contrary to expectations, have been very strong. We met few steel companies, we met pipe companies, we met paint companies, tiles companies. Everybody is saying normally July is subdued, but this time July has started on a good note as far as volume growth is concerned across these sectors. So I think we are on a strong wicket as far as earnings are concerned. Now come to flow. Sorry, Tamanna, you want to say something?
No, I'm not wanting to interrupt your flow of thought, Pankaj, but just wanted to sort of summarize. So the takeaway that I'm getting is that there's not too much to worry. Green shoots are visible, signs of a possible turnaround are visible. Would this happen even in the event that FII inflows don't come back?
Yeah, so now I was just coming to the flow side. 6th of June, I think, is a very important day where government and RBI announced FCNR deposit scheme. And look at the FPI movement and the currency movement post 6th of June. You saw that after the ceasefire and there was some kind of a understanding, crude again went to $100. But this time currency didn't react to it because you had great flows of FCNR starting to kick in. Till last week, we had almost received $40 billion in this scheme plus ECB combined. And the expectation is about $80 billion. And when you compare it with 2013, when rupee moved from 55 to 69, and government had announced this scheme, the large portion of the money came towards the fag end of the scheme. This time around, the money has come in front-ended. And $80 billion is not a small sum anyways. Also add to that the bond market inflows which have been happening post the 6th June announcement. And year to date, fiscal year to date, 60,000 crores has come on the bond inflow side. And in July, for the first time, FPIs turned buyers in the Indian markets because the AI trade started to unwind globally and in the region, as well as you saw that currency started to behave in a more stable manner. I think these are good signs that FPI will get confidence of, that earnings has started to pick up. Ground reality is not as bad as people feared out to be. Currency is stable, and with government policy actions in place, a lot of comfort will be driven by FPIs, and most of them are underweight India right now. India was a complete no few months back. Now, when we speak to most of our counterparts globally, I think there is a realization that India warrants a look. The only challenge they are facing is, for example, look at the US earnings season. So we are thinking that 20-22% growth is good compared to the expectation. US earnings this quarter has grown by 26% on that kind of a base. And this is the highest number of beats we have seen post GFC. And even if you remove the AI side, earnings growth has been quite strong. So US is showing a very strong resilience as far growth is concerned. So there's no reason for people to sell US markets and move to other markets because earnings growth is supporting them and US market is making new highs every time. So when you look at relatively, we are okay, not great. But when you look at in isolation, I think that's something which is interesting FPIs. And we believe that second half of this year, FPI flow will be positive, led by various factors we spoke about.
Yeah.
So it may be a contrary call, but our sense is the mood in FPI community is changing towards it, and they are looking to cover their underweights and at least move to neutral, if not over.
Very interesting, Pankaj. Good morning, Alex here. So a couple of questions here. I was looking at your note or your newsletter, and you were talking about the fact that you're turning more cautious on the US markets. And I guess to a certain extent that is related to what you were just describing on the earnings front, because people often describe the price to earnings multiples or the valuations and say, look, it's not challenging right now. But what they're not saying is that they're extrapolating the rate of growth that you're currently seeing far down the road as well. So who's to say whether that 30+% growth that some of these companies are displaying right now will continue in perpetuity? It won't. And so therefore at some point there will be a fall off a cliff. The question is, will that impact that will likely hit risk assets globally at some point or the other? Nobody can say when. Will that hit our shores as well? How much will the impact here be? And so therefore, how should your positioning, Pankaj, in Indian assets be? Should you get into assets or companies with margin of safety?
Brilliant question, Alex. I think very well articulated. Let me give our thoughts. Obviously, the earnings growth looks to be quite strong in the US market, but always market is forward-looking. And our sense is that when we look at the data points in the US markets, as far consumer, some of the data points on consumer side, like delinquency on credit cards is going up through the roof. You're looking at the consumer sentiments, it's bad, inflation is picking up. And especially on the debt side, we are sitting on a $40 trillion of debt as far as US is concerned. And with interest rates starting to move up, and you have seen a very sharp steepening of the yield curve, which means 10-2 treasury yields have steepened quite considerably. And today we are at 4.7% as far 10-year is concerned, and 5.2% as far 30-year bond in US is concerned. So what US bond market is saying that we expect higher inflation to kick in and remain sustainably higher. Don't forget, 64 months in a row, market has been above the tolerance 2% Fed level on inflation, 64 months in a row. So at some point, market has started to price in about 25 to 30 basis point of rate increase by the end of this year by Fed again. And when you combine everything together, if 10-year starts to move towards 5% and above, I think there will be some risk off which will be started to play out. The second part is, in the previous regimes, we saw the hyperscalers, because they were generating cash, they could support a lot of buybacks and stuff like that. That is behind us, Alex. Just to give you numbers, first quarter calendar year 26, hyperscalers, 4 of them, generated $60 billion of free cash. Second quarter, which is just ending now, about that number came from $60 to $7 billion. Expectation is that this number will be negative $13 billion as they invest in the capex on the AI side. So these guys are moving from cash generation to cash consumption, and hence buybacks will be a thing of the past, which may not support the markets if any eventuality may do happen. So our belief is that valuations are very rich in US. Market cap to GDP in excess of 200%. AI trade is the only source of growth which is keeping it. Yes, consumers reasonably okay, but incremental data point on consumers are not giving us comfort. And we believe that US, which was the darling of the markets globally for the last 15 years, I think there is some, money has to be shifted out to the rest of the world. Most of the investors acknowledge that. Once earnings momentum starts to slow down, you will see that spiral effect starting to happen.
Thank you, Pankaj, for that. Buy India. That's the recommendation coming in.
शायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
ऑप्शन रूल के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे कैसे
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other
Presented by Canara Bank. Together we can.
Market Snap's two-week winning streak ends the week on a tepid note as investors assess international macro data. Nifty erases most losses on Friday but fails to end in the green, staying below 24,400. Tata Motors PV is the top loser on Friday after their Q1 results. As India celebrates Independence Day, we at NDTV Profit bring you the tricolor stocks. From manufacturing and exports to defensives and green energy, India Inc.'s growth engine is firing on multiple fronts. In an important shift in India's energy sourcing strategy, exclusive sources tell NDTV Profit that state-run OMCs are stepping up discussions for long-term LPG supplies from the United States. The move aims to help further cut reliance on West Asia. New details emerge on the Air India scare. Airbus black box analysis reveals a 4-second loss of control after all 3 hydraulic systems failed. With pilot inputs frozen, the A320 briefly flew itself before systems recovered. NDTV Profit accesses the technical report. Indian football sees major club takeover. Tata Steel transfers ownership of Jamshedpur Football Club to Churchill Brothers FC for just ₹100. IT Employees Association seeks Labour Ministry's intervention in Wipro hiring. Over 200 freshers await their joining date despite letters in hand since July 2025. However, Wipro says it is committed to onboarding the freshers. US names India among 40 US trading partners of China's tariff evasion. White House report titled The Great Transshipment Scam criticized the alleged illegal transshipment. Maharashtra FDA Commissioner Tukaram Munde at NDTV Profit, the fearless, uncompromising officer, shares his vision for stronger enforcement and the fight for hygiene freedom. Watch the full conversation at 6 p.m. today. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Gargi Shetty. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's first begin with how the markets ended. Well, it was a weak session for Dalal Street with the Nifty ending 0.1% lower while the broader markets underperformed. The mid-cap 150 and small-cap 250 both slipped nearly 0.5%. On the sectoral side, media was the only sector to end in the green, with pharma leading the losses. For the week, the Nifty snapped its 2-week gaining streak, ending nearly 1% lower. Let's take this over to Varsha for a complete roundup.
Well, let's first, talk about how did markets pan out when it comes to the last 1 week. So you have Nifty, which snaps 2-week gaining streak, ends in red, just down almost 1%. Max Health and Ultratech are the top losers when it comes to Nifty this week. Max Health down over 5.5%, Ultratech down over 4%. Broader markets outperformed the benchmark this week. Nifty Midcap 150 ends in green for the third consecutive week, which is up over 0.2%. Paytm and Vodafone are the top gainers when it comes to Nifty Midcap 150, both up over 10.5%. Nifty Small Cap 250 snaps 2-week gaining streak, ends in red, down over 0.4%. Let's talk about how did markets pan out when it comes to today, that is Friday. Nifty closes in red, down 0.1%. And broader markets, if you see, outperform benchmark. Nifty Midcap closes in red, down over 0.5%. Nalco was the top loser when it comes to Nifty Midcap today, which was down over 6%. Nifty Small Cap closes in red, down almost 0.5%. GSPL was the top loser when it comes to Nifty Small Cap 250, which was down over 7%. All sectors closed in red except Nifty Media, which is the top gaining sector, which was up over 0.8%. Z led the gains when it comes to Nifty Media, which was up over 5.5%.
Thanks for that, Varsha. And viewers, as we celebrate Independence Day, India's growth story is no longer being driven by a handful of sectors. Instead, a vibrant mix of companies across manufacturing, exports, consumption, clean energy and defense are powering the next leg of India Inc.'s expansion. So we have categorized these sectors into saffron, white and green, representing the many shades of India's economic transformation, reflecting the country's journey towards stronger manufacturing and greater self-reliance. First, let's have a look at our saffron stocks. Parth is here with the list.
Saffron as a color signifies growth, and India has spent decades building the foundations of its growing economy. Today, that growth is spread across sectors, be it manufacturing, be it exports, or be it consumption as well. Everything is just scaling rapidly right now. Indian companies are scaling and they are coming to conquer the world. And that's why we have compiled a list of companies that have grown their EBITDA by a significant margin in the last 4 quarters. In fact, let's have a look at the list that we have compiled for you. The first company in the list is Chennai Petroleum. Yeah, that's what I was speaking about, the foundations of our growth economy. But if we could just go to the list of the companies that have scaled their EBITDA. The first one is Chennai Petro, whose gross refining margin have surged to around $9.3 per barrel. That was versus near zero in the same quarter last year. The second one is Newland Laboratories, whose Q4 margin hit almost 40%, and because of the CDMO ramp up that the company has seen. Another one in the list is HFCL, which has seen its exports jump to 41% of the revenue, and margins have doubled to 17% as well. The next company on the list is Eternal, where Blinkit has turned EBITDA positive. That's the Q-commerce growth engine working really well for the company, and that's what has pushed their EBITDA. The next one in the list is LMW, where machine tools revenue have crossed 1,000 crores for them, and offsetting the flat textiles revenue for the company. The next one in the list is PB Fintech, where we have seen insurance premium cross 30,000 crores, growing at 42% year on year, and that's what has pushed the EBITDA of PB Fintech as well. The next one is Cupid, which is exporting its products to around 125 plus countries. That has driven that 93% revenue surge and EBITDA for Cupid as well. The next one is Lloyd's Metal and Energy, where pellet output has tripled and margins have expanded to around 34% as well. And also MTAR Technologies, very big name in terms of EBITDA growth. Clean energy orders have driven that 30% growth in EBITDA, in revenue and EBITDA as well. And lastly, Aegis Logistics, where we have seen record LPG throughput volumes, which led that 68.8% growth in the gas division EBITDA. So these are the top 10 companies that have significantly grown their EBITDA in the last 4 quarters, and this is the saffron stocks, as we call them.
Thanks for that, Parth. Let's also shift our focus to our white and green stocks. Defensive stocks across IT, pharma and banks are in focus as investors navigate global uncertainty and changing sector dynamics. At the same time, the green growth story is gathering pace, led by renewable power, solar manufacturing and green hydrogen. Puneet and Varsha are now here with the stocks and sectors that could power India's next phase of growth.
When you think of the color white, it gives you that calmness, the peace and the serenity. And here as well, we are looking at that in your portfolio. So the list that we have compiled is of the defensives of a portfolio that will save you from a rainy day. And when you look at that, you think about the IT, the pharma as well as the banks. So the IT sector has gotten under pressure over the last few months because of the AI-led moves. You've also seen banks also starting to come a little bit under pressure because of the net interest margin aspect. And pharma is a time to look at the domestic companies compared to the exports now, which has been the theme over the last 10 to 15 years. So what we have done is compile the stocks in the pharma space with the highest return in the last 1 year. And the question being if they will be the kings going forward too. So Laurus Labs has been the highest return. You've seen that for Sai Life Sciences and Aurobindo, as well as Gland Pharma and Divi's, a 44 to 123% return in the last 1 year. But even though going forward, barring a couple of names, you don't see too much of a return potential. But don't worry, we got you covered, because we've also combined a list within the pharma space that have the highest return potential. And here you have names like Abbott India, Mankind, Sun Pharma, Torrent Pharma, as well as Piramal, which could be something that you should watch out for in the next year. Also, don't forget about the banks as well. Here, you've seen a massive return for Federal Bank as well as Bank of Maharashtra. Both have been big outperformers. But even in the public sector bank side, stellar returns from Union as well as Indian Bank as well. Here also the return potential is actually quite strong still for Bank of Maharashtra, while you've seen a single digit kind of return potential for the rest. But also look at the ones which have the highest return potential. It is HDFC Bank, down 25% in the last 1 year, still has a lot more room to go. Axis, ICICI as well as Bank of Maharashtra, again, because of the high return potential features on our list. But the story is very different for IT, because you have seen a lot of stocks do well in the IT space. And if you can show the names on the screen, you see Oracle Financial as well as Coforge. Those are the two ones which have done well in the last 1 year. What's also interesting is they have the highest return potential going forward too, of 11 and 5% respectively. But you have seen saffron, you have seen white. Going to Varsha now for the green stocks that you should have in your portfolio.
Well, I would call Green India, Clean India. I would call our country from energy importer to, clean energy builder. Now, if you see, India has once depended heavily on imported fossil fuels. But now, today, India is amongst the world's fastest growing renewable energy markets today. Now, solar panels, we are into wind turbines, we are in batteries and green hydrogen, which are becoming India's next manufacturing opportunity. Now, talking about opportunity, investors are actually not looking at, earnings today, but they are focusing on the capacity generation that India has been doing when it comes to renewables. Now, talking about bigger opportunity may lie ahead as these assets start, generating the earnings or cash flows for our country. Talking about companies which are in focus, you have Inox Wind, you have Suzlon, you have MV Photo. Don't look at the 1 year return. Look at the return potential. Inox Wind, you have 50% return potential that investors are betting on. Suzlon 31%, MV Photo 22%, though it has given almost 47% in the last 1 year. Moving on, you have Waaree Energies, you have NHPC and Tata Power. All these stocks have huge potential. You have 22% when it comes to Waaree Energies, 15% and 14% for NHPC and Tata Power respectively. But let's deep dive into each stocks. Talking about Inox Wind, well, they are actually shifting from turnkey EPC to equipment supplier. That is nothing but the high margin projects. You have Suzlon Energy, wherein management is actually targeting 25% CAGR for next 5 years. Also, wind installation to accelerate as utilities diversify beyond solar for Suzlon. MV Photo, everyone is actually betting on this company because they are building domestic solar manufacturing capacity, which will aid growth for the company. Even Waaree Energies, they are actually reiterating when it comes to the EBITDA guidance maintained at 7,000 to 7,700 crore. In fact, the major thing is they have massive investments across cells, modules, investors and electrolyzers. Then you have NHPC, wherein renewable portfolio it continues to expand beyond hydro. In fact, they are doing huge capacity, wherein FY27 capex has been planned at 15,000 crore. Lastly, you have Tata Power Company. Renewable capacity is expected to cross 9 gigawatt by FY27 end. So, I would call it as Green India, the next freedom story for us.
Right, thanks for breaking that down, Puneet and Varsha. But moving on, in an important shift in India's energy sourcing strategy, state-run oil marketing companies are stepping up discussions for long-term LPG supplies from the United States. My colleague Sasa is now joining us with more details on this development.
Right, state-run oil marketing companies are stepping up efforts to secure long-term LPG supplies from the US. Now, sources tell us that representatives of these OMCs are currently in the US to discuss LPG availability and supplier terms as, India looks to further reduce its dependence on supplies from West Asia. The OMCs, have already accelerated spot purchases from the US. According to Kepler data, the US supplied 3.6 million tons of LPG to India between January and July. BPCL, also during its post-earnings call, said that it is buying a lot of LPG cargoes from the US. The company also said that Indian time-chartered vessels are now traveling to the US to pick up LPG cargoes, something it says never happened in the past. The push for US supplies, comes after India faced its worst LPG shortage following the closure of the Strait of Hormuz, which disrupted supplies. Now, the impact was visible in demand, with LPG consumption falling 8% to 14.7 million tons between January and June before, recovering in July. Now, importantly, the move to secure more LPG from the US also assumes significance amid the ongoing India-US trade deal talks.
Right, Sessa, just stay with us. We also know that India's appetite for US crude is fading, with imports set to hit a 20-month low as refiners pivot to cheaper Russian barrels. So, Sessa, just take us through why exactly these freight costs and refinery economics are driving the shift.
Right, India's crude oil imports from the US could fall to their lowest level in around 20 months as Indian refiners increasingly favor medium to heavy sour crude grades. Now, according to Kepler data, US crude imports are averaging just 52,500 barrels per day so far in August. If the trend continues, imports could hit their lowest level since December 2024. Now, this shift is largely about refinery economics. So, US crude is typically lighter and sweeter, while several Indian refineries are configured to process medium to heavy sour grades. Analysts also say that this makes some US barrels less attractive for Indian refiners. Now, at the same time, Russian crude appears to be filling the gap. Kepler data again shows Russian oil imports into India have surged 62.4% year on year to a record 2.47 million barrels per day. Imports from Russia are averaging around 1.99 million barrels per day so far in August. Now, again, there is also a freight factor here. US crude takes longer to reach India, which can make the economics less attractive, particularly amid higher shipping costs. Disruptions around the Strait of Hormuz and Bab el-Mandeb are also adding to logistics cost, and this could further influence the choice of crude grades as well as the suppliers. So, while US crude exports remain strong globally, India's buying pattern is telling a different story, with refinery configuration, crude quality, and freight costs shaping what refiners chose to import.
Thanks for breaking that down, Sessa. But viewers, in an important update, fresh details are emerging in the Phuket-Delhi Air India scare. Now, as per the Airbus technical report that was accessed by NDTV Profit, for about 4 seconds, the Air India plane had no flight control. So the report suggests that multiple hydraulic systems failure impacted key flight controls. And let's take this over to Danish now for more details. Danish, what are some of the key findings of the Airbus preliminary report?
Well, that's correct. Airbus had submitted this preliminary technical assessment to Airbus, to Air India a day after the incident happened. So on the 5th of August, this was given to Air India, in which Airbus clearly highlighted that there was a multiple hydraulic failure, and this happened for a period of 4 seconds. And when that happened, the key flight controls they were not happening inside the cockpit. So because of this failure that we saw, the aircraft, the nose actually pitched up, due to which the aircraft came into a stall mode. And in order to regain the controls, the pilot switched off the autopilot and they pitched the aircraft's nose down in order to regain the controls. Well, this clearly highlights that apart from the turbulence angle and apart from the different piloting commands angle, there are a lot of answers that are still yet to be answered in the entire scheme of things. And moreover, we are also seeing that Air India, when they publicly informed about the incident, they clearly mentioned that it was a major turbulence incident. No way did they mention that it was a technical incident. So all in all, if we see, this is too soon to come to any particular conclusion. But as we speak, the AIB is leading the investigation at the moment, and Airbus and the BEA, which is the French authority, they are together part of this investigation, and it is expected that the prelim report from the AIB will be coming out soon, and then we'll come to know that what actually went wrong, what were the technical failures, and as far as the PIC is concerned, how is he to be blamed for that?
Thanks for bringing us those key details, Danish, and viewers will bring you more updates as and when we get them. But let's move on to some sports news now. In a major development in the world of Indian football, Tata Steel has transferred ownership of Jamshedpur FC to Churchill Brothers FC for a token amount of just 100 rupees. Now, as part of the deal, Churchill Brothers will take over the contracts of all Jamshedpur FC players and will also get JFC's Indian Super League sporting license. Joining me now for more on this story, I have Rishabh Bhatnagar for more.
Right, in a major move in the Indian football scenario, the Tata Steel, which holds the rights for the Jamshedpur Football Club, they have decided to transfer all of their stake in the footballing club to Churchill Brothers, which is which is a legacy club from Goa. What they've done essentially is, for a token amount of just 100 rupees, they've transferred all 100% stake of Jamshedpur FC to Churchill Brothers. What you also have is all the contracts of all players, coaches being transferred, as well as the sporting license. That's the major one here, the ISL sporting license, which gives them the right to participate in India's top tier football league. That is also being transferred to Churchill Brothers. So what you have essentially is, earlier you had Jamshedpur sort of dropping out of the ISL, citing unviable finances. They've now transferred their stake to Churchill Brothers. So Churchill Brothers will be the one now playing in the Indian Super League. A lot more to unpack here. The 100 rupees is just a token amount. They've said that this transfer is in accordance with the All India Football Federation rules. So that's what we're now picking up. A lot more to unpack in this Indian football scenario.
Viewers, landing your first job is exciting, but imagine waiting for months with an offer letter in hand and still no joining date. That's the situation nearly 200 Wipro freshers say they're facing, prompting them to seek clarity over delayed onboarding. Wipro has now responded, saying that all valid offers will be honoured and onboarding is progressing in phases in line with business requirements. Let's go across to Rishabh again, who's joining us on more for what NITES has demanded and the latest developments on the story.
Right, what we have coming in from the IT Employees Association is, what they've urged is an urgent intervention by the Labour Ministry into the sort of delay of onboarding of freshers that has happened at Wipro. What this association called NITES Knights has written to the Labour Ministry, they've sought intervention. They've said that these freshers actually got offer letters way back in July 2025 and they still haven't been onboarded yet. What they have requested for is, in writing, reasons for the delay. They've also asked for the validity of offer letters that were issued to these candidates. About roughly over 200 of these candidates are still sort of stranded between employment and unemployment. What we're seeing is also written communication that they've demanded if their hiring is being cancelled, if at all. We also got in touch with Wipro, and what they said was that they are committed to onboarding these freshers, but it will be in line with their business requirements. What we're also picking up from Wipro is the fact that they will keep their candidates informed as to when this hiring could actually occur. So that's what we're picking up when it comes to India's IT industry.
Thanks for bringing us those stories, Rishabh. But shifting gears, India is taking another step towards digital rupee-powered welfare delivery. So from today, the centre will roll out CBDC-based direct benefit transfers under the Pradhan Mantri Garib Kalyan Anna Yojana in Chandigarh and Dadra and Nagar Haveli. So eligible beneficiaries will receive their food subsidy directly into digital rupee wallets instead of bank accounts and can use the funds to buy food grains from authorized merchants. So the government says that the move will make subsidy transfers faster, more transparent and fully traceable. Let's listen in to Minister of Consumer Affairs, Food and Public Distribution Prahlad Joshi's remarks on the same.
आज आरबीआई और पंजाब नेशनल बैंक के सहयोग से हमारे फूड डिपार्टमेंट जो दुनिया के सबसे बड़ा फूड सिक्योरिटी स्कीम चलाते हैं, अगर अंग्रेजी में बोलना है तो वर्ल्ड्स लार्जेस्ट फूड सिक्योरिटी प्रोग्राम, इसका हम डिजिटलाइजेशन करने का निर्णय आज किया है। ये तो जब हम दुनिया के सबसे बड़ा बोलते हैं, कई लोगों को इसका अंदाजा नहीं लगता है। तो पूरा यूरोपियन यूनियन जितना देश है वो सब मिलके हमारा जितना देश का जनसंख्या उतना जनसंख्या नहीं है और उतना लाभार्थी भी नहीं है, तो इतना जनसंख्या ही नहीं है। तो इतनी बड़ी मात्रा में प्रधानमंत्री गरीब कल्याण अन्न योजना के द्वारा हम अनाज फ्री में बांट रहे हैं।
Let's look at some corporate news now. SML Mahindra is looking to strengthen its position in the commercial vehicle market with the launch of its new truck range. The company has built the launch around the philosophy of Profit Car Rocket, promising higher earnings, lower operating costs and smarter fleet management for transporters. But how does the company plan to translate that promise into real value for fleet owners? Let's listen in to what Vinod Sahai had to say.
this business, what we sell is actually not trucks. What we sell is a business proposition. And like any business, a businessman is successful if he is continuously working for maximizing the profits. And that's how the business expands. So what we have done here, whatever is in our control in terms of trucks, every aspect we have looked at. So the most important cost of business is the fuel cost, which is almost 50% of the cost of running or a cost of operation of a transporter. And there we have done a sizable improvement. We have done 13 changes, out of which the one change we will describe you. And the net result of those 13 changes that we have, in just a matter of year, we have increased fuel efficiency by 15% versus where we were earlier. And where competition is there today, because they have also done on this journey, because this is a very important aspect. But with every competition, we have a minimum of 6 and a maximum of 12 to 13% delta of higher fuel efficiency. How it translates is that a truck of this class travels around 1 lakh kilometer on a year on an average. And that with the current diesel price, with a 10% fuel efficiency delta, if you look at it, translates into a 15 lakh additional profit in our trucks compared to any other truck. But that's not good enough, because this is about the fuel efficiency. These are profit machines and they need to run continuously. And one of the biggest nightmare of a transporter is that what if the truck breaks down, how quickly can you put it back on the road? And that's one concern they have had with brands who are challenger brands like ours. There we have done extensive work on 3 fronts, improving the reliability and improving our network, now with the added SML Mahindra network which we have.
There is big relief coming in for comedian Samay Raina. The Supreme Court has quashed all the FIRs filed against him and 4 others over insensitive remarks against persons with disabilities on India's Got Latent. Earlier reprimanding the comedian over the crass jokes, the court had ordered Raina to conduct awareness programs and raise funds for persons with disabilities. But with that, that's all the time we've had on this edition of Profit 360. Wishing all our viewers a very happy Independence Day, and stay tuned to NDTV Profit for more news and updates.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds,
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where we get you interesting companies based on their earnings and also a lot of other stories as well. But it is the flavor of Independence Day, and of course, happy Independence Day to all the viewers of KYC and NDTV Profit. But before that, I've got a Desi company for you. It's the official Indian Railways online ticketing portal. I'm sure you must have guessed it by now, but if you have still not guessed, I'm going to give you some more hints. DIs are increasing stake in the company a little bit, but nevertheless they are doing. Another hint I would like to give you about this company in KYC today is the valuations are at 5-year low for this company, and stock itself hasn't performed much, but weak numbers have come in. So is there any value here? That's the big question to be asked. And the company in focus is pretty much interesting. It was established in the year 1999, so it's technically a Gen Z company. The company in focus, I'm sure you all know, is IRCTC. Today we'll be talking about this, but there are so much overhangs in the stock. We'll try to get that from the management, and that's why I've prepared a list of questions, which is very much important. Earnings, especially on the margins front, there is a pressure. Will that continue or not going ahead? That's the first question we'll be understanding. Has the travel been impacted because of geopolitical crisis, and if yes, how much of that impact is coming in the railway bookings? Also the catering and the rail near business, how is that looking? All companies looking, of course, in the tourism segment also, and when in terms of growth, the update on the new website, this upgradation itself is a very big trigger for IRCTC. Also, we'll try to ask this segment of tourism segment, and recently they introduced even Japan tourism packages, pretty interesting coming in from IRCTC. Also, other question would be the Vande Bharat sleeper cars. What's the potential here? What kind of cross-selling can be done? So these are the important questions we will try to understand from IRCTC. But let's understand what's the business of IRCTC. I'm sure a lot of you know, you must have opened your phones, websites to see the website. It's the official Indian Railways online ticketing partner to start with. But more details is it was established in the year 1999, manages online ticketing, catering and tourism segment as well. It's just not ticketing, it's a Navratna enterprise as well, as we talk about it. And going ahead, also another important factor about the company is it holds a virtual monopoly in online train bookings. Of course, there are some private players also like Ixigo, which are indirectly the competitors of IRCTC, and they have exclusive branded packaged drinking water which you generally buy. It's called Rail Neer. I'm sure you know the logo also about it. Also, they have premium trains also, like the Maharaja's Express, specialized Bharat Gaurav trains, and this is where the magic happens, especially for the tourist coming in from foreign. 89% of tickets were booked online, so you can imagine it is the future. Almost is expected to click that 90% mark as well. But when you book something in IRCTC, it's a very interesting fact I would like to talk about. The verified Aadhaar linked user IDs can book up to 24 tickets per month. Of course, if it's not verified, then you can do max at the most 12 tickets. So this is a very important booking basings if you are going through IRCTC. Also, it handles an average of over 7 to 12 lakh bookings a day. Can you imagine how big this is? Also, let's talk about the second fact for IRCTC. The portal serves over 10 crore verified customers. Look at the scale, look at the data which IRCTC manages. Q1 performances, largely catering segment has done well, and even the tourism segment we see a 14% growth has come in when it comes to the revenue analysis. What was muted was, of course, the online ticket. Con call, 4 important things. The margin weakness is driven largely by tech investment, and that happens since it's technically a platform stock. Second important con call is the catering margins. That should normalize towards the historical 10 to 12% range going ahead. Third important con call highlight which I took was the rising Vande Bharat volumes. That has remained a key driver for the stock, and we're going to look about that reason as well, and the meaningful potential from the non-fare revenue segment. the payment aggregator business, that is of course subject to RBI as well. These are the important con call highlights which you should note down. But what may work for IRCTC in current situation? Majority of the analysts are having a buy rating, and do wait with me. One of the last ratings in KYC is analyst take. I'll give you the exact number. Valuations are attractive right now. Is it the lowest? That's you need to wait it out for us. The third reason is the monopoly nature of the business. Will this continue or not, or will this be questioned? That's the ask. The tech upgrades are going on, and once the benefit starts coming in, there is a good volume up move we can expect, especially if you understand tech. But what may not work for IRCTC is the declining return ratios because of these investments in tech, and that's the slide which is coming in. The platform stocks are out of flavor on the Lal Street right now, and that is where maybe the valuations are attractive. There is rising competition, which I mentioned earlier. So these are the concerns which might be there for IRCTC, and of course the margins part, because of this tech investments, and management commentary also looks like there will be pressure at least in the near term, next couple of quarters, to be honest. So this is the entire picture for IRCTC, the good, the bad. But let's talk about the ratings also, the rating parameters in KYC. These are the general numbers which we always track. There's a strict rule of thumb in our analysis, and I've got you these rating parameters to judge the company. Of course, this includes return ratio, street cred, and shareholding also. This is over a period of time. Valuations, we take a 5-year view for the company itself, how it's actually panning out. And last but not the least, the analyst take. How many analysts are having a buy rating, sell rating, or even a hold rating? Let's talk about income statement first and see what's happening here. Largely the income statement is pretty decent, revenue going up almost 14% CAGR, but the concern starts coming in when it comes to the margins. If you can pull out the Q1 numbers where I had mentioned you, there was a little bit of concern coming in, and which is there here. That is where we see that some concern comes in, and because of that, to balance things out, I'm going to give this a neutral rating here. Balance sheet, it's largely very nicely put. Margins is also like a decent 35-36% margin does come. So it seems like it's a normalized margin. Not much of a change, to be honest, happening. But yes, quarter basis, just Q1 numbers is something which I looked at. So I've given this a neutral rating. Balance sheet, let's pull out and see what's happening in that. It's a largely well capitalized balance sheet. The business model is such, it's a platform. It'll always have a very good chunk of cash, also almost 2800 crore plus of cash is there. So there's no problem as such. That's why I'm going to give this a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Let's talk about the cash flows. This is largely a very stable business model, and cash flows will also be quite lumpy. See the jump coming in from FY25, a good jump in FY26 of 1274 crore rupees. Even the conversions have been pretty strong. So net, even if you include the tech investments, it's not going to impact so much on the cash flow. It's a very cash heavy business. So I'm going to give this as well a strong thumbs up. But return ratio, let's see what's happening here. In this business model, the return ratio is pretty high, around 40 to 50% for ROC, and they have maintained that, though a little bit of dip has started coming in, and it has come below the 50% mark in FY26. So a little bit of concern definitely comes in, but it is still a very high rate, to be honest. The rate of fall is also not that alarming. So I'm going to give this a neutral rating when it comes to the return ratios. Apart from the return ratios, let's talk about the shareholding. Largely unchanged, government owns it. FIs, there is a slight dip from that 7%. It has come down to, you could say, 4%, but DIs have been lapping up, especially last year. This is where slightly they have increased their stake to around 15 odd %. So it's net quite neutral, no major action is happening. So I'm going to give this a neutral rating as well. But let's talk about the street cred, how much the stock has actually made returns for the investors, and the data is very dismal. From 2025 highs, the stock is down 32%. You beat 2026 return or even 1 year return, the stock hasn't performed. But the biggest pain is for the long-term investors. Last 5 years, the stock hasn't even given a positive return. It's down 5%. So whichever way you look at, short-term, medium-term, or even long-term, there is a concern, and because of that, I've given this a strong thumbs down when it comes to the street cred. Valuations, on the other hand, if there is so much fall, the valuations do become attractive. So the 5-year average is at 52 times. Currently, It's trading at 41 times. It's at the cheapest 5-year levels which I could think of. The peak levels were almost 2 times of this at 115 times. So nevertheless, the valuations look very, very cheap right now. But the question is Dalal Street willing to give that much of premium valuation to a platform name, and that also railways, because both of these factors are technically out of flavor right now. So because of that valuation, I'm going to give this a strong thumbs up. The last one is the analyst tech. Let's see what's happening here. One side, there are totally 8 analysts tracking. There's nobody talking about a hold. There's a sell coming in from 37.5% of the analysts, but on the majority side, 62.5% analysts still feel it's a buy rating. 12-month target price, of course, from the current levels, 20-30% upside potential, is at 606 rupees per share. So it is still a neutral taking when it comes to the overall analyst stake. But we have discussed with you all the 8 rating parameters. Let's do a small revision and give the final KYC ratings for IRCTC as well. Income statements was neutral, but looking at balance sheet cash flow, it is pretty strong, no major concern. Return ratio, slight dip definitely coming in, but returns haven't been made, and that's the big concern coming in for the street cred. And because of these lower returns, the valuations do look attractive, but the analyst community is divided for this counter. So overall, let's give the entire KYC rating for IRCTC 5 out of 8. It's largely in line to slightly positive for the general numbers which we give in KYC. So it will be a very interesting conversation we'll have. Now we are joined in by Rahul Himalayan. He's the chairman and MD of IRCTC. Good afternoon, sir. It's always a pleasure to have you. Sir, did you see the impact on the travel which has happened in the first quarter due to the geopolitical crisis, and do you think this sustaining in the second quarter as well?
Overall, we had a revenue of 1370 versus 1160 in the quarter of financial year to 2025-26. So in this, as far as the impact is concerned, first I would like to talk about the revenue mix and all. We saw that in this 1370, 732 came from catering, 109 from Rail Neer, and internet ticketing 361, and from tourism 168. So there was a delta of 210 crores between 1370 and 1160. To this delta of 210 crores, catering itself contributed to 181 crores. So catering has a margin of around 10 to 12%. Conventional margin I'm talking about. Internet ticketing has around 80 to 85%. The tourism has got 14 to 15%, and rail need 14 to 15%. So one thing is that 181 out of 210 crores, which enjoys only a margin of 10 to 12%, which is 54% of the total revenue. That was one of the reasons for our profits not scaling up, number one. Number two, the West Asia crisis impacted the rail need segment largely because the cost in the raw materials such as the resins, which account for the preform, caps and shrink rolls, impacted the cost to grow from 55 to 61 crores, that is 6 crores plus. Then there is a HR decision we took where the gratuity was increased from 20 to 25 lakhs, impacting around, and the post-retirement or settlement benefits. So this impacted around 20 crores, of which 10 crores was booked on catering itself because catering formed around 54%. And lastly, the POC, the proof of concept trains, which were not there in quarter one of financial year 25-26. There were 6 trains in around 4.7 crores of that impact in quarter one of financial 26-27. There will be around 4 trains in quarter 2 and 2 trains in quarter 3. So these were the debilitating or the retrograde factors which caused our EBITDA to come down. West Asia crisis stabilized, HR will not repeat, and as I said that there is a tapering in the POC. So with all these and with the introduction of new Vande Bharat sleeper trains, we will try to maintain our EBITDA margin 30% plus.
Right. So is this 30% plus EBITDA margin likely to come from catering to Rail Neer?
See, our ticketing is also growing to the extent of 5 to 7% as far as convenience fee is concerned. And in tourism, we are going to grow leaps and bounds. From 745 crores, we have reached 890 crores. This time we are planning 1000 crores plus. We are planning the induction of a Maharaja's rake, whether that will be able to see light of the day in this financial year or next. Bharat Gaurav trains, we have proliferated beyond the country. In the Indian subcontinent, we have gone to Bharat, Nepal. We have done Bharat Bhutan, with Bhutan being managed by road. Then in Northeast Discovery, we have reached even Sairang, which is the sixth northeastern state to be connected by rail. Then we have gone to Bharat Sri Lanka. So that spirit of pilgrimage and spiritual, we are encompassing and enveloping the entire subcontinent. In tourism, we are also focusing on MICE, meetings, incentive, conference and exhibition, an area where we were not much into. But with that also, we have divided the entire country into 5 clusters, fixed service providers, whether it is various ministries, PSUs, agencies. So that is one business which will help tourism to grow. And with the coming up of the unified portal where IT and tourism will meet at crossroads, there will be an interface where 5 factors such as scalability, then UX, UI experience, the technology, then financials, and lastly the marketing regimen will help our e-ticketing customer base to use the tourism products of IRCTC. Other than this, in Rail Neer, we have got expansion of 2 plants, augmentation of 2 plants, that is Danapur and Ambanath. Ambanath from 2 lakh bottles per day to 3 lakh, and Danapur from 1 lakh bottles to 2 lakhs, and 4 new plants coming up, Prayagraj, Mysore, Ranchi and Bhagalpur. So with this, and in catering with anticipated around 15 to 20 new Vande Bharat sleeper trains coming up, we are expecting to maintain a EBITDA margin of 30% plus.
And Rahul sir, a lot of tech investments are happening and everybody is waiting, including the consumers, about the new website. What are the timelines for this upgradation?
As far as the new website, it has already been launched as far as the beta version is concerned on 15 July. Now around 80 to 85% utilities and interface has been developed on that website. Anytime, maybe 15 days down the line or in this quarter, we will be able to come up with the full-fledged version of the website, which speaks about no advertisements, no captchas, no pop-ups, and giving a seamless booking experience with faster ticket booking speeds to the user.
And Rahul sir, looking at the current revenue breakup, it is skewed towards the catering and even the internet tourism. How is this likely to grow going ahead? A lot of new plans have been announced by IRCTC also, but how does this revenue mix change?
Yeah, like in catering, you have seen that there has been a growth of around 34% itself as far as the revenue is concerned. In tourism also, in the profit margins, there has been a sizable growth of around 46%, in revenue around 14%. So with tourism, with new concepts coming up, catering and internet ticketing are more or less controlled, work in controlled environments. But in internet ticketing, like you saw in 24-25, we were 1200 crores, 800 crores for convenience fee and 400 crores for non-convenience fee, that is a non-fare revenue. In 25-26, we were 1500 crores with 1000 for convenience fee and 500 for non-convenience or non-fare revenue. So we will also focus more on the non-fare revenue and using our e-ticketing expertise, like in collaborating with various metros, as we've already done with DMRC, NSRTC, and being a e-ticketing expertise being utilized in like Char Dham, Kedarnath Yatra, with the Lakshadweep ticketing administration, Andaman Makruz, and all these areas where there is no component of railway, but we will utilize the expertise in providing services to them. So in this way, we are planning to grow.
Right. And what will be the numbers for this year, the growth numbers which we are targeting?
Growth, like I said, that we'll try to maintain the margins in catering 10 to 12%, Rail Neer and tourism around 14 to 15%, and IT around 7%, because convenience fee has more or less stagnated. With we are reaching around 90%. It is around 88.7%. But with all this, the exact figure I cannot give you, but we'll try to grow year on year, maintain a CAGR as we have been doing in the last 3 years.
And sir, speaking of Vande Bharat sleepers, as they are coming, what kind of growth we can expect across your verticals,
See, talking about cross traffic from other people diverting to railways, that is of course there, because railways, whenever we talk about a longer lead, then people try to shift over to railways. But with more Vande Bharat trains coming up, like 15 to 20 trains may come up in this year. There is a Vande Bharat sleeper, which have got a longer lead, more capacity, plus a passenger growth of around 8% plus augmentation in the existing trains. In this way, our two segments will benefit. One is the catering and second is the internet ticketing with the growth in trains and passengers.
Well, fair enough. You have given us an entire picture of how the growth looks like, and especially second quarter is something which we will be targeting for the company's website to come in. Beta version is already there. Thanks a lot, Rahul sir, for taking out your time and giving your views on the company and the industry as a whole. It's always a pleasure to have you with us at NDTV Profit. But let's do a revision of the KYC ratings, how things have panned out. Income statement has, largely been decent enough. The balance sheet cash flow, the way the business model is, very cash heavy business model, so that's not a problem. Problem little bit is coming on the tech investments, and that is eating up the margins and maybe the return ratios as well, and this is what the numbers we have given. So we try to make it as fair and square as possible in our analysis. Street cred, however, has been a big pain point. If you're an investor, long term, you haven't made money last 5 years, this stock has given negative returns, and also in the short term also there seems to be a bearish sentiment. Looking at the numbers, the Q1 numbers were on the weaker to mixed side, and the valuation makes it quite attractive, especially if you look at the 5-year average valuation that is at its lowest levels. To put that in perspective, 12-month forward P is 41 times. Analysts take both sides, it's divided, and the overall KYC rating after talking with the management also stays at around 5 out of it, largely in line to slightly positive. But yes, it's going to take some time once we start some more green shoots coming in this counter. But as of now, it is out of flavor in Dalal Street, be it platform stocks or even railway stocks, and now you add both of them up, but this is what you get. So for interesting stories like this and much more, stay tuned to NDTV Profit, and yes, keep watching KYC.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Presented by Canara Bank. Together we can.
Hello and
welcome. You're watching Your Money Matters, the Independence Day special. I'm Mahima Vachharjani, and today we're going to talk about two very, very interesting topics because, for 79 years, we've celebrated the freedom India fought for and ultimately won. But there's another kind of freedom that each of us is working towards every day, financial freedom. The freedom to handle an emergency without panic, the freedom to take a career break if you want to, the freedom to retire on your own terms, and perhaps most importantly, the freedom to make financial decisions because you want to, not because you have to. So this Independence Day, we're asking a very simple question. What should your financial freedom look like? Should it be equity, debt, gold, cash, international, etc.? What should the mix look like? And how do you build the right mix for yourself? And can you also achieve freedom from debt along the way? To help us build that roadmap, I'm now joined by Mohit Gang, who is the founder and CEO of Moneyfront, joining us now. Mohit, thank you so much for taking out the time and a very happy Independence Day to you and your family. I'll quickly come to you with regards to the first question. When we talk about financial freedom and when we talk about the right mix towards that, what should that particularly look like in your opinion?
Thank you so much, Mahima. Here's wishing you and all your viewers heartfelt wishes on the forthcoming Independence Day. So look, as we all know, freedom in true parlance is not just freedom from colonial rule, it is freedom from all kinds of ills and malice which are prevalent in the society. Similarly, freedom in a financial portfolio is not just about creating a corpus, it's a freedom from all kinds of fears which are prevalent in your mind, which are pertaining to your financial needs and requirements. It's about freeing yourself from clutches of your daily job, from clutches of thinking about your daily bread and butter. It's about living a very peaceful, satisfied life and doing what you really want to do and enjoying, obviously, the different perks which life has to provide to you. So when you're trying and creating a freedom portfolio for yourself, you have to look at what kind of time horizon do you have, what is the kind of risk which you want to embark upon, which will give you a peaceful sleep at night, what is the kind of corpus which you are looking forward to, and what is that which will satisfy your needs and wants both, right? So when you do that, you have to particularly look at your overall asset allocation. So it is about creating a mix of all assets in a basket which will work in tandem for you in different kind of market scenarios.
Got it. Mohit, so then what should that ideal allocation look like between equity, debt, gold, international investments, etc.? Because this is also very subjective to how much risk the investor can take or what specific goals are they eventually saving for. What would your advice be?
Again, look, Mahima, it's very difficult to give you a very ballpark and an answer which will fit everyone. Each one has own need and requirements, and obviously the risk tolerance and age and time and everything will play a big role out here. But I'll just give you a broad framework, and obviously one has to take it with a pinch of salt and change it as per their own individual circumstances. So look, I would first kind of categorize my overall pot into two distinct parts, which is strategic and tactical. So strategic is one part which I'm looking at from a very, very long-term perspective, which is for my wealth creation and retirement needs, which is almost like 80 to 90% of my corpus. And tactical is more for my more say aggressive pot of money, which I will play around, which I will fiddle around, which I will change very regularly, wherein I will try to capture some themes or some sectors or whatever I like, right? So the distinction could be 80-20 to my mind if you're an aggressive investor. If you're not, then it could be 90-10. 10 could be your tactical pot and 90 could be your strategic pot. Now comes the main part, which is how do you allocate your strategic part. Tactical, I said, is more timely in nature, and you have to keep changing that part. So on the strategic side, what one has to do is at least 50 to 60% of the strategic portfolio has to be in Indian equities. So let's assume you take around 50% in Indian equities. 20% has to be in international equities, Mahima. And one very strong reason for that is if you look at Sensex returns for last 3 years in USD terms, it's 0%. And I'm not joking on that. 3 years Sensex return has been 0% in USD terms. 10-year Sensex return in USD terms is, I think, 5 to 7 odd percent, right? So technically, unless you really diversify in global markets, you really diversify outside the realms of your own country, A, you're not hedging your currency, B, you're not getting the real potent of what the globe has to offer you in terms of the themes and the market capitalization and everything. So around 20% international allocation, 15% could be commodities, which is gold, silver, or any other commodities you would prefer, and 15% has to be debt. Now, this debt necessarily has to have a cash component of minimum 5%, which is for your emergency corpus, emergency requirements, any kind of urgent, sudden kind of a requirement. Now, all these allocations can tweak as per your profile and as per your age. International can go up to 25, can come down to 10. Indian equities can go up to 60, 65, can come down to 40, so on and so forth for commodities also and for debt also. Again, as I said, this is not a blanket rule. It is just a framework to kind of follow and have a good split and a good mix of all assets.
Super. Mohit, because you mentioned the cash aspect of it, right? I think if I'm not wrong, you said 5%. Wanted to get more sense from the perspective that generally what people say is that, building an emergency fund is the first step towards, your financial freedom. So that 5% cash and emergency fund, how would you put that into perspective?
Oh, absolutely. It's one and the same thing, Mahima. You might call it emergency corpus, you might call it your cash fund, or you might call it just your liquidity tap. The whole idea is that it has to be at a tap, which means as and when you want, you should be able to draw that out in a sweepable fixed deposit, whether you park it in a liquid or a money market fund, it's one and the same thing, or rather you keep it in cash, right? So even that 5% component, 2% of it could be pure cash in your savings current account, 2% could be a sweepable fixed deposit, and 1% could be your liquid fund or a money market or an arbitrage fund. The whole idea is that it should be available at your beck and call, and you should, in an urgent emergency pressing requirement, you should not be wanting for cash.
And what about gold? Because, you mentioned the allocation for gold, but for gold, are you looking at it from a perspective of wealth creator, an insurance, a hedge? How would you position gold in your portfolio from that perspective?
That's a very interesting question, Mahima. Look, honestly, I think age-old dictum says that gold was a hedge in your portfolio, but no longer are those principles valid in the modern context and in the current geopolitical framework. I would rather look at gold as everything. It's a safety net. It's a hedge against dollar. It's a hedge against your own currency. It's a hedge against inflation. It's also a returns generating asset for a long while now. And structurally, the way the globe is shaping, I think gold will not just continue to be a diversification asset, but also be a return generating asset. It's not an interest bearing asset, so it doesn't yield you anything, which is the sad part about gold. But I continue to believe that structurally, I think gold will continue to deliver returns over the next 5 to 10 year period. So one has to look at it as a part of overall asset allocation with a healthy mix, and not just gold, also silver and few other commodities.
Got it. And how often, Mohit, should you look at rebalancing this portfolio mix, right? Because it'll again vary and be very subjective from time to time, depending on your age, multiple factors like goals, etc., right? And plus, if there's any emergency per se that comes in unannounced, the mix might change. So how often should you look at rebalancing your portfolio?
I think you have to give a soft look on your portfolio every 6 months, which means you need to just have a look whether the asset allocation is in right frame, whether there has been a liquidity trigger event for you, is there any emergency requirement which is looming large on you, or any other financial needs, or something has changed in your overall time tenor, risk tolerance, absolutely. But every 1 year you have to sit very hard on it, have a proper look, kind of shuffle around if you need to between the assets, not just play around the assets within the asset classes, but shuffle between the asset classes, saying if you've gone overweight equity, you have to trim it down and get it right, and maybe go overweight debt, fixed income, or international if you've gone underweight on those classes, right? So I think every 1 year you need to have a hard look. Every 6 months you need to give a soft look in terms of whether you're going on the right path or not.
Got it. Now the other aspect of it, right? And I'm talking about debt and not debt funds, but from the perspective of credit card, personal loans, buy now, pay later, etc. And these are the three ones that immediately come to my mind that could kind of put an hindrance towards financial freedom. What should one know before kind of taking personal loans and buy now, pay later, and trying to not maximize the credit card spending? And what should be the right path towards achieving freedom when it comes to your debt as well?
Okay, look, pretty interesting. Honestly, I think personal loans are the worst forms of loan which anyone or everyone can take.
Yeah.
I think that's an absolutely no-go zone. It's a red alert area. If you're really forced to get to a personal loan, then I think honestly there's something wrong in the way you've structured your finances or your lifestyle. So you need to have a careful look at that. Personal loans are obviously high-cost, unsecured loans ranging from 12 to 18 odd % kind of a band, and they will actually drain you out financially because of the high interest rate thing. And similar are the cases with those zero EMI structures on your credit card loans, or perhaps buy now, pay later kind of things. Ideally, you should only purchase or take such things where you can pay upfront in cash, or at best maybe you can structure the requirement in a 1 or 2 month kind of a thing. If it's that low cost item, I'm not talking of a large residential house or a property purchase out here. But any other thing, either you have to postpone the purchase and do it only once you are ready financially to assume it, or B, it can't be something which is staggered over a 1 year, 2 year payment period and at a very high cost kind of a thing. Any loan which is sub 8% in today's context or up to 8%, I think still a doable loan. Anything between 8 to 10, I think has to be either an education loan or a medium liquidity kind of a plug-in loan, but anything above 10, I think that's a red zone. So one has to be extremely careful. Ideally should not go into that area.
Perfect. And Mohit, according to you, what is the ideal debt to income ratio that one should definitely keep, and what is the kind of debt that you should definitely repay as soon as possible?
Look, I think partially drawing from what I've said in my previous answer, if there is anything which is running above 10%, then you have to prepay it immediately. I think whatever best you can do to prepay that, you should. Anything between 8 to 10, it's an okay loan to keep, but not a great item to be having on your balance sheet. Again, preferred zone here is earlier prepayments. Anything below 8 actually adds to your leverage. It actually gives you a higher impetus in terms of using that money more productively and trying and building on some assets for yourself. So honestly, if you're getting something below that rate, then I think that's a good thing. From a debt to income perspective, up to 20% of your income, I think EMI is acceptable. Beyond 20%, I think it becomes a slightly more gray area depending on your own asset strength, your balance sheet strength, and your liabilities and dependents and everything. But up to 20%, I would say it's an admissible scenario.
All right. Okay. Mohit, just one last question, and this is from from a viewer perspective who is watching this. If you were to give one advice or one rule to become or move towards financial independence, what would that rule be for you?
Look, I think the whole objective, Mahima, is to sleep peacefully at night and not come under any kind of duress or financial constraint or this thing. What is the use of any kind of money or any kind of planning if it doesn't give you peaceful sleep at night? So my whole objective will be directed toward that. So if that requires me to avoid loans and debts, I will do that. If that requires me to partake 20 to 30% of my in-hand cash every month into some investment avenues, whether it be SIPs or stocks or whatever, I will do that. So I think the whole thesis starts from that principle. And to do that, one has to necessarily partake around 20 to 30% of income every year and keep it aside without even looking at it for a very long-term future creation. So I think that will definitely help in financial freedom for each and everyone. If one can do that religiously, systematically, with discipline, without fail, without breakages and leakages, I think definitely one will achieve financial freedom.
Got it. Mohit, thank you so much for taking out the time and putting that into perspective for us, and wishing you and everybody in your team a very happy Independence Day.
Thank you so much. Thank you. Wish you the same.
Thank you so much. All right, viewers, so that was an entire conversation around, freedom portfolio and what should an ideal financial freedom portfolio look like. But it's time to step into a very, very short break. On the other side, the conversation that we're going to have is going to be a very interesting one, because that is going to give you freedom from your salary and how you can achieve that FIRE number and what that number looks like. So do stay tuned in.
खैर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Welcome back. You're watching Your Money Matters, the Independence Day special. And, like I said, the next topic that we're going to talk about is going to be a very interesting one, because we often associate freedom with having more, right? A bigger salary, a bigger house, a bigger bank balance. But perhaps I think true financial freedom is actually about needing less. Why I'm saying this is because imagine this: if your salary stopped coming into your bank account tomorrow, how long could you continue living exactly the way you do today? A month, 6 months, a year? Or could your investments and other sources of income actually give you the freedom to walk away from that paycheck? So today, on the 79th Independence Day, we're looking at freedom from your salary, how much money you should really need to become financially independent, how to calculate your FIRE number, whether you need multiple income streams, and how close you really are to being able to say, I don't work because I have to. And to help us answer all of that, I'm now joined by Harsh Kumar, who's the CFA, Managing Partner at Zwest Financial Services, joining us now. Harsh, always a pleasure speaking with you. A very happy Independence Day to you, your family, and your entire team. I'll start by asking the biggest question that everybody would probably want to hear from you is that how much money does a person actually require to quit their jobs?
Hi, Mahima. Happy Independence Day to all the viewers. And while we have completed 79 years of our independence, I think on financial freedom front or financial independence, we are still a distance away. Now, coming to the numbers that you're looking at, on what should be a number one should look at before one can think of retiring or leaving the job. Now, there are different heuristics in the market. So you would have heard a lot of people talking about 25x rules, which essentially means that you have a portfolio which is worth 25 times your annual expense, and you can take care of your living requirements. So which means if your expenses are 20 lakhs in a year, the rule would suggest you should have a corpus of around 5 crores. But honestly, I would treat this 25x as a starting point and not a magic number, because the retirement corpus is extremely individual specific. So it depends on a lot of factors. Some of those factors being, what is your current age? What do you want to do when you retire? Would you have a flow of income or not? When do you want to retire? Do you have any financial dependence on you? What is the kind of lifestyle you have? What are your financial goals? Nature of your expenses. Do you have expenses which are linked to Indian rupee or expenses linked to different, currencies like USD or anything else? What is your asset allocation mix? What is the kind of risk profile you have? So these are a host of factors which should be taken into consideration before arriving at a number. So let me give you simple one or two examples for the sake of simplicity.
Sure.
Suppose there is someone who's 25 years and he wants to retire at 55. And for that individual, the spending is 1 lakh a month today. Now, if I assume 6% to be inflation, that 1 lakh becomes roughly around 5.5 to 6 lakhs a month by the time that individual retires. Now, if at that point of time, they have a portfolio which earns them 8% net of taxes every year, and I'm assuming 8%, believing that it would be a combination of 50% debt and 50% equity, and they want that corpus to support them for 30 years, then they would need roughly around 15 crore at retirement. And here I'm assuming that they're not going to leave anything for the next generation. Now, when you look at this number, 15 crore, it may look very intimidating when you hear it today, but that's the power of compounding and the time which can help us override this. Now, let's assume this person starts at 25, invest for 30 years, and if they invest around 35 to 36,000 a month initially, increase that investment by 5% every year, they can reach that 15 crore number, assuming a 11% annualized net of tax return. And I'm assuming 11% because generally we do 12% as a heuristic number, but there is a tax component which is also involved.
Correct.
Now, the important consideration here is that if you break it down into what you need to invest monthly, the numbers start looking very easily achievable rather than looking at a number like 15 crore or 20 crores or 30 crores. Let's look at another example. There is the same individual, 25 years, but he says that instead of 55, I want to retire at 45. Now, how many years do they have to contribute? 20 years. But how many years does that income need to support that individual? That is 40 years, because I'm assuming a life expectancy of 85. Now, instead of 36,000 per month, which that individual was supposed to save, this number jumps to 89,000. So by reducing your working age by 10 years, your monthly contribution increases by around 2.5 times. So I would say that, for the sake of simplicity, if you have 30 years to work and potentially 30 years of retirement, saving and investing around 25 to 30% of your take-home income consistently can put you in a very, very strong path. But the assumption is, I'm assuming that you don't have any financial dependencies, you have adequate health insurance when you retire, you don't have any expenses like buying a house, children education, marriage for the children, which has to be taken care of from this corpus. Because if you are wanting to cover those expenses, then the number would look very, very different.
And you're also assuming a life expectancy of 85 years, which by the way, I don't
Correct.
think is going to be that long. But having said that, perfect insights on that question. But the FIRE number that everybody keeps talking about, right? Because you said that the 25 times is just the start of it, right? So the FIRE number that everybody talks about, give us more perspective on that. Give us more perspective from the sense that what expenses should kind of be included while calculating that number, especially for people in India.
So, like I said that, this number is just a starting point, and one has to be very, very clear about what are the kind of expenses which one would involve in once that person retires. Because when you are 25, the expenses are very different. When you are 55 or 60, the expenses are very, very different. So you should be looking at where would you be retiring, which geography, what would be the inflation in that geography when you retire. If you're planning to have children, would they be based out of your home country or a different country, and would you have travel requirement? Once you retire, would you want club memberships and those kind of things? If not, health insurance, what are the kind of savings that you have to take care of your health expenses? So those are the few things which you need to calculate in mind before you look at the FIRE number. But what I would want to dwell upon is that what are the kind of mistakes that people make while they plan for FIRE, and both in terms of qualitative and quantitative. So first of all, I would say that people mistake it to be a financial problem. But honestly, if you ask me, it's not just a financial problem, it's a psychological transition to retirement, and which is not easier to handle. So when we are working more than salary, our workplace provides us a lot of things. It provides us structure, discipline, social interaction, purpose, identity. So when you are retiring, you don't get those kind of things. So you could reach financial independence, but you could have these psychological loneliness areas, which may keep, troubling you for a longer period of time. Having said that, if you are psychologically strong and if you feel that, this is for you, then some of the things which you should keep in mind, don't underestimate your expenses. Like I was saying that, people often calculate their current lifestyle and assume that this is what they would need when they retire. But healthcare, travel, leisure, discretionary expenses, they change meaningfully over 30 to 35 years or 40 years when you would retire. Second, a lot of people I have seen, they underestimate inflation. They would look at the recent inflation number of 3.5%, and they would assume that this inflation would continue for next 20 years. But believe me, that is not sustainable in an emerging economy like India, because A, we are net importer for a lot of commodities. B, we are still in a growth phase of our economy. So my sense is that when you are penciling in inflation, at least pencil in 6% kind of an inflation in your working. Third problem is a lot of people assume that the returns are linear. Like I was explaining that, 11% net of tax return. Now, when the returns come, they don't come in a linear fashion. There are times when your portfolio would have a drawdown of 30-40%. There are times when your portfolio gives a positive return of 30-40% in a year also. So someone who's retiring just before a COVID or a global financial crisis can have a very different experience from someone who's retiring after strong years of equity return. And fourth and the last point is that people focus a lot on accumulation, but they forget about withdrawal. Now, building a 5 crore portfolio is one part of the problem. Ensuring that 5 crore lasts 30, 35, 40 years is a completely different problem. So I think if one can take care of these areas, one can have a healthy fire life, so to say.
And a combination of SIP and SWP will be the right way to
Correct.
approach that, right? Harsh, the other aspect is that, we talked about how much money do you require at the end, your retirement period. But the fact that, what takes it, to build that 5 crore portfolio, just to give a number to it, is that, a lot of people today, especially the younger generation, wants to retire early. Right. So then do you think that the right way to approach towards it would be multiple income streams? How should one go about it? And, the very fancy word that, is being talked about every day in and day out of early retirement. How do you look at it from that perspective of, whether to build that wealth gradually, or should you have multiple income streams and just have one age of retirement and retire after that?
So I would say it's a very individual profile specific situation. So there are people who create multiple streams in their life and they are very happy with that situation. I mean, there have been examples worldwide, examples like Michael Jordan, where whatever he earned through basketball in his entire career in 13 seasons, he is earning much more than that from Nike every year, which is the second stream of income for him. But not all of us can have those kind of income. So when you say multiple streams of income, there are broadly 2 to 3 areas which come to my mind. One is, there are a lot of dual income household these days where both the spouses are working. So that is definitely a good situation to be in, because at the end of the day, if there are 2 inflows of income in a household, it definitely helps the cause. Second area where one can have multiple source of income is one through the salary and second through investment, which again is a very constructive way of looking at things, because your investments keep on working even if you have to take a break at some point of time. Third is what you mentioned is about side hustle. Now, side hustle can be extremely powerful provided one has the temperament to do that, because these days your active job or your full-time job can be very, very demanding for you. And on top of it, if you say that, I want to do a side hustle for, 5 hours a week or 6 hours a week, at times it can lead to your health issues as well. But if you can sustain it, it is really good because it has 2 advantages. One, you can increase your income, which can increase your ability to invest and build a retirement corpus, and you can retire early. The other advantage is that a side income can reduce the amount of money you actually need for your fire corpus. So giving you an example, suppose your annual expenses are 15 lakhs and your investment is generating 10 lakhs a year, but you have a side gig which is paying you 5 lakhs a year. Now you're already covered for your fire goal, despite your 10 lakhs being lower than the actual number of 15 lakhs. So financial independence, if you ask me, doesn't necessarily mean that you have a zero employment income. It means zero dependence on your active employer.
All right, Harsh, thank you so much for, putting that into perspective and taking out the time. And once again, a very happy Independence Day to you, your team and your entire family.
Thank you, my pleasure is mine. Happy Independence Day once again.
Thank you so much. So viewers, that was of course, how we try to decode freedom from your salary, freedom portfolio, what does it look like entirely. But with that, we're completely out of time on this edition of Your Money Matters, but do stay tuned in for more news and updates on the other side, and a very happy Independence Day to all of you.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Pankaj Tibrewal, founder and CIO of Ikigai Asset Manager, joining us this morning as we're kicking off Independence Day celebrations. Pankaj, thank you so much for joining us. And, you know, just because of the occasion that we are kicking off, and we know it's a day earlier, but we want to talk to our viewers when markets are on. Just want to get your sense of where we are, because the last 2 years, from a returns perspective, have really tested the faith of Indian investors.
Great to be on your Independence Day show. So if you look at absolutely you're correct, last 2 years, markets have seen consolidation. And this is not for the first time, Tamanna, that for a couple of years, markets have been very subdued on return part. I remember when I joined the markets in 99, 2000, you saw a tech bubble. And then for 3 years, almost 2000 to 2003, you could go back to home just as market closed. There was nothing to do. And 3 years were the most boring period. And then came the mother of all bull markets from 2003 to 8. So I think markets moves in cycles. I think it's good that there is the realization check that always, every year you can't compound at 15, 20%. And I think that's a good thing from a health of a market. Now, as far where we are standing today, I think we are at a very interesting point as far businesses are concerned in India. And let me give you some ground feedback. We have been interacting with companies across sectors, exporters, people who are leaders in the sector in the domestic market across home improvement, chemicals, financial services, and so on and so forth. I think for the first time, demand is not an issue to be talked about. The only challenge management teams, promoters are talking about is the supply chain. And I think that's a very, very interesting thing that companies are thinking very large in terms of overall growth. And obviously, these geopolitical issues keeps on coming from time to time. But when you look at the data points now, the earnings season has panned out quite nicely, contrary to what people expected when they were entering into that. Almost most of the companies have reported, and the top line growth for the first time in the last 12 quarters is more than 20%. And when you remove OMCs, the three of them, because they had a peculiar issue and there was the 18,000 crore drag on the profit side, the overall earnings growth is again in excess of 20%. And large cap, mid cap, small cap, all have delivered very strong numbers. And the one word, if you would like to sum up this earnings season, is the resilience of corporate India. And if you look at, for the first time, about 60% of the companies reported have reported more than 15% earnings. Normally, this number is between 45 to 55%. And the beat has been far more than the misses this time, and we have seen upgrades across the board. I think it's a very, very welcome step in a most challenging quarter. And I've always said that inflation, to a certain extent, is a friend of corporate India. When inflation comes, you are able to get pricing along with volumes, and that helps on the top line growth. And a lot of operating leverage kicks in when the top line growth moves above 15% for corporate India. And that's exactly what has happened this time around. And the outlook for second quarter also looks to be quite decent. Many companies have alluded that July, contrary to expectations, have been very strong. We met few steel companies, we met pipe companies, we met paint companies, tiles companies. Everybody is saying normally July is subdued, but this time July has started on a good note as far as volume growth is concerned across these sectors. So I think we are on a strong wicket as far as earnings are concerned. Now come to flow. Sorry, Tamanna, you want to say something?
No, I not wanting to interrupt your flow of thought, Pankaj, but just wanted to sort of summarize. So the takeaway that I'm getting is that there's not too much to worry. Green shoots are visible, signs of a possible turnaround are visible. Would this happen even in the event that FII inflows don't come back?
Yeah, so now I was just coming to the flow side. 6th of June, I think, is a very important date where government and RBI announced FCNR deposit scheme. And look at the FPI movement and the currency movement post 6th of June. You saw that after the ceasefire and there was some kind of a understanding, crude again went to $100. But this time, currency didn't react to it because you had great flows of FCNR starting to kick in. Till last week, we had almost received $40 billion in this scheme plus ECB combined. And the expectation is about $80 billion. And when you compare it with 2013, when rupee moved from 55 to 69, and government had announced this scheme, the large portion of the money came towards the fag end of the scheme. This time around, the money has come in front-ended. And $80 billion is not a small sum anyways. Also add to that the bond market inflows which have been happening post the 6th June announcement. And year to date, fiscal year to date, 60,000 crores has come on the bond inflow side. And in July, for the first time, FPIs turned buyers in the Indian markets because the AI trade started to unwind globally and in the region, as well as you saw that currency started to behave in a more stable manner. I think these are good signs that FPI will get confidence of, that earnings has started to pick up. Ground reality is not as bad as people feared out to be. Currency is stable, and with government policy actions in place, a lot of comfort will be driven by FPIs, and most of them are underweight India right now. India was a complete no few months back. Now, when we speak to most of our counterparts globally, I think there is a realization that India warrants a look. The only challenge they are facing is, for example, look at the US earnings season. So we are thinking that 22% growth is good compared to the expectation. US earnings this quarter has grown by 26% on that kind of a base. And this is the highest number of beats we have seen post GFC. And even if you remove the AI side, earnings growth has been quite strong. So US is showing a very strong resilience as far growth is concerned. So there's no reason for people to sell US markets and move to other markets because earnings growth is supporting them and US market is making new highs every time. So when you look at relatively, we are okay, not great. But when you look at in isolation, I think that's something which is interesting FPIs. And we believe that second half of this year, FPI flow will be positive, led by various factors we spoke about.
Yeah.
So it may be a contrary call, but our sense is the mood in FPI community is changing towards it, and they are looking to cover their underweights and at least move to neutral, if not over.
Very interesting, Pankaj. Good morning, Alex here. So a couple of questions here. I was looking at your note or your newsletter, and you were talking about the fact that you're turning more cautious on the US markets. And I guess to a certain extent that is related to what you were just describing on the earnings front, because people often describe the price to earnings multiples or the valuations and say, look, it's not challenging right now. But what they're not saying is that they're extrapolating the rate of growth that you're currently seeing far down the road as well. So who's to say whether that 30+% growth that some of these companies are displaying right now will continue in perpetuity? It won't. And so therefore, at some point, there will be a fall off a cliff. The question is, will that impact that will likely hit risk assets globally at some point or the other? Nobody can say when. Will that hit our shores as well? How much will the impact here be? And so therefore, how should your positioning, Pankaj, in Indian assets be? Should you get into assets or companies with margin of safety?
Brilliant question, Alex. I think very well articulated. Let me give our thoughts. Obviously, the earnings growth looks to be quite strong in the US market, but always market is forward-looking. And our sense is that when we look at the data points in the US markets, as far consumer, some of the data points on consumer side, like delinquency on credit cards, is going up through the roof. You're looking at the consumer sentiments, it's bad. Inflation is picking up. And especially on the debt side, we are sitting on a $40 trillion of debt as far as US is concerned. And with interest rates starting to move up, and you have seen a very sharp steepening of the yield curve, which means 10 minus 2 treasury yields have steepened quite considerably. And today we are at 4.7% as far 10-year is concerned, and 5.2% as far 30-year bond in US is concerned. So what US bond market is saying that we expect higher inflation to kick in and remain sustainably higher. Don't forget, 64 months in a row, market has been above the tolerance 2% Fed level on inflation, 64 months in a row. So at some point, market has started to price in about 25 to 30 basis point of rate increase by the end of this year by Fed again. And when you combine everything together, if 10 years starts to move towards 5% and above, I think there will be some risk of which will be started to play out. The second part is, in the previous regimes, we saw the hyperscalers, because they were generating cash, they could support a lot of buybacks and stuff like that. That is behind us, Alex. Just to give you numbers, first quarter calendar year 26, hyperscalers, 4 of them, generated $60 billion of free cash. Second quarter, which is just ending now, about that number came from $60 to $7 billion. Expectation is that this number will be negative $13 billion as they invest in the capex on the AI side. So these guys are moving from cash generation to cash consumption, and hence buybacks will be a thing of the past, which may not support the markets if any eventuality may do happen. So our belief is that valuations are very rich in US. Market cap to GDP in excess of 200%. AI trade is the only source of growth which is keeping it. Yes, consumers reasonably okay, but incremental data point on consumers are not giving us comfort. And we believe that US, which was the darling of the markets globally for the last 15 years, I think there is some, money has to be shifted out to the rest of the world. Most of the investors acknowledge that. Once earnings momentum starts to slow down, you will see that spiral effect starting to happen. So we are a bit cautious on US market. Last year was the first year where global markets did extremely well compared to US markets. Emerging markets, Korea, Taiwan, China, all did extremely well. Even in calendar year 26, most other emerging markets and global markets are doing better than US markets. So there's some movement of dollar assets from US to non-US markets, and that we believe is a longer term theme to watch out for. Plus the dollar weakness, one has to be very, very clear that dollar is in a depreciating mode over longer periods of time. So this is broadly what we covered in our newsletter, and also the unwinding of the AI trade. AI is real, but what the financial market is pricing in, we are a little bit worried about that. And hence we need to make sure that we are a little cautious. From a portfolio perspective, having in markets for 25 years, Alex, I can only say that you can prepare for the rainy days.
Yeah.
You don't know when the rain will come. And hence, from a portfolio construction perspective, we believe that you have to be in companies which are led by strong governance, strong management, strong promoters. We have a competitive edge. Don't compromise in these circumstances on balance sheet and cash flows. Don't get carried away only by EPS growth.
Yeah.
I think that will be disaster, because when earnings slow down, we see that finally cash flow and balance sheets come to the fore.
Yeah.
So if you can maintain those discipline and have a portfolio diversification and focus a lot on portfolio construction, I think you should be fine. And one data point which I would like to share with all of you, that 15 years back, our correlation coefficient with US markets was 0.7. So if there is a fall in the US market, 70% of that used to hit us.
Yeah.
That number over years has come down to 0.3.
Okay.
So I think we are definitely there, but the correlation has come down drastically. So that much impact may not be there as the world may see on the risk of, but obviously we will be part if something big happens globally, either in Japan or in US.
Yeah,
so we have to watch out for those.
But you might not see a deep gash that does not get bought into, particularly because of the domestic flows that have been so robust, right, Pankaj? And we've seen that play out
multiple times in the recent past as well. I'm talking about recent past being last 5 or 6 years. But having said that, I do want to ask about the implications of what your expectation on the dollar will be, which is that you expect that the dollar will depreciate over the longer term, and that usually traditionally has meant good news for commodities, commodities, and therefore people that are pulling things from the ground. And for more reasons than one, this is something that is going to be a focus for the next several years. From that perspective, do you think that there are opportunities here in India, and are you focusing on commodity players?
Absolutely. I think over the last 12 to 15 months, we have been very, very constructive on the entire metal and mining space. And there are a couple of reasons, Alex, to kind of think about. One, I think geopolitics is there to stay for a longer period, and that means countries will become more insecure and inward looking as far resources are concerned. And some of the other bottlenecks will keep, coming into the global markets. You saw first Russia, Ukraine, then you saw Iran war. You know what next? And hence, there will be a lot of problems on the resource side, which will keep most of the commodity prices elevated. The second thing, as countries become more and more inward, you would see that they will not share their resources as far metals and minings with other parts of the world. And the new technologies which are coming in, whether it be EV, whether it be the entire grid modernization, you're talking about solar, you're talking about data centers. Everything has a very high consumption of either copper, aluminum, or rare earths. And the countries producing are very limited. So our sense is that as the consumption starts to move up, and there is a demand supply gap, because last 20 years this sector has seen huge underinvestment as far new mine openings are concerned, and the current mine output is depleting at a very fast rate in many of the metals and minerals we spoke about. So we believe that we are there from a medium outlook perspective. The world for the last 15 years saw softer assets being repriced much higher. That means software, new age companies, and stuff like that. I think whenever inflation comes, hard assets do extremely well. And that's our medium term outlook, that whenever you get opportunities, like the last 2, 3, 4 months, where few of them, sectoral leaders corrected significantly, we use that as an opportunity to increase that exposure, because hard assets, I think, should be the order of the day over the next few years, whether it be manufacturing, metals and mining, even precious metals, Alex. You look at whenever crude has hit $100, historically in the past, gold and silver, after a gap of 5-6 months, have done extremely well.
You've made an interesting point when it comes to small cap stocks. Does that mean it's best to now look at stock picking versus investing in the index, number one? And I will come to the next question because we're running slightly short of time. But how are you looking at it?
So obviously, I have been a big proponent for last many, many years for active stock picking. I think India is a fertile market. You have many businesses which are scaling to a very next level. With rupee depreciation against yuan and dollar, I think that has provided a new lever of growth for many experts. You don't trust me or what we are saying. Just go and do a ground check. Speak to the textile guy. I was meeting a textile company yesterday, one of the largest in the country and in the world. And he says that the order book is completely sold out, which he has not seen for years. Then I went and met a pipe company, normally catering to domestic market, PVC pipe company. And they are saying that there's huge reverse inquiries coming from at least for the PVC pipe exports from India. Then we met an auto ancillary company, and they are saying that many companies out of Europe will go out of business from a supply perspective to OEMs. And OEMs recognize that because of energy issues, succession issues, and so on. And they are looking to diversify. If we demonstrate capability and size and delivery commitments, there is no dearth of order. When did we start hearing such comments from Indian entrepreneurs? So I think export is underappreciated right now as far as Indian corporates are concerned. And a large part of 101 to the 500 market cap ranking, a lot of these companies will become very large in size over the next 3-5 years. The only thing as investors we need to know is that there will be volatility, there will be challenges intermittently. But if you are patient enough and identify the right managements, right businesses, trust me, active managements will always surprise you compared to index investing. India is still offering you a lot of opportunities outside the top 100 companies as market cap. These companies are getting discovered by the markets, coverage by the sell side. And if you can do your groundwork, scuttlebutt, and along with your team, go and do deep dive, I think opportunity is always there. And we are very, very positive that over the next 3-5 years, you will find many jewels which will scale up in size across auto anchs, precision engineering, aerospace, defense, chemicals, home improvement, and so on and so forth. So I think we remain constructive on the overall mid and small cap space. There will be volatility. Please don't get me wrong. Last 2 years has seen consolidation. Last 2 years, we saw sell-off also in many names. They have not come back also. So idea is stock picking. Bottom-up basis, go and select good managements, good balance sheet, cash flows, good TAM in the business. You will be rewarded. And that's been our style for the last 2 decades plus. No. And we continue to believe India is a fertile market of doing that stock picking.
Absolute fertile market, interesting sectors, Pankaj, that you've mentioned. But let's be specific in the last one. India 2047, the Independence Day theme. That one idea that you want to give investors that will actually give them returns and they will remember in this next decade.
One idea is, as Mr. Warren Buffett said, that we were lucky to born in US. We are lucky to be born at this point of time in India. So trust in the country, trust in the overall system, and buy India. There will be ups and downs, but historical last 25 years has shown that 2-3 markets in the world, including India, US, and one of the other markets, have given you much better returns. There will be ups and downs, but have a trust. So if you want one recommendation, one tip, buy India.
Thank you, Pankaj, for that. Buy India. That's the recommendation coming in from there. And I think he's coming from the point of view of believe in the domestic growth story, forget your export-oriented sectors to some extent.
Okay, more so from the perspective of the global stage and what happens there.
Absolutely.
Versus,
you are, all of that stays status quo, right?
Yeah, absolutely. And I think the point that Pankaj made on the correlation with the US market is also significant because at some point, something's got to give.
Yeah. So the point that demand is not a problem.
Yeah.
Maybe supply is for companies is also important.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV.
Presented by Canara Bank. Together we can.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies. He's a bureaucrat who is being feted all across, not just in Mumbai and Maharashtra, but I think across the country. And some would say, well, he's just doing his job. But that's where it becomes unusual. That doing your job in this manner for the safety of food that we all consume is so unusual. Some are calling him the Nayak of Indian bureaucracy right now. We have in our studios today Tukaram Munde. He is, of course, the commissioner of the FDA. And while he's built a career around tough decisions and administrative reforms, what he's been doing in the last few weeks has shaken up things, whether it's in the food and beverages industry, whether it's within companies that are delivering food online to you. They are all now on tenterhooks when Mr. Munde comes in. Mr. Tukaram Munde, thank you so much for joining us in our studios at NDTV Profit. It's truly an honor for our entire team.
Pleasure is mine.
And what you're doing is completely inspirational.
Thank you. I don't think it's really inspirational or I'm doing some extraordinary work. I believe that I'm just trying to do what is expected of my role. Nothing less than that, nothing more than that. And if everybody of us performs our roles that is expected of, I think we can be a really great society.
थोड़ा आप थोड़ा humble हो रहे हैं. ये मतलब humble diplomatic वाला.
I don't think so. Some of my friends and many of my critics called me arrogant.
Really?
Yeah. I mean, you may have a look at it and you would find on television also sometimes this question has been asked multiple times. Okay, you are called arrogant, you don't listen. So this kind of allegations have been there almost throughout my life, but they are bits and pieces, but they are. So it's neither about humbleness. My philosophy is very, very clear right from the beginning, and not in this post alone. Because we have assigned a particular role whenever we are posted in a particular capacity. Are we honest and transparent about what we are expected to do and what we have done? That's how I look at it. And if it succeeds, nothing like it. If it doesn't, at least I have tried.
If you, of course, have this kind of an impact on people that serve the greater public, then that can only be positive, right, from the perspective of the public. But equally on the other side, there is an argument to be made about proportionality. And this has been made even in the court of law,
right,
to say that if you have a sword, should you use a sword to kill a mosquito? Do you think that there is proportionality?
Absolutely. We go as per the proportionality only, and I can give the data to back it up. I can give the provisions of the act to convince you and the courts. There is a law in place. Do you follow the law? Yes, we do. Do you follow the processes? Yes, we do. Now the question about it has come up in the context of whether forthwith suspension should be there or not. Why not give notices first and then act upon? This is generally the context in which it has been played out. Now, just for the information of viewers and to the viewers, we act in food sector as per Food Safety and Standards Authority of India Act 2006. There is a section called 32, under which we, the FSOs and other officers, take action. There is subsection 3, proviso is there, very clearly written. In the public health, whenever there is a likelihood of health hazard by the food which is going to be sold or consumed, the designated officer has the right to suspend license forthwith. This is the wording in the act. So the act provision is there, particular context is there. Are we following that? Now, if you look at the actions we have taken in last 2 months or time, more than 3,100 inspections have been done during this time, of which 165 odd licenses were suspended forthwith out of 3,100, and more than 750 were establishment or given improvement notices. Now, if it doesn't sound proportionate, I don't know what the definition of proportionate would be.
So should we just rewind a little bit over here? और थोड़ा सा इसको ना we take it out of the legal
absolutely.
definitions etc. because this is very personal to people, right?
Absolutely.
This is the food that they eat. How did this start? You got posted over here. How मतलब ये restaurants पर पहले नजर कैसे पड़ी? क्योंकि जो legend है कि ये है, बताइए कि गलत है कि आप एक रेस्टोरेंट में गए, बहुत ही अपर एंड रेस्टोरेंट था, आपने पनीर का एक डिश मंगाया, उसमें टेस्ट थोड़ा ऑफ लगा और अगले दिन आपके आदमी आए वहाँ रेट डालने. ये सही है कि गलत? पहले ये बताइए.
Context is correct, but the facts are not correct.
Okay, so you did go to a restaurant?
Yeah, we did. See, when I joined, it was not the first action, by the way, but it came into highlight it as a first measure. Before that, there were actions also, because I had just joined. Some things were happening. I was taking review. I was looking at how to go about it. I was trying to understand the role of this sector, commissioner's role, and my officers, how do they go, because the background in which I was posted is always been saying that FDA lacks this, that, something like that was there. And when I joined, then as usual, I decided, yes, let us have a look at it. What is the role? What are the officers doing? What is the situation? As we called in your professional terms, as-is study, a sort of a thing, we did it. And then, of course, to be studied, the vision, the mission. Of course, department has a vision, but for the next few months, year time, what we should do. So we decided upon, and while I was doing, the actions were going around, particularly prohibited items, actions were going. The first actions we started doing was about prohibited items. There was some occasion my friends called saying that, okay, let us go for a dinner. I said, yeah, it's not good because I'm now food safety commissioner and I have this habit of wherever I go, I just look around. And if I'm going to restaurant, I'm going to look around. And likelihood is that it will not pass the test. So it's better.
पहले ही बता
Yeah, पहले ही बताया. It's not something it afterthought. No, it's really the great one. I did not ask the name. I said, just think it over again. Because something happens tomorrow, they will blame you, not me. I told them, no, you come over. I have told the concern there, you have to be careful. No, fine enough. I went around 8:39 in the after office hours. As soon as I entered, the first norm was violated because the license, which is supposed to be on the prominent place, it was not displayed. So I did not say anything over there. And I went, and then second, because they were alerted, so they, what type of water would you have? Again, second mistake, you should not have asked me what type of water, because water is compulsory, you have to give potable water. If you demand only, then you have to provide bottled water. That is the second. Then my friend realized, he said, you just go away and bring normal water to that. And then there was interaction, of course, and my friend ordered, he is a Jain, so he ordered paneer. I said, don't order paneer. Definitely it is not going to be the passing the taste of my eye, because I am not going to eat anyway that one. So उनको पूछा उन्होंने कि yes, is it a real paneer or is analog or what it is? It's real paneer. I again asked, is it really real paneer? जैसे आया मतलब मुझे दे दो, just I checked it. It was definitely not a real paneer which I thought of.
अच्छा, ये आँखों से आपको पता चल जाता है?
Yes, there is way of looking at it, how hardness, how soft it is. There is some technical, by and large, it's not very scientific, but by and large you can make it out. I asked him not to eat, so he did not eat. So the friend who called me, he could not eat because I had told him not to eat. And then of course other things I told them, and I told the management over there, कि you are violating these laws, please rectify it. I did not do any damn thing over there. After 24 hours, I asked my officers to go and check. So they had very well 24 hours to comply with that. And of course checking took place, and rest is history.
So अभी आपको एंट्री मिलती है कि नहीं रेस्टोरेंट्स में? Because if a booking goes with the name of Mr. Munde,
so
do they tell you? नहीं, हम आज बंद है या full है रेस्टोरेंट?
So मैं तो mostly जाता नहीं हूँ, and somehow it happened that my son's birthday just happened few days back. So he wanted to go to a restaurant with his friends, and he booked online. वहाँ नाम देखते ही कहाँ से ढूंढ लिया उन्होंने, किसी को पूछ लिया, मुंडे साहब मेरे यहाँ है क्या? I have not booked यार. Some friend called me, I have not booked, so there is no question. नहीं यहाँ पे ऐसा है. Then I realized, oh, it's not me, it's my son, I believe. He might have booked it for friends. So this alertness is definitely there. The moment they, I think, saw Munde name, then they said that it is there.
Yeah.
But I personally do not generally go. And there is, because of now the publicity you are making, media is making, social media is making, it becomes a little awkward for me to go anywhere. And I think it is much more awkward for the establishments.
No, but to add to this, काफी बार you have a complaint portal as well, right? Consumers might put in a complaint, and जैसे ही complaint जाता है, there are institutions which are taking action well before the officers even reach. कि बंद कर दिया, बोला under renovation है या कुछ. Do you think that's a good sign?
Absolutely. If what I want is compliance. All of us want is basically safe food, standard food. The compliance we are doing that, there's nothing. I mean, it doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Reason being, we are doing this because there is a non-compliance. And if they are suo moto doing at their own, that's what we exactly expect, that they should do at their own. They should serve only safe and standard food to the public. They should follow the norms. So even if we go, we should not find anything. That's what the wish is. Rather, I would be the happiest person that FDA does not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
I want to add a question. Now, your approach has been extremely popular on social media. How are you dealing with the response? You are now sort of a celebrity, right? That is my question number one. Question number two is, with this popularity or with this, because this is clearly an issue which is very important and it has resonated, right? So how does, what is the role that you see social media can play in trying to improve this situation where restaurants are not following norms?
Right. As far as your first question is concerned regarding celebrity, see, it's not about celebrity. Again, I mean, this troops will come, you will be lauded by media, the next day you will criticize. That is all part of the job. Being a public servant, we are all under scrutiny, and we should be, because we are public servants. So I really don't feel that I am a celebrity, that is first thing. Rather, whatever is being done in social media, otherwise in interpersonal relations, in a way it is good because discussion has started on food sector. Not about me, it's not about me. It's about food sector. It's about food safety, it's about food standards. That's a good thing which has happened, that as a society, as a nation, as a state, as a city, if you are discussing the relevant issue, I think that is really good thing. Now what comes out of it is much more important, because we may discuss n number of days, n number of issues, but are we really discussing the solutions, or are we really just diagnosing the problem? I mean, diagnosis is definitely needed. Without diagnosis, you cannot have prognosis, that's absolutely correct. But stopping at diagnosis will not help. I think right now what is happening is, social media, there is a huge discussion. Media is a discussion. Media has brought this issue to the fore. I think that's also important. But stopping at diagnosis will not help us. So we have to look at the ways and means by which we can address the issue at hand. And the issue at hand is definitely food safety and standards. Because if we really look at the disease burden of India, which has transformed inversely since independence, NCDs has occupying a majority, almost 2/3, 65 to 70% of disease burden. Now, one of the major constituents is the food habits which are having here, and that needs to undergo drastic change. To do that, this discourse is very important, and to further the cause in safety and standards, we need to be aware of what are the standards, we need to know about the safety measures, and we need to know these food business operators work in that context and in that manner, along with, of course, regulatory authority needs to do its job, and consumer need to be very vigilant and aware of this. So in that context, the discussion is really good. Now we may compare with US, we may compare with European countries, Chinese, whatever we can do. We have our own cultural ethos also. So we have to take that into account.